Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Let's take a look at how Japanese assets are tracking at the moment. The yen in particular, range-bound after the BOJ tightened on Friday as expected. The timing of the next increase, though, well, it's anybody's guess. The Finance Minister Satsuki Katayama, meanwhile, signalling concern over rapid one-sided FX movements. So the yen remaining in tight focus. Nikkei futures look like they're setting up for a pretty good day. All right, let's get to our next guest now. Shuntaro Takeuchi is portfolio manager at Matthews. Let's get a bit more of an outlook on his expectations for Japanese assets in 2026. So, Shantara, I want to start with the level of the yen there. I mean, it is in that tight range. How long do you think this is going to continue, and what will be a catalyst for it breaking out in either direction?
Japanese yen to continue to be range-bound, despite U.S. Fed cutting rates by 75 basis points and BOJ raising by 50 basis points in 2025. The currency stayed mainly in range this year. Japan's real interest rate still remaining in negative territory could be one reason, but moreover, I think real demand of U.S. dollar buying and selling Japanese yen has been increasing compared to 5 to 10 years ago, with flows such as continued energy imports, also U.S. dollar-based cloud service payments such as Amazon Web Services, and also Japanese retail investors buying U.S. equities via NISA accounts. These three flow factors, inbound tourism spending is not enough to offset these flows.
So how much tightening do you think is priced in Japanese equities now? Because, Governor Ueda was somewhat equivocal when he was asked what the neutral rate is. So what's the market telling us?
So the current consensus, we're looking for one more rate hike this year, which has already happened, and also for next year, one more. But I think the consensus has moved to two more rate hike next year. However, listening to BOJ Kuroda's comment, he did not actually comment on the pace of the rate hike. So I would say the current consensus is hovering somewhere between 1 and 2 more rate hikes in 2026.
Yeah, we also didn't get too much clarity around the neutral rate as well. Where do you think that actually sits? And just talk to us about the challenges of determining it.
Yeah, sure. I think that's a very good question because, Japan has been, Japan's inflation has been non-existent for close to 30 years. So this is like a completely new battleground for the whole country. And at the end of the day, where we see in the real interest rate remains to be key, and especially for BOJ rate decisions going forward. In terms of the macro factors, real wage growth being positive will be extremely important for the domestic economy, and that's where we focus on.
What happens then for JGB yields as well, and what's the implication for that? Where do they go from here, do you think?
So 10-year JGB yields rose about 2% after the rate hike. We view this as a rather normal reaction towards normalization of the economy. Whether Prime Minister Takeuchi's fiscal expansionary measures could uplift the domestic economy remains to be seen. But pro-growth policies are generally positive.
All right.
Shintaro, I think we're just having a couple of audio issues there, so we'll leave that there. But that was Shintaro Takeuchi there, portfolio manager at Matthews Asia. And shifting now to what has been a record year for deals involving Japanese companies, because transaction volume is approaching $350 billion as December draws to a close. Next year, it's poised to get even busier. Let's get the M&A outlook with Bloomberg senior editor Reed Stevenson. So, yeah, Reed, just talk us through that. Why are we expecting it to get even busier next year?
Well, I mean, this has been a years-long trend where essentially, improved corporate governance and a lot of cash and value trapped on Japanese corporate balance sheets has really sort of, bubbled up to a point where we're seeing this massive kind of increase in deals. Indeed, as you said, for this year, we saw quite a few. There was Fujisoft. There was the pursuit of Seven & I by Couche-Tard of Canada. And then, of course, the take-private proposal for Toyota Industries, which is probably going to be the biggest ever take-private deal. That was sort of announced, and then we're going to see that get going in the new year. So, yeah, indeed, as you say, we're just going to see a lot more action here.
Reed, you mentioned the Seven & I deal. Of course, that sort of hit the rocks. And I mean, we do see this happen from time to time in Japan, where deals just don't make it for whatever reason. Do you see governance reforms as changing that?
Well, I think it's a situation of, a few steps forward and a couple back. In a way, the Seven & I deal was interesting because although it didn't actually happen, the company itself made a lot of changes. It changed leadership. It essentially broke into parts and really sort of accelerated its own sort of need or effort to essentially unlock value for investors and shareholders. And so in that sense, you can say it's working. A way in which maybe it's not working is a lot, you have to keep your eye on a lot of these sort of take-private deals, especially between parent-child companies, where essentially you have the controlling entity buying the company or taking the company back into the fold on the cheap at the expense of minority shareholders. The NTT Data deal there could be seen that way. And of course, we're seeing a lot of noise around Toyota and Toyota Industries, or I should say the Toyota Group and Toyota Industries. Elliott Asset Management has stepped in to say, look, the price needs, well, they're not saying the price needs to be higher, but they say the price is too low and it doesn't justify the actual intrinsic value of the company or even the assets on its balance sheet.
Into next year then, are there any specific geographies where you think you might see acquisitions by Japanese companies, or are there specific sectors you're going to be focusing on?
Yeah, one really early thing we're seeing is within the finance space, actually. You have Mitsubishi going after an Indian counterpart. So it'll be interesting to see how the banks essentially, apart from being involved in deals and financing them, they themselves becoming the target of or the target for deals.
All right, Bloomberg senior editor Reed Stevenson there. Now you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. Subscribers can also watch live on the terminal using the TV Go function. We have more ahead on the Asia trade. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Amazon Robotics says it's preparing its workforce for how tech and AI will impact hiring and career paths. Its chief technologist told Bloomberg the company is already using physical AI and robotics at scale to help employees.
When we think about robotics, and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated through our other manipulation systems. Or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense. So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is going to allow us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means.
The point here is to make money, right?
That you will have to hire
sky high stacks
in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use it every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
We play a game. That was Amazon Robotics Chief Technologist Ty Brady speaking with Bloomberg's Carol Massar and taking a look at the market action as well, because we are just about an hour into trading now for the ASX 200, Nikkei futures, and also Seoul about to come online. But tell you what, Paul, I think it really feels like the holiday mode is already well and truly set in Australia.
Oh, absolutely, and it's always the case at this time of year. I don't know if our viewers can make out the harbour bridge behind us, but there's a lot less traffic on it. There's hardly anyone on the train. The streets are quiet. I mean, we're done on Wednesday afternoon, so it's safe to say a chunk of the country already at the beach. But we're seeing some pretty decent gains here, and some of the real outperformers, silver miners, having another moment.
Yeah, we've seen silver actually hitting a fresh record. So again, we just continue to see that real performance in the metal space across the board. But also we're setting up, maybe we get that Santa Claus rally if you take the action on the Wall Street session at the end of last week into consideration. More ahead. This is Bloomberg.
have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is the Asia trade. We're counting down to Asia's major market opens this morning. We're actually setting up for a day in the green. At least that's what futures was indicating to us. But it does track what we had in the Wall Street session on Friday, because we saw another advance for the S&P 500. So back-to-back gains actually erased all of the losses we'd seen earlier in the week. And we saw U.S. stocks, particularly the tech sector, moving higher. Again, you're seeing that reflected. NASDAQ futures continuing just to show some gains there. But the tech sector is still going to be the one to track. And also the issue, the longer-term issue, is really that outlook around the expectations for rates, because we are expected to bring global tightening in 2026. How much of that has actually been priced into equities at this stage? But let's take a look at the Japan Open today, because you're 1.9% again indicated in futures. We will be watching that tech sector. We're also continuing to track the financials one too, given that you had the BOJ decision on Friday and you saw Governor Ueda signaling, yes, some differences or some challenges of determining where the neutral rate should actually sit, but still indicating that the path is toward further tightening, and maybe not getting too much on the cadence of that, but we were just speaking earlier in the last hour, but the expectation maybe for 2 more hikes next year as well. So you've got, again, as I said, the Nikkei 225, 1.1% to the upside today. That's the story there. The Japanese yen, again, you're continuing to see it hovering, so past the 155 mark, but around 157.61. Let's change now, take a look at Korea, because we actually just had the Korea trade data coming out for the first 20 days of December, and we actually are continuing to see exports rising here, so a gain of 6.8% on the year. The trade surplus as well coming in at 3.185 or 1.815 billion US dollars. Imports as well fractionally high, but of course that big focus is on the export figures, given that Korea is sort of seen as a global bellwether on this front, and we have seen these export figures just jumping around a little bit over the past few months. It's a slight drop from the November figures as well, but that is the state of play there for the Kospi. Again, you're seeing some gains here across the board, and reflecting that story around tech on the US session on Friday, where we saw Nvidia, for instance, gaining, Oracle up more than 6%. Joining us now is Vasu Menon. He's the Managing Director for Investment Strategy, OCBC, to talk more about really the market action and where we go from here. So Vasu, I think one of the key questions for investors, big questions, is are we setting up for the Santa Claus rally?
Well, you know, that's a hard one, because we've had a very strong rally already so far this year. Global equities up something like 19%, if I'm not mistaken. US equities 16%, and if you look at Asia and Europe, And China, for example, in US dollar terms, they've gone up more than 25% each. So we've had a very strong rally. I wouldn't be surprised if we close the year on a slightly higher note. But I think 2026 is going to be a challenging year, but we remain positive on the outlook for 2026. We think that at the end of 2026, markets will be higher than what they are at the end of 2025. But the next couple of weeks, as you said, the Santa Claus rally, that's a hard one to predict, but I wouldn't be surprised if the markets actually end the year on a higher note because, we've had quite a number of tailwinds helping the markets to actually scale new heights in recent days and weeks.
Yeah, let's talk about the state of play this year, because we've got a chart actually where we can see just the sheer underperformance of US equities versus their global peers in 2025. We don't see that too often, I think really 3 times in the last decade or so. Do you see also that being replicated next year, or do you think that you can actually see US stocks starting to outpace those from elsewhere?
Well, I wouldn't be surprised if US stocks continue to underperform other regions. My own sense is that, fund managers, global fund managers appear to be more receptive to opportunities in Asia ex-Japan, in Europe. And I think that is also borne out in the valuation data, and I was looking at the valuation data on Bloomberg terminals before I came for the show. And if you look at the MSCI USA index or the S&P 500 index, which measures the US stock market in terms of forward PE ratio, it's trading close to 2 times standard deviation over a 10-year history. In comparison, if you look at Asia ex-Japan, you look at Europe, for example, they're trading below 1 standard deviation. So in terms of valuations, you see better value in other regions outside the US. So I wouldn't be surprised if the US stock market continues to underperform in 2026 as money rotates out of the US into other regions.
Yeah, which... You mentioned some of those challenges that stocks might have next year. Which are the big ones that you're looking at, do you think?
Well, one of the key challenges I think we'll be looking out for in 2026 would be how Trump deals with the Federal Reserve and Fed independence. I think that's going to come to the forefront as Jerome Powell steps down in May and as Lisa Cook's, trial in the Supreme Court, the outcome will actually also determine market perception about Fed independence. So Fed independence is going to be quite critical, we think, in 2026. And how Trump deals with it, I think, will be quite important. And of course, the US midterm elections at the end of next year, in the run-up to it, you could see geopolitical risks go up, a greater US-China tension. That could also, figure on how the markets perform. But overall, we think there are more tailwinds than headwinds in 2026. And the market should still end the year on a higher note despite volatility, as you saw in 2025. 2025 is a very volatile year, but still, the markets are going to end the year on a pretty strong note. I think you're going to see the same story play out in 2026. There'll be challenges and headwinds, as I mentioned, but I think the markets will be able to overcome them and still close on a higher note at the end of next year.
Do you think markets have fully appreciated as well that risk that we at least see maybe the end of easing cycles, even the start of tightening cycles once again? I mean, that's a factor we've been talking about, maybe being a little bit underappreciated by investors right now.
Well, I think, yes, it is starting to come to the forefront to some extent. The markets are starting to worry about the Bank of Canada, the RBA, the ECB even, possibly hiking rates. But I think it's still a bit premature. It looks like the Fed will probably continue to cut interest rates in 2026 at least one time. And I think the Fed is a key part of the whole global equation. And the Fed, we think, is going to continue easing. I don't think the Fed is going to tighten anytime soon. And other central banks like the ECB, for example, they have signaled, but I don't think they're ready to tighten anytime yet. I think that could be a story that could come into play in the second half of 2026. But even then, I don't think there's a lot of latitude for central banks to tighten in a big way because there are global headwinds as far as economic growth is concerned. So there could be some signals from central banks, but whether they're ready to move and derail the global economic recovery and financial market recovery, I'm not sure if they're ready to do that right now. But in any case, I think it's more a story for the latter half of 2026.
What's your expectation around China as well for next year? We've seen again those issues or concerns around the economic weakness coming to the forefront for equities once again, but at the same time, obviously the dominant theme for this year has been that tech and innovation-led story. And you see the CSI 300, for instance, up around 40% so far, or on an annualized basis. But still, what's your expectation for where we go for next year?
Well, we are positive on China. China is one of our stronger conviction calls. We are positive on Asia ex Japan. And within Asia ex Japan, China is one of our strong conviction calls. And as you said, the Chinese economy is not doing fantastically well. In 2025, that was a story as well. The economy faced a great deal of challenges. But look at the stock market. It's done exceptionally well. The MSCI China index is up 30% year to date. So it's outperformed the US in a big way, almost double the performance of the US stock market in terms of the MSCI USA index. So we think that China will continue to perform in 2026 as well. The potential for fiscal stimulus, monetary stimulus, valuations are not expensive, and Chinese households have a huge amount of savings. More than $20 trillion in savings. That's got to find a home, and that could, and not just that. I think global fund managers are also starting to put more money into China, and so put all that together, it means that the Chinese stock market has more upside. Again, it will not be a straight line climb; it'll be volatile, but we think that there's more upside.
Vasu, really great to have you with us, and best wishes for the end of 2025, the start of 2026 as well. But that was Vasu Menon there, Managing Director for Investment Strategy at OCBC. And let's also take a look at one of the big movers so far in the Tokyo session, because we're watching NIDEG very closely. This is the world's largest maker of mini motors. They actually put out a statement on Friday, late in the afternoon, but talking about the founder who's going to be stepping down from his position as chairman of the board. There's been the discovery of accounting issues that have damaged the reputation of the company. So Nagamori is going to be remaining involved as chairman emeritus and says he's going to be entrusting all of the future management to the CEO, who's also going to be taking his position as chairman. So the company has been dealing with a growing number of suspected cases of improper accounting that's triggered filing delays, credit downgrades, and as well the risk of delisting. So you can see investors obviously appreciating that the chairman is resigning from the board amid these accounting issues. More ahead. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
We're taking a look at some of the commodities this morning, and we actually are seeing gains here across the board. So you've got silver, for instance, hitting a fresh record high. Rate cut bets, geopolitical woes as well are playing into that complex. But spot gold as well, you're seeing some gains here within $40 of an all-time high for that, having risen, of course, for the last couple of weeks. Brent crude, WTI, also we're going to be tracking those because we are just monitoring really the, again, geopolitical story, but seeing an advance there on this story that what Bloomberg's been told, which is the US pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. Let's bring in Stephen Sapczynski, who leads our Asia energy coverage. And Stephen, of course, you know, we don't see a lot of output from Venezuela, at least in a global scale, but what are the market implications you're watching from this?
You know, I think, yeah, they produce less than 1% of global exports. But at the same time, I mean, I think this is oil that is used for certain refineries in China. You will see, I think there is a close look at what is going to happen now with the rest of those flows, right? Are we going to see, you know, you have a third tanker in pursuit. Will now we see a total collapse of production? Will we see a total reduction in exports? I think that's going to be what the market is going to look at very closely. Also, over the last week and a half, is this it for the Trump administration? Or are they going to go more? I mean, it really does seem like they're ratcheting up pressure. And then there's regime change, right? Exports are falling likely from now, going to be lower. But if there is regime change, you know, I think the next thing, now we're looking further out, you know, there's a lot of possibilities on what happens. But if there is a successful regime change, what does that mean for oil production in Venezuela in the future? Because there is a lot of oil, there's a lot of potential to export that oil. They have the infrastructure in place. They just need the investment, and maybe they need a different leader that's friendlier with the United States.
Yeah, so what are the sort of different signals that you're watching for that? Because as you said, it's that pressure on production from Venezuela. I mean, what can we see, for instance, in terms of storage tanks that might tell us exactly how far we're off any sort of production disruptions?
Well, I mean, I think, you know, just looking further out, we can look at the storage tanks. You can look at how many ships are being sent out. But I think right now, when you just look at the ship tracking data, when you look at the satellite data, if we start to see a significant reduction or a large U-turn in the vessels that are going to Venezuela, that's going to be, I think, what the market is looking at. If the ships aren't going to Venezuela to pick up the oil, if there is a reduction, it doesn't matter what's in the storage tanks. They're going to have to reduce their output. And then also, I mean, that's just one piece of a much larger, complex geopolitical issue. What else does the Trump administration do to put pressure on the country, to put pressure on its industries that will also reduce output from their fields?
You know, it's an interesting story as well we've got out this morning, looking at the link of Chevron to this and how they're also steering quite a risky path through Venezuela. What can you tell us on this front?
Well, I mean, so Chevron, I think there was a lot of interest as to whether or not Chevron would be able to continue their output. But it does seem that the Trump administration has allowed this. We've had the Chevron CEO say that they see assurances that they can continue producing. And what's interesting is, you know, they've stuck there the whole time. They've been there for a very long time. And they do see a pretty rosy outlook for the country in terms of their oil production there. So I think that is part of the dichotomy, and I think part of the interest is there is the sanctioned aspect of Venezuela crude, and then there's the non-sanctioned aspect of it as well, and those non-sanctioned barrels will continue to flow. Now, of course, going back to the tankers and the seizures, what's so interesting is that when the Trump administration boarded the Century's vessel over the weekend, that was a non-sanctioned vessel. Yes, they were dealing with sanctioned crude, but they weren't sanctioned itself. So while Chevron does seem to have the go-ahead, there is this weird gray area where there are vessels that aren't sanctioned that are going there that are going to have to figure out whether or not they can continue, whether or not that they can take the risk of the Trump administration because they don't have a set go-ahead. So between Chevron, the sanctioned vessels, as well as those in the middle, there's quite a lot of different aspects going on for Venezuela. But at the moment, it does seem that the Trump administration is taking a very hardline view on all ships going there.
Stephen, really great insights there. That was Stephen Stapczynski, who leads our Asia energy coverage. And of course, something else that factors into commodity prices certainly is the ongoing talks led by the US around efforts to end Russia's invasion of Ukraine. And to that point, the US Special Envoy Steve Witkoff says the Trump administration officials have held productive meetings with counterparts from Kyiv and also Brussels in Florida. So let's get more on this now and bring in Bloomberg's Michael Heath, who joins us. So yeah, what do we learn out of these negotiations or these talks, and what's the latest exactly?
Yeah, I mean, the both sides, Ukrainian side and the US side, said that these talks were constructive. And I guess in a sense, it's still sort of this discussion of what would a US security guarantee involve for Ukraine in terms of peace, in terms of a ceasefire, and from Ukraine's side, what it could rely on in terms of ensuring that if there was a ceasefire, that Russia wouldn't wait a period, rebuild its own forces and come back again, which is what everyone's been worried about. There seems to still be this issue in the offing of President Trump wanting Ukraine to sort of bow to Russia's maximalist demands for territory, which, they're basically wanting territory that they haven't actually managed to conquer. And the main issue there is there's this sort of whole fortified group of cities there on Ukraine's eastern boundary, and Russia taking that over would basically open Ukraine up to further risks of an invasion later down the track or resumption of the war. So those same sort of issues seem to be in the air. Meanwhile, the US also was running a separate track. They've been talking to Russia as well. But it basically comes down to that same issue. Is Russia prepared to budge in the negotiations? And it's just unclear at the moment. Particularly, we saw, just going back a couple of days, that Ukraine's opted not to touch, Europe's opted not to touch these Russian reserves. They're going to give Ukraine a loan. And so from the Russian perspective, it's just like, the longer they hold on, the more likely the West fractures or it becomes tired of this issue or whatever, and Ukraine's left to its own devices. That's the big risk. And in fairness to the Trump administration, they're trying not to let that happen, but Russia's not giving a lot. So really, as usual, we're still waiting to see, will Russia come to the party at all?
Yeah, it's really fascinating because I think, of course, one of their objectives is to drive a wedge between the EU and the States, and they seem to be doing a pretty good job of that right now, essentially. So what's the next point that we're watching for, and are there any more talks that are scheduled, or what happens? Because, again, to your point, Russia's not really budging here.
No, and one of the things where the US, or President Trump at least, sort of came on board with Russia was this sort of call that Ukraine should have elections, because the President Zelensky's term has actually expired, but under their constitution, they're under martial law. They can't hold it. And so, President Zelensky said, look, we're happy to have elections. You guys provide the security, which, you obviously can't have it in a war zone. Ukraine's stretched to the max as it is. So, yeah, look, again, it's the question, I guess, is President Trump sort of comes back and forth in terms of his pressure. He's been putting a lot on Ukraine. Does he revert back and go for another round of sanctions on Russia to really say, look, if you guys are going to move, you're going to pay for it? And that could, in fact, move the dial there. But he's held off of that. He's held off of it all year, despite threatening and despite some less severe sanctions. But that's what we'd be looking for, is that he turns the heat back on to Russia and says, look, if you're not going to move, you're really going to have trouble financing your war from here on, which is oil again.
Yeah, it's interesting, because I think if you were to look at where he's put the most pressure on who over the course of this year, it seems to be more on Kyiv than it's been on Moscow.
Yeah, I mean, sort of blaming the victim kind of thing. It's kind of hard to reconcile, but yes, that's how it's been working.
All right, Mike, of course, we'll be tracking this into next year, it seems. Well, that was Bloomberg's Michael Heath there. And the top global headlines that we're following as well. China's criticised the latest US weapons sale to Taiwan, saying it raises the chance of conflict between the two superpowers. The US last week approved arms sales worth up to $11 billion, including missiles, drones and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a power keg. The US has launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapons site. The Defense Secretary, Pete Hegseth, posted on X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying the F-16 fighter jets launched Friday night, bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. We'll have more ahead on the Asia trade. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. The Deputy Attorney General, that's Todd Blanche, says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Well, the latest release of the so-called Epstein files includes thousands of pages of pictures, phone records and notes from investigations, but many of the documents are heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasize that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're 30 minutes into the trading session for Japan and Seoul this morning, and really there's a clear outperformer, and that's tech so far in the session because it is leading the Asian benchmark higher. Some of the names that are standing out to us, well, you can see SoftBank, for instance, is 7% in the green. Again, it tracks what we had with Oracle, for instance, on Friday. Lots of whipsaw trading for Oracle, but ultimately ended the week higher. And that, of course, these two companies are very much paired together when it comes to the build-out of the Stargate project in the US. Also tracking names like Tokyo Electron, Advantes that are in the green, but it is that story around chips as well, the race for dominance between the US, of course, the leader, but China very much catching up or appearing possibly to be catching up. And to that note, China's More Threads has introduced a new generation of chips that are aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's bring in our China correspondent, Min Min Lo, who's in Hong Kong this morning. And Min Min, yeah, so we got the lineup on over the weekend, but tell us about the new products and just make that comparison as well. How far away from NVIDIA's latest generation are they?
Yeah, so the company unveiled two new generations of chips. One is the Lushan and the other is the Huashan. So Huashan is meant for AI inferencing and training, and the CEO says that this is better than the NVIDIA Hopper series chips, including the H100 and H200, and it's closely catching up with the Blackwell series chips, which is the latest generation currently available from NVIDIA. So this is pretty significant. It means that if China can already produce chips that are better than the H200, that eliminates any reason for Chinese companies to buy from NVIDIA, because NVIDIA just got approval from the Trump administration to sell the H200 chips to China. We know the Chinese government was, according to sources, assessing demand from Chinese chip makers and asking them to explain why they need to buy a U.S. chip as opposed to a homegrown one. And Mothreads has said that it's ready to go into mass production for these chips as soon as next year. It also unveiled a new graphics rendering chip called Lushan, and a new GPU architecture that it says can link together as many as 100,000 chips in a supercomputing cluster as well, that will have at least 50% higher computing power.
And then just on the point of that competition between the US and China, to that end, as you're getting calls from a US lawmaker that dozens of Chinese firms should be listed as Chinese military-linked firms. What can you tell us about that?
Yeah, so U.S. lawmakers from the House Select Committee on China are calling the Pentagon to add another 19 Chinese firms to this Pentagon list that would indicate that these companies are linked to the Chinese military. And it's a very wide-ranging list covering companies from Hua Hong, the foundry, to DeepSeek, to Unity, a robotics company, to Wuxi, which is a pharma company. So they come from many different industries. And it's a signal of that continuing tension or competition between the two sides, because the Pentagon renews this list every year, and one of the few companies, for example, Hesai, was one of those that sued the Pentagon and claimed that they had no ties to the Chinese military, and yet, yes, they successfully got themselves delisted, but they were immediately relisted after that, and it shows you the difficulty in challenging some of these U.S. lawmakers and these labels placed by the Pentagon. It doesn't hold any immediate ban for these companies, but it is a signal to other companies to in some ways warn them against the risk of working with these companies on the list. So something to keep an eye on if the Pentagon do actually agree to those requests.
Yeah, and I think the last update we get on that was in January of last year, so perhaps just in another few weeks we'll see whether, of course, they have proceeded. But that was China correspondent, rather, Min Lo there in Hong Kong, and to the extent that really it also forces that push for self-reliancy, self-sufficiency in China, these escalating geopolitical tensions between Beijing and Washington. We are seeing one of the effects of that is also the chip-making startups in China looking to tap the equity markets as well, because we've seen a rush really to the IPO market. Many of these well-known names like Mothreads, for instance, MetaX have listed recently. But are we looking at the start of a trend now? Could be also what's in the offing. Let's bring in our Asia equities reporter, Sang-Mi Cha, who joins us again today. And Sang-Mi, tell us what kind of names are standing out, and what are we expecting for 2026 on this front?
Well, we're really seeing that insatiable demand in onshore retails when it comes to jumping into those listings and these companies' listings, and a lot of them want to take a little bit of and participate in these IPOs, basically. And we see that MetaX definitely has driven that first rally, followed by more threads. But of course, we have some names, and the traders who I've talked to are saying that they wouldn't be surprised to see that DeepSeek moment in chips as early as next year. So we're seeing that technological gap really just narrowing with the U.S. And so the companies that we're looking at, of course, is Byron Technology, that is, and also the companies like Iluvatar, CoreX. These are the domestic chip makers that are actually the closest to NVIDIA's technology. They make GPUs, and we have Kunlun, the chip arm of Baidu. And so Baidu was actually the worst performer among HS Tech, but because of this news, it has actually gained and rebounded quite significantly after the Hong Kong IPO news. And of course, we have other companies in the memory space like Yangtze Memory and the YXMT, and these are the companies that make DRAMs and NAND, which was for a long time dominated by Samsung and SK Hynix. And we have other companies like Giga Device and Montage. These are the companies that are already listed in an onshore stock market, but they're going for the Hong Kong listings. And we see that their share prices are quite, the valuation is just a lot cheaper. So there's more room to grow when it comes to Hong Kong listings. And so they are more in the realm of those picks and shovels when it comes to the whole AI supply chain spectrum.
Yeah, we're certainly starting to learn more parts of the semiconductor ecosystem in China, but let's also shift to really, in comparison to the tech and all the positivity we've seen around the tech sector, the consumer sector has been standing out for perhaps the wrong reasons. But what can you tell us about that losing streak we're seeing in Chinese consumer stocks?
That's right. Onshore consumer staples index has fallen this year, and it's about 4% decline. So that might not sound that little, but compared to CSI 300, which has rallied about 16%, that is a stock divergence. So it's kind of like the whole Chinese market is rallying, but then the companies that are selling to these average Chinese households are actually going the other way. And we see that in companies like liquor stocks like Mao Tai and Wulianghe, which all have fallen significantly. And these were the proxies to Chinese wealth and economy. And we see that structural change happening in this space. So analysts are saying that this is not a cyclical slowdown, but they're saying that this could continue for a couple of years. And we see that in BYD and Media Group. So these are automakers or appliances makers. So in the past, it was more of, isolated from all these macro events, but these persistent deflation and the property prices was just so low has been prompting the households to tighten their belt.
Chinese equities make up a large part of the EM index overall. And we are seeing a lot of bets, really, and a greater performance, really, for EM versus even the States. Do you see that extending into next year, and what are you hearing from traders?
Yes, absolutely. We had a BofA head of EM fixed income who said EM bears have gone extinct. So this just speaks for itself. It's not just stocks. The EM stocks have outperformed the U.S. stocks for the first time since 2017. But it's really not just stocks. We've seen the profits from the carry trade strategies have been the best. They have logged the best profits in 15 years. And we are seeing so many just corners of opportunities in the EM space. And all of these reasons point to the weaker dollar and, of course, the explosive AI investment. EM is exactly the place where all these components, metals are in terms of AI trades. And also just because a lot of the portfolios have to shy away and shift from the U.S. assets. And investors are saying this is something that will continue for multiple years. And JP Morgan is saying that they project about $50 billion of inflows into EM funds next year.
Sang-Mi, thanks very much for joining us this morning. That was our Asia equities reporter, Sang-Mi Cha in Hong Kong. And another standout market in the EM space has been what we've seen in Indian equities as well this year, and a lot of traders continuing to bet, and investors as well, on that performance into 2026. But let's talk about really the trade story, given that this is one of the major economies that still hasn't signed any deal with Washington so far. And on that, the Indian government has pushed through far-reaching policy reforms in the final parliamentary session of the year. Again, that's as the Prime Minister Narendra Modi is looking to boost the economy in the face of those trade headwinds. Our economy reporter, Swati Pandey, joins us now for more. So, Swati, was this a surprise, or were we expecting some sort of support for the economy going into next year?
In one sense, it is a surprise because Narendra Modi started the year on a very sluggish note. And if we look at data, this was the most productive winter session of Parliament in 5 years. They have passed 8 bills. So it really just shows that momentum, that escalation in reforms that they really need to do, given, as you mentioned, that they have not signed a trade deal with the US yet. India has got 50% tariff, which is among the highest in the world. The rupee is the worst performing Asian currency this year. It has stumbled a lot against the US dollar. So not a lot is going in India's favor, especially if given the dream that Narendra Modi has of making India a developed economy in just 2 decades from now. So they really need to unlock this long-term capital and boost economic growth.
Do you think those reforms will manage to do that? One of the areas, for instance, they're targeting is semiconductors. Is this going to really be the type of policies that investors want to see to then, again, put their money into the market?
Look, so far the feedback has been quite positive. We have already seen investments come into India from Japan in the financial services sector. We are already seeing, for example, in the nuclear sector, Asia's second richest man, Gautam Adani. His Adani Group is in talks with one of India's states to build a nuclear reactor. So those conversations have already started. Reform usually takes time, and the impact of those, unlocking of capital and all of that, it takes time in an economy, especially as fragmented and big as India. So we are not going to see anything happen overnight. But yes, it is a much needed step that was needed in the right direction as well.
Still not without its detractors, though. We did see some criticism being levelled on a number of different fronts. What can you tell us?
Yes, so one of the criticisms is that some of these legislations were really rushed. For example, they have tried to unify the labor laws and codify into 4 codes. Now, that was a thing that a lot of people had been asking for, businesses had been asking for, but there are questions around whether it really serves the people, right? The other thing is that India is having problems with signing a trade deal, doing negotiations with other countries, and like some states which are very manufacturing dependent and export reliant have criticized the government for not doing enough to support their businesses or their industries, and maybe not do enough to basically extend that hand and get those negotiations going and actually sign the trade deal. So there are a lot of issues still, and but I feel like these these steps that the government has taken were much needed, and if it really does unlock that long-term capital and boosts economic growth, economists have boosted their expectations as well. So it's roughly 7% annual growth expectation now. It's still below the 10% the 8% plus that is needed to make India a developed economy, but 7% is not bad either. So yes, there will be criticism, but it's a step in the right direction.
Yeah, not many economies growing at more than 7%. That was our economy reporter there, Swati Pandey, joining us, and we'll have more ahead on the Asia trade. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, the 7-Eleven operator, that 7&I, is pressing its US convenience store business to deliver a faster turnaround as the retailer seeks a public listing of the unit. Let's get more with our Bloomberg senior editor, Reed Stevenson, who joins us again now from Tokyo. And Reed, so seems like this is resting on 4 key initiatives. Can you outline those for us and also some of the challenges that the company might face in executing those?
Yeah, indeed. I think the top one there is going to be private label. If you walk into a 7-Eleven store here in Japan, you'll see, many of the things, especially the food, is made by or at least branded as 7-Eleven products. In the U.S., that's still sort of, it's always been around, but it's a work in progress. So that's the key thing. The other is the supply chain, larger format stores, and other initiatives. And all of this is really, meant to sort of go toward convincing investors and potentially new investors in a publicly listed U.S. Listing for 7-Eleven that, the company still has a lot of runway to grow.
Yeah, so it's new CEO Stephen Darkus who took that position about 6 months ago. He's saying that they want to actually get not just an IPO on schedule, but they also want to maximize shareholder value. So how exactly do they go about doing that, and do these initiatives put them in that right direction, do you think?
Yeah, the U.S. is really just one part of a much larger sort of shift happening within the company. A lot of that was sparked, over the past year and a half by the unsolicited approach by Couche-Tard of Canada, the operator of Circle K stores, with a 4.7 trillion yen buyout offer. And essentially, although that never consummated in any deal, that accelerated efforts within 7&I to really try and restructure itself to deliver value to shareholders. Effectively, the company kind of split off and sold to Bain Capital its grocery and specialty store business. There's new leadership in place. And then, of course, this U.S. turnaround. And, the U.S. for 7&I, the Japanese parent, although it essentially, took over the original 7-Eleven concept, has always been sort of a tricky kind of business for them. Essentially, over the past 5 years, they aim for growth through acquisitions. So Speedway is part of the group. They bought that from Marathon Petroleum, or Marathon Corp, a few years ago for $21 billion. They also have Sunoco gas stations in the network. And so it's got scale, but what it really needs to do is to sort of squeeze out profit. And that's really tough in a U.S. environment where inflation is biting into people's wallets.
Yeah, exactly. I mean, we saw that reflected in the latest consumer sentiment survey from the University of Michigan, just that impact on the hip pocket. But what about the timing of this IPO, and how much money do you think they'd be looking to raise?
Yeah, in terms of the amount, the company hasn't really publicly given a figure. They've given a rough time frame of the second half of 2026, but when we spoke with Stephen Dacus. He said, look, this is not going to happen according to a schedule. It's going to happen when they have essentially a value proposition for investors. And so we're just going to have to see how all of that plays out in the next year.
Reid, great to have you with us again. That was our Bloomberg senior editor, Reid Stevenson, there. And let's just check on markets as well, because we are about 50 minutes into the trading session so far for Tokyo this morning. We're actually seeing stocks that are moving higher here today. They're being supported by a couple of different factors. Firstly, you've got that Japanese yen weakness. We had the interest rate hike, of course, from the BOJ on Friday. We also had Governor Ueda signaling there's going to be further tightening ahead. And so we did see the Japanese yen tracking back to that 157 mark. We're also having a look at the bond space, because we have seen fluctuations there, but the two-year yield rising to this level here. It's the first time we've seen it at that point since 1997. So again, that historic tightening campaign from the BOJ. The Nikkei 225, again, benefiting from that Japanese weakness or yen weakness, but also that rebound that we saw in tech stocks in the US to end the week. The likes of Oracle, for instance, jumping 6% in the US session on Friday. We're seeing SoftBank, again, one of the big gainers so far, in fact, contributing the most to the gains in the topics so far today. We'll have more ahead. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Taking a look at European stocks futures this morning, we're actually also seeing President Trump there. You can take a look at that imagery, but essentially the top corporate stories that we're tracking, because the pharmaceutical sector very much the focus. So that was him there speaking with some pharma executives. But in the equity space, we've actually seen European stocks closing at a fresh record high on Friday. So wrapping up the final full trading week of the year with optimism around further policy easing, resilient growth as well in the US. So utilities, energy, healthcare stocks among the big gainers in the session on Friday. But again, let's stick with that pharma space and the healthcare space and shift back to the top stories that we're tracking today, because President Trump, we just saw that vision there, but announcing deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK came in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar: Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Let's take a look at what we're setting up, or how we're setting up for the mainland session. Hong Kong, mainland China, opening in about 35 minutes from now. But it's interesting to note that strength we've seen in the box office and the cinema scene in China against what has been weakness across the broader consumer category, because Chinese consumer stocks, for instance, looking at their longest ever stretch of annual underperformance with the sluggish economy, policy uncertainty, where we do have a lot of optimism, continues to be in that tech space. And we were talking earlier about the amount of Chinese chip makers that are possibly looking to IPO and tap the equity markets into 2026. Again, going into the open today for Taiwan, you're seeing upside their position for a 1.5% gain, but names like Tokyo Electron, for instance, SoftBank, are gaining so far in the Tokyo session. That's it from this session or this show rather, episode of the Asia trade. As we look ahead to the market opens, also taking a look at what's happening in the commodities space, you're seeing gold and silver in particular hitting a fresh record high. More ahead. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
It is 9 a.m. in Shanghai, in Shenzhen, and here in Hong Kong. You're watching The China Show. I'm David Ingles. Good morning to all of you. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Stocks across the Asia-Pacific, as you can see, on the up, tracking gains we had on Wall Street on Friday of hopes growing for a year-end Santa Claus rally. Now, China's Moore Threads unveiling a new generation chip lineup set to challenge AI developers' dependence on NVIDIA. Also ahead, the U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And coming up as well this hour, an exclusive with the co-CEO of Chinese biotech firm Jacob Biopharma on its global license deal with AstraZeneca and, of course, opportunities they see in the healthcare sector. Welcome to the program. We're straight into breaking news, straight out of bed. We're looking at loan prime rates unchanged. We had the 1 and you have the 5-year unkept, well, kept unchanged. Okay, we're mixing up words, so things get better from here. We're looking at, of course, these are the prime lending rates from Chinese borrowers. We're looking at the 1 year at 3% and the 5-year being kept at 3.5%. They have kept, of course, those prime rates unchanged for several months now. The take, though, as we look ahead to next year, is that the broader conversation is you are getting into this phase of the year where typically you should be getting a bump up seasonally. You are getting the opposite in terms of softer numbers coming through. And the sort of big context takeaway coming through out of Bloomberg Economics, they put this out, by the way, before we did get this breaking news, is that do expect, I'm just going to paraphrase here, do expect monetary easing going into 2026. In fact, just putting a number to that, flip the page, please. I think they're looking at rate cut next year, as guiding rates lower. I think 10 to 15 basis points is the general take going into 2026. All that is to say, as we wrap up this year where really monetary policy has provided somewhat of a decent tailwind, that certainly goes away from a macro perspective next year. We are wrapping up the year, which has been fantastic for EM specifically, with gains, as you can see, across the board. Nikkei's up 2%. Taiwan coming in line 1.5%. Korea's bottom of your screens coming up too. S&P's up for a third day, 0.25% on S&P, 6,900 as far as that is concerned. Euro, you have the euro yen. You have the U.S. 2-year yield coming through as well. Really on the back of what conversations around. You have a rate cut into next year. The question is, there's a 2 rate cut being priced into markets going into 2026. Is there upside or downside risk to that number? JGB yields, of course, we topped the 2% handle in case you missed that, of course, last week. We had Tokyo CPI coming through on Friday, so just keep that in mind as far as the agenda is concerned. Right, commodities very much in focus. Up arrow story last I checked. Brent, West Texas, and specifically silver. There we go, 1.3%. This is on the back of geopolitical tensions as it pertains to, well, for one, you had airstrikes over the weekend in Syria, major one at that. And number 2 is we're still continuing to follow the story in Venezuela, of course, or off Venezuela. Specifically, the U.S. is pursuing a third oil tanker, really to put the pressures there. Flip the page, please, on the government as far as financing, or the major source of financing is concerned. And it's looking like we are going to get some gains going into the Monday Open today. And yeah, if you missed it, yes, we are at 703. We were at 706 early last week. So, a 7 handle by the end of this year won't be too much of a hurdle to jump. 184 right now on the Chinese 10-year yield. Let's please have a look at the agenda today. So we obviously sectors to watch. You have platform names. We'll talk about that in a moment. Semiconductors. You had this big announcement, of course, out of Moore Threads on the weekend. Apart from that, in terms of data, you have inflation coming through out of Hong Kong. That's number 1 to watch. And what else is on deck? Do we have it up? 3 trading debuts today here in Hong Kong. And of course, the broader conversation is around, yes, we have been struggling to break out of a price range on the benchmark itself, but vol has been falling consistently over the last couple of weeks or so. The Hang Seng Vol Index now at the lowest level in about 4.5 years. Okay, that's the agenda for today. We'll table that for now and have a look at a big story today we're tracking in China. You have more threads, of course, at massive listing, massive gains. The first week of trade, unveiling or introducing this new generation of chips aimed at reducing developers' dependence on hardware coming out of NVIDIA. Min Lo, our China correspondent, has the story for us in terms of that announcement. And what are the new products they're talking about here, Min Min?
Yeah, so they announced 2 new generations of chips and a new GPU architecture. So the chips are named Lushan and Huashan. They're named after Chinese mountains.
Yep.
The Huashan chips are for AI inferencing, and the company CEO said that it is better than NVIDIA's Hopper series chips like the H100 and H200, and it's closely catching up with the Blackwell series chips, which are the most advanced chips currently available. So this is pretty significant because if Chinese companies can already make chips that are better than the H200, that eliminates the need for them to buy from NVIDIA, even though NVIDIA just got approval to sell those chips to China, right? And we know the Chinese government was, according to sources, assessing demand from Chinese companies and asking them to justify why they have to buy from NVIDIA. So this is certainly an important development. They also announced the Lushan chips, which are for graphics processing, saying that's 15 times better performance for gaming, and also a new GPU architecture that can link together at least 100,000 chips. And they're saying that that increases computation power by at least 50% and is 10 times more energy efficient as well.
Okay. We have a couple more stories to get to here. So let's have a look at this Chinese military list that some Republican lawmakers have put forward. There are some not so new names, but there's some new names involved there. So what do we know about that story?
Yeah, so the Pentagon renews this list every year, and the House Select Committee on China is calling for at least 19 Chinese companies to be listed as Chinese military companies, and they include the likes of DeepSeek, they include Unitree, which is a robotics company, Wuxi as well, a pharma company, so pretty wide-ranging from different sectors, and it shows you that ongoing competition between U.S. and China. I believe Hesai was one of the few companies that had sued the Pentagon, claiming that they have no ties with the U.S. military, and they were successfully delisted, but then they were relisted immediately. And it shows you how difficult it is to challenge these labels by the Pentagon. It does not result in any immediate ban for these Chinese companies, but it is a signal to foreign companies, to U.S. companies, a warning sign to them not to work with these companies and the risk associated with working with a Chinese military company. So certainly something that could wasn't ties between the two sides.
Okay, final story, and sort of corner you into the third story here. Platform companies. So we know the story around anti-involution, price competition, what have you, and this is really the latest one on the weekend. What do we know about efforts to maybe backstop some of the competition as far as the price?
Yes, so the Chinese regulator had issued a new set of rules for platform companies, asking them not to impose unnecessary restrictions on merchants to govern their pricing behavior. So, for example, they're not allowed to tell a merchant that, okay, you can't sell your products for cheaper on a competitive platform, and they can't punish these merchants by delisting their products or making their products less visible on their platforms or raising their fees. At the same time, the rules also require the platform companies to clearly state the promotions without exaggeration. So all of these are meant to protect consumers and also smaller sellers that rely on these platform companies, and the purpose really is to stabilize their margins, ensure fair competition, to ensure sustainable growth for the entire sector. Min, thank you so much. Min Lo, with just a list really of the areas of the market to watch as we go into the open today. That is just to say, of course, despite what you have is really a banner year. We have Chinese equities really coming back into the spotlight. We started with AI there, but some question marks around some parts of this equity market, platforms, price competition. Let's put everything together for you and where we stand going into 2026. Joining us now is Yan Wang, Chief EM and China Strategist at Alpine Macro, joining us here. Good morning from the Asia Pacific, sir. Thank you for joining us. I know, and let me just make reference to your note about 6 weeks ago, first or second week of November, where you did observe, of course, China is hot again. You've been on this whirlwind global tour speaking to investors, including, I should mention, of course, here, Hong Kong, China, and Singapore. What's your overall sense of what people are looking for in the China story going into next year?
I think the biggest takeaway is that global investors are becoming more interested in China again. In 2023 and 2024, China was deemed as uninvestable. Back then, the economy was bad, geopolitical situation was bad, the market was not really performing, so people were not really interested in China at all. But in my recent trips, in my meetings with clients, with investors, I can get the sense that investors are becoming more interested on China. China is back on the radar. And I think this is a very important change because people are still very, very underweight China. So if they are interested in China raising exposure from a very low starting point, I think that can drive a lot of capital inflow into the Chinese equity market. So I think the biggest question mark, obviously, is the market has gone up a lot, right? So actually the market bottomed February 2024. So the market has been rising for over 2 years, almost 2 years. So the question is whether investors should chase the market because they didn't really have any exposure at all. So now the market just keep rising. So I think the biggest concern is whether going into 2026, whether the bull market can continue.
And what, in your sense, what do you suspect will be the... So we know about the lack of inflation story. We know about, liquidity, abundant liquidity that has managed to offset most, if not all, of the former story. And I'm curious to hear what you think in terms of the big question marks and what resolves itself going into next year.
Well, I think really the biggest change since last year is probably investors began to realize China is it's almost imperative to invest in this kind of G2 world, right? So, for example, you mentioned the Chinese chip makers. So all of a sudden, you see Chinese companies are making very advanced chips. A few years ago, that's unthinkable. So regardless of this story, regardless the cyclical profile of the Chinese economy, now you do have two systems parallel to each other. One is the U.S. system, the other is the Chinese system. So I think now people began to realize that every investor has had so much exposure to the U.S. market, but has so little exposure to the Chinese market. So I think this kind of very lopsided allocation is one of the most important incentives for investors to look at China. For example, at the beginning of the year, we had DeepSeek moment. That's when really began to draw global investors' attention on China, not just focusing on the weaker part of the economy, not just the real estate market deflation, but also there are a lot of growth sectors. So I think that's really driving a lot of attentions, also a lot of capital inflows.
And is that distinction visible between the groups of investors that are more familiar with the Chinese market, let's call them domestic players, of course, the home bias, and how does that story, how is the appreciation of that story, how does it change as you look further away from China?
Yeah, so I think the China uninvestable story was mainly concentrated in the U.S., among U.S. investors and some European investors.
Okay.
So because most of it was because of geopolitical tensions, geopolitical environment, and for European investors, China's role in the U.S.-Russia-Ukraine war, China was deemed very unfriendly. I think that was I remember in those years when I was talking to investors, even though these investors, they didn't share the gloomy views on China, but they were concerned about so-called reputational risk of investing in China. So I think now this is gradually changing. In Asia, in EM, investors' view on China have always been more nuanced.
Yeah. Okay. So the common denominator going into next year, globally, and you have an EM mandate too, is it does seem like the tailwinds from easy monetary policy will somewhat not be as big a part of the conversation next year as most central banks either pause or have ended their easing cycle. How do we distill the tailwinds coming through out of looser policy, and what does it mean for the weaker dollar story, which has helped, and the appetite for EM assets next year?
Yeah, I think the dollar is a big story. I think if the dollar continues to weaken, then obviously global investors' interest on EM assets will increase. So I think that can still be a factor. On the other hand, I think the Fed will continue to ease. We believe the U.S. inflation will continue to fall, so that will allow the Fed to ease. And then you see a lot of EM countries, their real interest rates are still very, very high, right? So I don't think the monetary easing tailwind will diminish much next year, especially for a lot of high-yielding EM countries, especially like in Latam and South Africa. In China, the monetary easing may not be a big story, but a lot of the major headwinds that we have had this year will diminish, right? So housing has been in such a long, deep slump. Consumer confidence has been so weak for so long, and Chinese exports to the U.S. this year contracted a lot. So these are really the major headwinds for the Chinese economy this year. But most likely going into next year, all these three negative factors will either stabilize or even improve. So I think on the China front, I don't really think monetary policy easing will play an important role, because the problem now is demand for loans is very weak. It's not the price. It's not interest rate is not affordable. Its demand is weak. But if these three headwinds will gradually turn into some kind of tailwind, then I think the Chinese economy will perform a lot better.
That's a big if, and I'm glad we end on that. Can I just ask you a little bit more on the housing market and consumer confidence? We know if that goes away, it doesn't matter if the PBOC is tightening interest rates. The market will rally if those two things recover. What gives you the confidence, apart from base effects, that the housing market and consumer confidence will be a better story in 2026?
Right. I think the consumer story is probably easier to tell because if we look at over the past 2 years, there was this kind of self-feeding vicious circle between the corporate sector and the consumer sector. The corporate sector was not hiring, so consumer confidence was weak. And then consumer confidence weak, demand was weak, then corporate sector was not hiring. So now you have this kind of very vicious circle between these two, self-feeding. But now we are beginning to see some evidence that corporate sector hiring's intention began to improve. So across the board, even when I was in China talking to to the business community, my sense is confidence is slightly better than my previous trips. So I think if that changes, I do think there are high odds of this being changed. Then the vicious feedback loop between the corporate sector and consumer sector will begin to reverse. So I think that's, to me, I think that's a kind of higher odds event. On the housing sector, the simple fact is the housing sector has contracted for over 4 years. Housing starts have contracted by over 70-80%. So nothing falls forever, right? So I think that's why we do not consider this kind of base effect. I suspect we are very close. We are a lot closer to the bottom than another 10% down.
Right. Yen Wang, appreciate the insights, and of course, thank you for the company this year. We'll talk to you next year again. Yen Wang, Chief EM and China Strategist there at Alpine Macro. Commodities in focus today. You have oil bid, precious metals even more so. Maybe on this story we're talking about next as the U.S. intensifies its blockade on Venezuela. Let's call it the geopolitical risks coming back in ever so slightly. Details on that story coming up next. And counting down to the open of trade, the Monday Open, Shanghai, Shenzhen, and here in Hong Kong, futures are pointing higher. This is the China Show.
bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
All right, as we've been talking about here, oil is on the way up, also across the precious metals space. Bloomberg's been told that the U.S. is still pursuing this third oil tanker near Venezuela. Let's get to the details on what we know so far in the story and bring our oil trading reporter, Rong Wei Neo, in Singapore for us. Get our viewers up to speed. What happened over the weekend, sir?
Right, so David, like you rightfully mentioned, that the US authorities are still in pursuit of a third tanker, and this comes shortly after they've boarded a second tanker on Saturday, and after an earlier seizure this month. So this comes as, like, all these moves don't come as a surprise because the Trump administration had actually ordered a blockade of vessels going out of Venezuela, and this comes as the Trump administration is ramping up pressure on the Maduro administration by crippling one of its largest revenue-generating stream, which in this case, the oil trade. Now, of course, if this goes on and Venezuela's oil exports are curbed, what could happen is that its oil storage facilities in the country will start to fill, and eventually Venezuela may be forced to close down some of its oil wells. But I would say across the escalating actions over the weekends by the US administration on Venezuela, what really took us by surprise was the fact that the second tanker that they boarded, in this case, this tanker called the Centuries, it's actually not on any official sanction list. And the oil that this tanker is carrying is actually owned by a Chinese company. So what this action could actually hint at is the fact that the US administration is not only ramping up pressure on the exporters and the oil exports coming out from Venezuela, but this could very well hint at the fact that the US administration could also ramp up pressure further downstream, which in this case are the oil buyers.
All right. How much upside potential is there in oil market? Just very quickly, sir.
All right, so potential upside, definitely it will be slightly bullish. Now, that's also because of the fact that Venezuela is home to the largest known oil reserves globally. But we do have to note that the Venezuelan oil trade is quite a peculiar and quite, we would sometimes call it like a two-tier market. That's because oil coming out from Venezuela typically only goes to two buyers, in this case, the US and China. Now, Venezuela has actually been sanctioned for a bit, for quite a while across the years, and the only reason why the US is able to take oil is because its company Chevron has been granted a license to kind of supply Venezuelan oil back into the country. So this whole sanctions has actually made the trade quite convoluted. So it's not likely to have a much higher impact on the wider oil markets because of its very nature.
All right. Thank you, sir. Rong Wei Neo there out of Singapore for us. Hang Seng Index, 0.5% to the upside last we checked. A full preview of the Monday session is just ahead.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Right, welcome back. As we approach the opening bell, we're called higher across this equity market. Loan prime rates, in case you missed it, kept unchanged in December. Plenty more ahead, including the open. This is the China Show.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. Welcome back. You're watching the China Shows as we are close to wrapping up 2026. We're looking at gains still. So the question mark, actually the headline suggests we're still hoping for a Santa Claus rally. Aren't we getting one? Quite a decent sequence of gains already going into the open today. Volumes obviously are going to be on the thinner side as we approach, of course, Christmas and on to the new year, but that is just to say, of course, price has been on your side when you look at markets like Japan, for example, is doing well. Taiwan is doing well. That's a chip story. Within the chip story, there's more threads coming up 1% on the upside. Big announcement over the weekend. We'll talk more about that in a moment. And so the reason I sort of caveat price is while price maybe has yet to break out of recent ranges, when you look at Hong Kong, for example, what has been sort of your sliver of solace is a measure of implied vol has been hitting new lows. In fact, 4.5-year low now on the Hang Seng Vol Index, which basically goes to show while people aren't too excited overall over price, people aren't overly worried about what's going on so far. Onshore, 0.5% to the upside. We are going to get PMIs, of course, as we wrap up the next 2 weeks or so. And we are also looking at a stronger fixing, and we are closer to 7, of course, 703 right now on dollar China. Flip the page, please, and just also to mention here, no change in the 1- and 5-year loan prime rates about 30 minutes back. That's for December. Our folks at Bloomberg Economics, and I believe they should not be alone in this call, do expect for lower rates over the next couple of months or so. Right, speaking of Hong Kong, Hang Seng China, here's what's interesting. I'll get you a chart in a moment here, 0.5%. We did see that when on a weekly basis, here we go on your screens, right? First red circle, that is the week of Liberation Day, and the low of that week took us to about the 50-week moving average. Now, the start of, well, this time last week, Monday and Tuesday, were challenging when you look at price itself, and we did a similar dynamic there where we bounced off that similar 50-day. That is just to say the uptrend does continue despite the fact that we have been range-bound of late. The other thing I mentioned earlier on, let's bring up a 5-year look at the Hang Seng Vol Index, and we're now at the lowest in over 4 years in that, 17.3 on the VHSI. So that is a good setup going into 2026, given the sort of catalyst we're still waiting for as far as the cyclical recovery in the economy is concerned. That circles back now to geopolitics, which going into this year was front and center. Not to say that it's not going to be going into next year, but perhaps less so. And a reminder of that are possible blacklist addition, some of the names putting up on your screens right now as far as the Pentagon list of Chinese companies that they say are tied to the Chinese military. More threads, we talked about that, and some of its suppliers, 1% last we checked, and more thread suppliers coming up as well. On your screens, are we getting any sort of market reaction to that story? Not so much, but of course on the stock itself, we're up 3.5%. And some of the debuts today here in Hong Kong, I believe 3 or 4 on your screens very shortly. And it has been a good year, of course, for these stocks. And more threads, of course, you remember about 3 weeks back, had a 450+% move. That is an A-share market. And, okay, there we go. That's Christmas for you. The red side of things. We're down across these listings here. Trading debut specifically here today. Okay, let us pivot slightly. So we talked about, in fact, you know what? I'll put the chip story and the listing story together for you right now. This rush to the IPO market, raising funds among the chip makers that are key, of course, to the nation's goal of being self-reliant as far as technology goes. This global race in terms of AI supremacy. Sang-Mi Cha, our Asia Equities reporter, is here to put everything together for us. And you have this massive rush to raise money. What's going on?
Yeah, just like you mentioned, MetaX, it had 755% pop on the first trading day, right? And, you know, following more threads. So there's a huge insatiable demand from onshore retails to participate in these IPOs, right? So we see that, and we see a lot of that oversubscription in numbers, and that's why we are seeing so many of that rush into these IPOs. But of course, for the companies themselves, this is just the best time to bank on this AI frenzy, right? And it's the timing is just great, and some of them are looking for secondary listings, and for them, it's just the best time to raise some funds, you know, to actually boost some of their R&D. But also, this is just the right time to list their stocks. Yeah, and you know, people are scrambling for an allocation for these IPOs, right? Given the sort of 400+ percent moves. So give us some names. Who do I call my broker for hopefully an allocation for? Yeah. Not me, of course. That's figurative. Sure. So local media have been talking about these like 4 little dragons in this GPU space, right? Okay. So we have MetaX, more threads, but Beer Technology, for instance, and the Iluvatar CoreX are one of those little dragons, and they are the ones that are actually contenders, the domestic contenders to NVIDIA in China. And some of these stocks are, you know, they're looking at Hong Kong listings, and we have been seeing so many reports about them. Now we have Yangtze Memory and the Changshin memory on the memory side. So DRAM and NAND makers, which had for long period of time has been dominated by Samsung and SK Hynix. These are on the memory side. Now we have Kunlunsin, which is the AI chip arm of Baidu. And Baidu hasn't been doing very well this year in terms of stocks performance, but it's rallied so much ever since that news that it is aiming to go Hong Kong IPO for the Kunlunsin, the chip arm. And we have companies like Montage or Giga Device. These are the stocks or the companies that sit in the picks and shovels of the whole AI supply chain. They're all aiming to go second listing in Hong Kong, each to raise about $1 billion.
Yeah, here we go with some of those names. And, this is really a group of stocks that investors have fallen in love with as China builds its AI ecosystem. The opposite of that are consumer stocks, right? The longest ever streak of underperformance against the benchmark. Is there more pain ahead, or is this an opportunity to get in and realize some of the value here?
Yeah, so the biggest change is the consensus is that this is not just a cyclical slowdown. So it's not going to rebound quickly, but it could be a multi-year of these lull that we're seeing. And we see that in CSI onshore staples or consumer staples names that are down significantly, 4%, but that compared to the benchmark CSI 300, which is up 16%, that is the stark divergence. So it's kind of like the companies that are targeting the average Chinese consumers are just not doing well. And we see that in the liquor names like Mao Tai and Wuliangye, who have been the proxies for Chinese economy and wealth. They have slumped so much. Wuliangye is down over 20% YTD. And we see that in the same names in autos or, appliance makers like Media or BYD. They're all flat or down. So that kind of tells you that trading programs like the over $40 billion stimulus that we have seen from China in 2024, they have boosted that demand back then, but it hasn't created new consumption. But again, there's corners of opportunities. The new consumption names like toys and pet products or your favorite like milk tea chains, they're continuing to do well.
It looks like you're outlining my usual weekend there. Sang-Mi, thank you so much. Yeah, and the full screen, when the chart makes that, what is that now, an alligator profile chart pattern, that might be, that's banter, of course. There we go. That's just to show, of course, the recent underperformance. They moved in tandem, but of course, in 2025, one has gone the opposite way of the other, forming, of course, that. Is it an alligator or is it a crocodile? I don't even know the difference. Anyway, thank you so much, Sang-Mi Chow there. Now, just some more details on some of the stories that we were just talking about there with Sang-Mi, right? So you have Shanghai Biren Tech, that's an AI chip maker there. It's seeking up to $623 million in a Hong Kong IPO. The filing says that the company will offer 247 million shares, 17 Hong Kong dollars a pop. Trading is set to begin January 2nd. Now, Chinese chip makers have been rushing, as we talked about there, to list in a bid to raise funds as Beijing makes tech self-reliance a key priority. Now, Chinese OpenAI challenger Zhipu has filed an IPO prospectus with the Hong Kong Stock Exchange after clearing its listing hearing. The 6-year-old startup has already completed 8 rounds of financing. 8, wow, okay, raising $1.2 billion. Its co-founder told us earlier this month it was making progress in convincing Chinese customers to pay for AI. Now, Singapore-based investment firm GLP is said to have selected banks for its Hong Kong IPO, which may happen as soon as the first half of next year. Our sources say banks include Citi, Morgan Stanley, although details have not been finalized. GLP invests in sectors including digital infrastructure, logistics, and renewable energy. Right, just ahead, a closer look at biotech. Beijing-based, Hong Kong-listed Jacob Bio signed a licensing deal for AstraZeneca for the distribution of a new cancer drug. We'll speak exclusively with the co-CEO. Coming up next, this is The China Show. Good morning.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Right, welcome back. You're watching the China Show. We have Chinese biotech firm based in Beijing, listed here in Hong Kong. Jacob Bio Pharma stock on your screens. We're down about 12% today. Not very liquid, of course. That is just to say, of course, things could likely get better. In terms of the company's prospects, the company said it has entered its global exclusive license agreement with AstraZeneca for an experimental cancer drug. Joining us exclusively to talk us through the prospects in terms of development and at some point commercialization of this is Andrea Wang Gillam, Jacob Bio's co-CEO, Chief Medical Officer, and Global Head of R&D. A lot of hats. Andrea, thank you so much. Good morning from the Asia Pacific. Thank you for joining us. So you guys signed this when, and what does this deal allow you, what do you get out of this deal specifically?
Yeah, thank you. We signed a deal yesterday, actually, with AstraZeneca, co-developed our KRAS G12, pan-KRAS inhibitor. What this deal allowed us to do is the AstraZeneca will have exclusive licensing to develop the drug ex-China and help global development in eventually commercialization globally. It provides us $100 million upfront payment, which allowed us to continue to invest our R&D in China. On the top of that, actually, interestingly, we are doing co-development, co-commercializing our pan-KRAS inhibitor in China, which also help us to eventually commercialize in China.
Okay, so we'll talk about the commercial aspect in a moment because I'm curious to see what exclusively remains solely under your purview in terms of the benefits commercially and what then goes to the partner. But can you talk to us a little bit more, maybe I know you're Chief Medical Officer and Global Head of R&D, but if you could just simplify that for us, what the pan-KRAS inhibitor product, what does this do? And when you look across the competitive space, do you see any potential competitor to this?
Yeah. So KRAS actually is a gene. KRAS changes actually occurred up to 23% of cancer patients. Their tumor have this particular genetic changes. And with this, it lets the cancer grow faster and also make the cancer move metastasis. So it's a really important oncological target. We developed this drug to try to block this signal transduced by RAS. And this actually implication in about 2.3 million patients yearly global-wise. So it's a really important drug. Global landscape, there's definitely competitors, but we are the first small molecules, one of the first small molecules to enter the oncology space for this particular targeting in KRAS.
Understood. Well, partly because, okay, I'm not a medical person, but yes. Okay, thank you so much for clarifying that for us. Okay, so you're now in, if I understand correctly, and correct me if I'm wrong, phase 1 trials. If all goes to plan, with the money that you have now that allows you to develop this, and of course the partnership and expertise from your new partner, when realistically do you expect this to become commercially available?
Yeah. We anticipate probably in a few years globally.
Okay, well, a few years could be in 2 or 10. Is it closer to 2 or closer to 10?
Probably in 5 years. Yeah, in the between.
Okay, let's split the difference. Okay, okay. Can I just ask you as well? So I'm just reading through the press briefing, and pardon my attention to detail here. This is probably just my press hat. So I notice here that and I'm just going to paraphrase for our viewers here, under the terms of the agreement, your company is eligible for commercial milestone payments of up to US dollars 1.915 billion. Is that another way of saying that is the upside that is capped as far as the ex-China business is concerned because of what this agreement does?
Yeah. This is more, and also additional, we'll get royalties. So.
Okay. So it's this plus any royalties. Tiered royalties. Okay. How big do you think the domestic market will be for this drug? What are the initial estimates?
It is a very big market, I think. It is a very big market because targeting 90% of pancreas cancer, 30-40% of colorectal cancer, and also 30% in non-small cell lung cancer. So I think it's a tremendous market. Initially, it was estimated we will have 100 millions. 200 billions global market. Domestically will be actually a big part of it.
Understood. Since you mentioned specifically pancreatic cancer, and a lot of people know, as you know, this is one of the types of cancers that is very, very difficult to detect. And once you have information that you do have that's usually not very good news. Help us understand how this might actually change people who eventually find out that they have pancreatic cancer, and does this increase their chances?
Yeah, the patient with pancreatic cancer actually have 50% of patients with pancreatic cancer at the time of diagnosis, they have metastatic disease already. And so for this drug, we plan to bring to the early settings, which once they diagnose, potentially they can be treated with this oral drug rather than chemotherapy. Eventually, even the early stage, even when patients have tumor resected, they potentially can be tested out to use these drugs. So we're really going to be improve the outcomes of patients with pancreatic cancer, eventually, hopefully cure pancreas cancer.
Understood. Can I just, final couple of questions for you here. So I'm just looking at, so you mentioned in 5 years. So clearly, if that's the base case, this drug will not be contributing to financial performance next year, even 2 years from now. The market just wants to get a sense of how big the company gets over the very short term. Some of your revenues in 2023, 63 million, this is renminbi, 156 million last year. What does that number likely look like, full year number for this year, revenue-wise? And what is your target for 2026? If you could share some of that information with us.
Yeah, so again, I think those information will be improving for 2026, and we anticipate receiving the 100 millions 2026. So I think that will be the boost for our financial strengths. And so I think that will be the most of the coming, for the 2026 will be that upfront.
Okay, and can I ask you directly, when do you think the company will be profitable?
That's a good question. Well, hopefully we'll be profitable in a few years. And as a chief medical officer, I would say in 4 or 5 years.
Okay. 4 or 5. Okay. Alongside this drug. Maybe it's a final question since we started out, of course, and perhaps let me just say, it's probably safe to assume that many people are hoping you succeed with this drug, given, of course, the nature specifically of pancreatic cancer, and many people who find out who do have that. But what are the risks that you see as Chief Medical Officer of getting this through the trials and hopefully becoming commercially available in 5 years? What are specific risks that markets should be paying attention to?
Yeah. It's a very competitive landscape, so that's why we partner with AstraZeneca for global, approval, acceleration of global development and future commercializations. I think that's the risk is actually the competitive landscape of this. So we have seen early signals and make us very confident from the drug safety efficacy profile. We don't really have any concerns, but I think it's really the competitive landscape.
We'll take that as good news for everyone in the world, Andrea, thank you so much for the time. Andrea Wong Gillam there, co-CEO, Chief Medical Officer, Global Head of R&D at Jacob Bio Pharma. Right, just very briefly before we just head to a short break and talk more, I imagine, about this in a moment. Spot gold has now surpassed the peak that we had a few weeks back. We're set to hit a fresh record high on spot specifically. So we'll talk about that in a moment. Plus, of course, if you're a subscriber and you want to rewatch the interview we just did, TV Go is the function you run for our clients. Become part of the conversation. Check it out, TV Go. This is The China Show, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. Here are some of the stories we're tracking at this point. President Trump has announced deals with 9 more pharmaceutical companies here in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK here come in exchange for a 3-year reprieve from threatened tariffs. Now, the latest pledges include price cuts for low-income earners and matching of international prices. Now, Disney's Avatar, Fire and Ash, has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding already last year's total. The top 5 foreign films have generated about $850 million. Right, just for a brief look at markets and just stay a little bit on theme here, a little bit down here as far as some of the film and movie-related stocks are concerned. I would imagine this wouldn't specifically be a function of Avatar doing well, maybe the fact that some of these names have done well over the last couple of months or so. Right, back to the here and now in terms of the key themes, and this next board will actually show you a lot of the key stories we're tracking across equity markets, specifically, not just in China, but specifically across the world. So you have Zijin Mining, and we talked about gold, we talked about silver. Silver hitting a new high, gold a few minutes back set to top a new high there. 43.81 on spot. It topped the recent high back in October. SMIC is a chip story. I would imagine as a percentage, that's actually one of the bigger gainers. Might be down to the good news around the good news around what was the company that announced over the weekend? Okay, we're looking at Meituan. That's also on the back of an announcement on the weekend on platform companies being alleviated as far as the price pressures are concerned. And Wuxi Bio, that's the Pentagon store and potentially being included, but that's not a new story. 1.5% moving against the grain. A quick glance at benchmarks, and we will leave you with a look at that as we go into a very short break. And the second hour of the China Show is just ahead. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling, the busies. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning and welcome back. You're watching the China Show, the CSI 300 on your right, 30 minutes into the session. Of course, a beautiful, seems to be, when the skies are that clear and blue, that probably means it's probably colder than it actually looks. Shanghai winter morning, if you will. In terms of market moves, we're almost evenly split between up and down in the CSI 300, more in favor, of course, of gainers. At this point in time, 0.9%. In terms of some of the sector movers, telcos are doing most of the heavy lifting there. CSI is up on price. We are up, of course, and we're just looking to break out 4,600 again. Is that key level to watch there. Let's bring in our co-pilot this hour. Belle is in Sydney for us. Yeah, Belle, how was your weekend? It's very nice to see you, number one. And how are markets doing? What are you watching?
Well, I guess, my weekend was spent at the beach, so I guess that tells you kind of what's happening in terms of trading activity in some parts of the world, and definitely in Australia, a lot of traders are already into their holiday breaks. So I'm just taking a look at trading volumes, and we're a bit thinner than usual here in Sydney. But overall in the markets today, I think the general story is very much around maybe this prospect we're going to get that year-end Santa Claus rally. It's something that we've been sort of talking about the last couple of weeks, maybe not eventuating, but we did see US stocks and the S&P 2,500, for instance, ending last week higher, or at least erasing its losses. And also that story is still in big tech, because today it's really big tech that's moving the Asian benchmark to the upside. You can see here gains of nearly 1%. Standouts like Taiwan, for instance, again, tech heavy, and also the Kospi there, Nikkei, more than 2% higher. But that's also the story around the FX markets, because you take a look at the Japanese yen, for instance, and you had that weakness post the BOJ decision on Friday. You had Governor Ueda as well signaling that there's more easing ahead coming into next year. So very much the question, or tightening rather, coming into next year. But generally, central banks are perhaps setting up for at least ending their rate hiking paths, or cutting paths, or even setting up again to have further moves to the upside. But just keeping an eye on really pretty range bound, actually. Again, just back into that holiday theme we see for FX traders. Commodities, though, is one of the big standouts so far in the session. And just some of the headlines we've seen, both spot gold and silver rallying to fresh record highs. Again, it's those bets around what the Fed does next. Geopolitical tensions as well arising or factoring into this, because we actually have seen oil moving a bit higher, and that's with all of these events, geopolitical developments around Venezuela, but also the prospects or discussions that we see between the US, Kyiv, and also Moscow, Dave. But let's get more on what traders are looking for today. Bring in our Bloomberg MLI strategist, Mark Cranfield, who joins us out of Singapore. So, Mark, what's front and centre for you in the session so far?
I think the good mood that you're seeing across asset classes today, and this Santa Claus rally getting back on track here, has really got a lot to do with what didn't happen last week. So going into last week was a big week for central bank meetings. We got through it all pretty smoothly. And the biggest risk to risk assets something going wrong before year end was really the yen. So there was some people were holding back a bit, thinking that the Bank of Japan meeting, they were expected to raise interest rates. And the uncertainty was, how would yen traders respond to that? Would there be a repeat of what we saw in 2024 when the yen, there was massive short covering after a BOJ interest rate hike, huge yen short covering. That triggered a massive sell-off across asset classes. Didn't last very long, a couple of weeks, but it was very, very damaging. Well, that didn't happen. We got through the Bank of Japan meeting, and actually the yen weakened slightly. Huge sigh of relief across markets, because all those people who've got carry trades on with the yen, all those who are using it as leverage for other things, they can all sit back and say, thank goodness it's out the way. We can get on with equities and commodities and all those other things. And that's what you're seeing today. Silver, platinum, all rallying hard. Equity markets in a very good mood. And bond markets pretty tame. So nothing really to get people too worried. So it's really a lot to do with the fact that the yen did not have a big rally last week. And it doesn't look as though it's in store for the near future either.
Mark, maybe just a little bit on that. So, I mean, the 2-year Japanese bond yield, maybe just as an example of the broader melt-up we're seeing just about across the curve on JGBs. You know, 2 years up, 1.13. That's quite a spike. The 10-year, we took, I think, the 2% handle out last year. At what point, and I think you alluded to this just as you wrapped up there, that not anytime soon, but at what point do higher yields mean a stronger currency?
It's really about the pace and being reinforced by central bank language as well. So the issue here is that Governor Ueda spoke on Friday. He did say that it looks as though neutral rate is maybe a bit higher than people were expecting before. Instead of 1%, maybe it's closer to 1.5%, somewhere around there. The problem is he hasn't given any timeline about when he intends to get there. And it was a torturous process. Raising interest rates last week needed the backing of all the Japanese politicians, especially the Prime Minister. It took such a lot of work to get there, and he's suggesting there's a lot more work to do if he wants to raise interest rates again next year. So from a trader's point of view, you're telling them it's going to be a very long, drawn-out process. Inflation is still around 3%. 2-year Japanese yields are only just above 1%. That gap is very significant. We've got a 2-year JGB auction coming up on Christmas Day, of all things. That's going to be pretty tough to get off the ground as well. So while you have the negative rates, and they don't look as though that's going to change for a long time, that's not very encouraging for fixed income people, they like to see real yields. They like to see positive carry. In the long end of the US Treasury curve, you can pick up a little bit of positive carry. You cannot do that in the Japanese curve.
Okay, watching for Christmas. Santa Claus rally meets the Widowmaker. Put it on your T-shirt. Mark Hanfield there, our MLive strategist in Singapore for us. I look at Chinese stocks, chip stocks specifically right now. So we have more threads up 2.5%, off highs a little bit. Some of the fabs, as you can see on your screens, Cambricon, of course, designer 1.5% to the upside here. Well, the big news really on the weekend is really down to the top name you see on your screens here. The company introducing this new generation of chips aimed at reducing dependence among AI developers on NVIDIA. Min Min Lo, our China correspondent, is here on set with us to talk us through the new products and how they actually compare to what NVIDIA currently offers the market.
Yes, so Motorhead has introduced 2 new generations of chip, and the Huashan chips, named after a Chinese mountain, by the way. The CEO says that this chip is better than NVIDIA's Hopper series, the H100 and H200, and it's closing the gap with the current Blackwell series. So again, this is something that is incredibly significant for China because it is narrowing the gap with the US, and it also eliminates the reason for Chinese companies to buy NVIDIA chips after NVIDIA got approval to sell the H200 to China. The company Motorhead also launched this or announced the launch of this new graphics processing chip Lushan, which they say can have 15% or 15 times better performance on gaming. It also launched this new architecture, GPU architecture that can link 100,000 chips together in this supercomputer cluster, and that's said to be 10 times more energy efficient and have 50% increase in computational power as well.
That's the ideal scenario. There are bottlenecks that the company is facing. What are those bottlenecks?
Yeah, so a variety of factors. So one, of course, is the foundries. Right now, they still have limited access to the advanced lithography equipment. So SMIC, for instance, can only make their ability to make 2 nanometers or sub 2 nanometers chips are still very limited. And another factor is also that Motorhead uses its own proprietary computing software called Musa, which is positioned as an equivalent to NVIDIA's software called CUDA. So then companies wanting to use Motorhead chips, they have to adapt some of their software to integrate with Motorhead's technology. So there's a bit of an adaptation cost there. And of course, when it comes to that AI architecture linking 100,000 chips, that depends a lot on the interconnectivity, right? The hardware and the chips that allow them to communicate with one another, the end-to-end bandwidth, whether it can allow, smooth processing of huge amounts of data. All of that is very dependent on how it actually works when it's being implemented, and we don't have details about how that looks like yet.
It's interesting as well, I think, just on that point around capacity constraints. I mean, a lot of different chip makers in China have signaled that they want to increase production capacity next year. Huawei, for instance, Cambricon is signaling more threads now. But what about in terms of the geopolitical tensions as well? And this is a bit of a broader question, but we have seen these agitations maybe for the Pentagon list to be updated and to have more Chinese names added to that. What are we hearing on this front?
That's right. So we have Republican lawmakers lobbying for at least 19 more Chinese companies to be listed on the Pentagon list that would then suggest that these companies have ties with the Chinese military. So among them include DeepSeek, the robotics firm Unitree, Wuxi as well, which is a pharma company. Huahong is also on that list as well. And so it's pretty wide-ranging. Of course, it really depends whether the Pentagon will take into consideration what the U.S. Republican lawmakers are asking for. What it eventually does is it doesn't result in a ban to work with these companies. Well, the Department of Defense can't work with those companies if they're on the list. But U.S. companies, I guess, for them, it's a warning signal about the risk of being associated with these companies. So it's going to be quite bad for these companies if they want to expand overseas or work with overseas suppliers. And I know, for example, that Hesai had once was one of those companies that got off the list. They sued the Pentagon, saying that they have no ties with the military. They got off the list, but then they were immediately relisted after that, and it really shows you how sticky that label is. It's been very hard to fight against the Pentagon.
Min, just a quick mention. Looking at Meituan shares are up. I think we're up a fourth day. It's coming up on your screens for our viewers here. What do we know about the tightening oversight over price competition?
Yeah,
How does that work?
The Chinese regulators have come up with a new set of rules for the platform companies because they have a lot of power over these small mom and pop sort of merchants that list on their companies. So the new rules now state that these platform companies cannot require or place unnecessary restrictions on merchants to govern their pricing on other rival platforms, and they cannot punish these merchants by raising their fees or delisting their products or making their products less visible to consumers. So this is meant to protect the smaller merchants, to ensure fair competition. Part of the rules is also to ensure that promotions are clearly listed and there are no exaggeration of these promotions as well, so that consumers are not conned into buying certain things. So it's all about increasing transparency and protecting the smaller players to help stabilize their margins and create a sustainable growth for the sector.
Min, thank you so much. Min Lo, our China correspondent there. Just ahead here on the China show, we'll have a look at fixed income markets, likely supply coming through in the offshore space, and the outlook for 2026 with CICC. That's coming up next. This is the China show, and this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
You know what? It's been a really good year if you're in emerging markets, not just in stocks, right? You look at currencies, you look at the terrible year the dollar's had, you look at the capital flows we've seen across EM, cross asset, right? So I think we have a specific measure here at Bloomberg that has a look really at capital flows in EM. So we've fantastic piece, and a shout out to our colleagues at Bloomberg News who put out the story for you. It's on the terminal if you're curious, by the way, what it looks like. But we put together the key takeaways on a graphic for you in this banner year for EM equity markets, right? The most capital flows in about 16 years, since 2009. It's not a coincidence that, of course, the dollar has been on the softer side. It's the worst year for, this is specifically the DXY, the DXY, in about 8 years or so. The fixed income has done very, very well. Credit, for example, and the spread over treasuries has tightened to the narrowest in about 11 years or so. And a measure of carry trade, well, profits tied to the carry trade are also back to the highest in since 2009. So you can check that story out for clients, of course. It's on the terminal. It's also on Bloomberg.com. And that takes us very nicely into our next guest and the outlook for fixed income, given the macro outlook, and what does it mean for renminbi issuers going forward. Joining us here on set, Janessa Jha, Investment Banking MD and Head of Offshore Debt Capital Markets at CICC. Good morning.
Good morning, David.
Very nice to see you. So, going into next year, the Fed's told us, well, they've cut thrice. They're not sure if they're going to go all the way. They're data dependent. So the dollar does remain relatively a higher yielding currency relative to, say, where we are here in the Asia Pacific. How does it affect your work? What are the big things that you're looking out for next year?
Yeah, well, thanks very much for having me, Davey. I'm very glad to be here. I think as a DCM banker in the market, my job is actually to create transactions and bring multi-currency deals into this market. What I've seen from this development of the interest yield curve here, as you said, dollars is on the path to do this interest rate cut, while at the same time, the the convergence of the rates, the differential between the rates between different central banks and U.S. will be more and more clear into next year as the gap between this yield differential will narrow significantly, especially when the U.S. Fed, they cut rates maybe at a higher pace than the Central Bank of China. That will actually closer the gap between these two central government yield curves. And I think that will create more opportunities for these bond market. And we might see some comebacks of the dollar transactions from Greater China regions into this market, which has been decreasing significantly for the past 3 to 4 years. We had a outstanding volume of China DCM at roughly $1 trillion at peak in 2021. Now this figure has dropped significantly to more than $600 billion in the market. So the Greater China investors have a lot of reinvestment risk for them with this shortage of this $400 billion. So that's a trend I think we could watch for next year.
Right.
And in the meanwhile, because of the stability of the currency of the Chinese yuan and also the resilience of the economy that China has demonstrated, during this, the tariff situations this year, especially, I think the yuan markets will also be booming because the demand will not only come from the domestic issuers and investors, but also we see the diversifications from outside of China. For example, this year in the dim sum bond market, which is the offshore bond markets of Chinese yuan, we have seen a significant increase of international issuers worldwide from the Singapore, from the government of Indonesia, from Europe, like OTPP Bank, from Central Asia, like the Development Bank of Kazakhstan, the Kazmunayagas from Kazakhstan. All these diversified issuers came to Hong Kong to tap the dim sum bond market. I think it's a very interesting case to establish here. And also, if you look at some deals that happened this year in Hong Kong, one interesting deal is with the China MOF US dollar deal.
Okay.
That we actually lead the underwritings of that deal.
That was the offshore deal, right?
That was the offshore deal.
Do we get more of that? More,
yes.
more sovereign issuance next year in dollars?
I think China MOF priced a $2 billion USD bond in the market for 3 years.
Okay.
And then if you look at the credit spreads to US dollar, it's actually zero. So the deal was priced at Treasury plus 0 credit spreads for the 3 year and Treasury plus 1 basis point for the 5 year.
Okay.
With a total deal size of $4 billion across in 2 tranches. If you look at the stats, even at a 0 spread, we attracted more than 40% of investors from central banks worldwide. And guess what happened in the secondary markets? The bond was traded below the Treasury in the negative 20 basis points, something like that.
Okay.
Some argue that was driven by the tax shield from the Greater China investors. But this links to another story from the Greater China investor side. As you know, the current interest rates environment was still China has a very low interest rates environment. So currently the 10-year CGB bonds in China is only like 1.8%, while the US 10-year Treasury is like 4.1%. So this gap between these two rates actually creates a lot of demand from Greater China investors to diversify the investments in the offshore markets.
Okay, we've opened up a lot of doors. That's a lot of information. So one thing that stood out to me is, you could shed a lot of light on this, is across these multiple fronts, where does supply look to be the most active in the first quarter of next year? Which specific market, which specific currency under your specific watch?
I think within APAC markets, given China has always been a very big player, which accounts for roughly 50% of the supplies.
Okay.
So I believe the trend will continue into next year, but you will see more and more issuers in the dollar space, but may not in the plain vanilla bonds, but also probably the convertible bonds. increasing the supply in the convertible bonds, given the upside of the equity stories, as well as the relatively high, yield in dollar, will still sustain in the next year. And then we'll see a diversified supply actually for the dim sum bond markets, maybe from regions from Southeast Asia, from Middle East, from Central Asia. I think the logic behind for people to seeking for diversification is actually not only to get a cheaper funding source from the diversification into renminbi, but also to get a sustainable new currency market to borrow. For example, in the case of the government of Indonesia...
How deep is the investment pool? Just to ask you on that. Because they're tapping a new investor base, to your point, right?
Yes.
So how deep can that market get in terms of liquidity?
Yeah, that's a very good question, David. I think speaking of the dim sum market, it's still a growing market, and it's still at a infant or a baby stage as compared to dollars or euros or the, hard currencies markets.
Right.
But we have seen some really trend on the diversifications not only come from the international investors who has gaining momentum in playing in the renminbi bond products, but also the keenness of the domestic investors who are keen to deploy their capital from onshore to offshore. I'm not sure if you heard about the mechanism we call Southbound Connect scheme, which is basically the infrastructure that links the China market with the Hong Kong market via the CMU mechanism. And the onshore investors can therefore invest in the offshore bond markets, primarily in the CNH products through this mechanism directly without any transaction cost. And we believe this pool of investments will further deepen next year. And this year, we're already seeing like 700 billion to 800 billion renminbi worth of capitals coming to Hong Kong to support the markets.
One more interesting that I hope you could talk about this is interesting for global viewers. The dichotomy between onshore rates where, let's just call it they're very, very low, and the preference is certainly lower borrowing costs, against somewhat higher yield here in Hong Kong, but higher yield, of course, when you look at the U.S. What conversations are you having with your clients in terms of, if a client is able to access both markets, what is the current preference, right, in terms of fundraising, and why? Offshore or onshore?
Yeah, I think my clients has two universe, right? One is those clients who are based in China. They're doing this cross-border bond raising or financings for their companies to expand either overseas, or they want to bring the money back to China for investments. And the other universe of my client base is actually international clients, like our Hong Kong clients, like our Southeast Asian clients, who are looking for diversifications. So I would say the behaviors tend to be very different. For the China clients that I can see, because of the lower rates environments in domestic markets, a lot of clients actually chose to refrain from doing US dollar financings anymore. They go back to the home markets and raise more bonds issuance in the domestic markets, because central bank has keeping this, loose monetary policies to keep the ample liquidity in the domestic markets, which provide a very lower funding cost and extension of maturity profiles for the domestic borrowers. However, for some of the borrowers who have international needs to diversify, and they have been offshore projects to invest and expand globally, they will still choose to come to the international markets to either issue a dollar bond or issue a dim sum bond, the renminbi bond, in the offshore markets and invest those proceeds into their overseas projects.
Janessa, thank you so much for taking the time. There's lots more to talk about. We'll talk to you again next year.
Thank you very much.
Janessa Jade, looks like it's going to be busy, the pipeline there, her and her team. Investment Banking MD and head of offshore GCM at CICC. Just very briefly, a look at equity markets. We'll take a short break. Japan is up 2%. This is the China Show.
This is the 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the legs air. Then make the 4 fingers curl, make sushi shape, then touch this. 2, then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3, then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Taking a look at some of the movers here, we are watching gold miners because we have seen metals rallying to a fresh record this morning. Gold at a new high, but looking at some of those miners moving to the upside. Also taking a look at what's happening with Honhai because its Foxtron vehicle unit has agreed to acquire the Taiwanese EV brand LuxGen. It is expected to help it expand out its EV ambitions. More ahead. This is Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back. Just some news. This one has just come in. This is in Malaysia. This is with respect to the former Malaysian Prime Minister Najib Razak. So he's effectively lost a court bid today to serve out the rest of his prison term under house arrest. So a high court has ruled that this royal order that allowed Najib to be placed under house arrest was not valid, and that the king cannot decide independently of the Pardons Board. That's what we know so far. We'll leave it at that, and we'll bring you more details once we have more information on the case. But the former Prime Minister, just to say the headline, has lost his bid to serve out the rest of his jail sentence at home. Bell.
Yeah, and that is slated to end in 2028. Let's also take a look at what's happening in Japanese markets, though, because we are Moving through the morning session, and you're seeing quite strong gains here across the board, being led by the tech sector, and actually the SoftBank is one of the biggest standouts so far in the session. It does appear that not only have you got those tailwinds from the US session on Friday, where we saw an outperformance again of tech and stronger performance across the board generally, but also it's the Japanese yen story with weakness there that you're seeing at 157. So SoftBank, you can see we've got local media reporting that they are going to be developing AI with the private sector, or Japan is looking to develop AI with the private sector, and that does, of course, include SoftBank. SoftBank really already in the session doing well, given you saw the likes of Oracle up 6% on Friday, and both of those companies are working closely together in Project Stargate in the US. What else we're tracking is actually the maker of Mini Motors. That's Nidec this morning, because we do see the chairman of that company stepping down, or its founder stepping down from his position as chairman of the board. This does follow the discovery of accounting issues that damaged the reputation of this company. So his quitting is being seen as a positive for the business. Let's also shift, though, to the 7-Eleven operator 7 & I, because it's pressing its US convenience store business to deliver a faster turnaround as the retailer seeks a public listing of the unit. Well, let's bring back our senior editor, Reed Stevenson, joining us now from Tokyo. So, Reed, we've been discussing there's a number of different initiatives the company is taking for this, but just spell them out for us.
Yeah, essentially what 7 & I is doing is they're really trying to kind of get the U.S. business going again ahead of a planned initial public offering in the second half of 2026. Some of those initiatives involve boosting its private label presence, essentially, so 7-Eleven branded products in the stores which have a higher profit margin, larger format stores, better management of the supply chain. And really all of this is to sort of create an argument for potential investors that the business still has a lot of runway to go in, what is actually a kind of a tough environment for U.S. Retail at the moment.
Yeah, so talk us through then that sort of toughness we've been speaking about, for instance, the concerns around the health of the US consumer generally, but what are the biggest challenges that the unit faces?
Yeah, I mean, there's kind of two fronts. I mean, first of all, everything is sort of related to inflation here. People tend to go and look for better deals rather than convenience when prices are high. So that's a headwind against, any convenience store operator in North America at the moment. But also there's a lot of competition. Many of them are getting into food, and so now you're beginning to compete with, fast food and other outlets. And then, dollar stores as well also have become sort of an alternate option for many people when they go looking for the things that they buy at convenience stores. So all of that is sort of a headwind, but essentially, the U.S. operation for 7 & I has sort of been, a headache for a while. They went after scale. That really hasn't delivered outsized returns. So what they're really trying to do is, improve the quality of the business, raise those margins so that they can really try and unlock value through this initial public offering that they're aiming for in the latter half of next year.
Yeah, so I guess up against a bit of a timeline now. That was our Bloomberg senior editor, Reed Stevenson, there in Tokyo for us. So, yeah, one of the big listings we'll track next year, Dave.
Something among many other things we're looking forward to there. Just an update here, some major stories we're tracking at this point as well, just to pivot the page here. Bloomberg has been told that the U.S. is, and this is on the Venezuela story, has been told that the U.S. is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says that the Bella 1 tanker is a Panamanian flagged vessel sanctioned by the U.S. and the attempted interdiction here follows the boarding then of the Centuries, that's a separate one supertanker, early on Saturday, and the Skipper back on December the 10th. Now, President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime would create a major admin problem. Now, judges are currently weighing a legal challenge to the tariffs Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding those levies should deter the court from ruling in that direction.
we really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Now, U.S. Special Envoy Steve Witkoff says that Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. Now, he says discussions covered the existing 20-point peace plan, a U.S. security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Now, the U.S. launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after killing 2 U.S. soldiers. Now, the U.S. Central Command said on Friday that fighter jets, attack helicopters, and artillery targeted ISIS infrastructure and also weapon sites. Now, Defense Secretary Pete Hegseth posted an X saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bella.
Yeah, and Dave, we're also tracking those tensions between Thailand and Cambodia, because Thailand's military has reportedly struck targets in Cambodian territory over the weekend, including bombing a casino and a bridge. The attacks come ahead of an ASEAN foreign ministers meeting that's scheduled for Monday, aimed at diffusing those tensions. But let's bring in our Southeast Asia managing editor, Katrina Nicholas, who's with us here in Sydney today. But yeah, I mean, we've certainly seen these tensions flaring between the two countries of late again. But what exactly happened over these last couple of days?
That's right, and this is fighting that's been going on for about 2 weeks now, with no sign of de-escalation. So what happened over the weekend? The Royal Thai Air Force carried out significant airstrikes on 2 targets inside Cambodia, an Ojek bridge that was described by Thai military sources as a strategic supply route, and also a casino complex that was hit on Saturday, with Thailand asserting that those sites had become bases to support Cambodia military operations. Cambodian officials have condemned those attacks as attacks on civilian infrastructure. Now, this conflict, as I said, it's been 2 weeks now. It's not showing any signs of de-escalation. It's displaced hundreds of thousands of civilians on both sides, about 750,000 now, and 40 people have been killed. And increasingly Thailand is framing parts of its offensive as a war on scam centres. So that muddies the waters somewhat. It's saying that some of these facilities, particularly the casinos that it's targeting, are linked to transnational cybercrime and fraud networks. That adds quite a complex security dimension to what fundamentally started as a territorial dispute.
Yeah, certainly adds a new implication, I guess, a new justification for their actions. But as we said, there's the ASEAN Foreign Ministers meeting coming up later today. What exactly what are we hoping to see in that, and what's likely to be achieved, do you think?
Yeah, so all eyes today on Kuala Lumpur. That ASEAN Special Foreign Ministers meeting kicks off there in about 20 minutes for now. We expect it to last well into the evening until we get some resolution there. But this is, sort of being seen as the most tangible chance yet to secure a formal ceasefire and to halt this recent escalation. Diplomats hope the meeting will sort of reinvigorate dialogue after previous agreements have, of course, faltered, and at least, framing the talks as being really critical for regional stability.
All right, well, then we'll watch for the readout later on. Katrina Nicholas, thanks very much. That was our Bloomberg Southeast Asia Managing Editor, Katrina Nicholas there. And another political story that we're tracking today, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photographs or photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General, that's Todd Blanche, says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women.
And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Now, the latest release of the so-called Epstein files includes thousands of pages of pictures, phone numbers, and notes from investigations, but with many documents heavily redacted. Our Miles Miller has more on the release and also the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasize that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
And that was Miles Miller there with the latest on, of course, the big story over the weekend. Right, just ahead here on the China Show, Li Ka-shing, that's the Hong Kong billionaire, of course, is, well, a look at how he's really remaking his business empire as this shift across generations looms in his family business. More on that story coming up, and the deals, really, that could reshape the future of CK Hutchison.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Welcome back. You're watching The China Show. A closer look now at Hong Kong-listed CK Hutchison Group. It's set to enter the new year with really potentially some major changes, a series of deals pending. It could really reshape the future of the conglomerate amidst this looming generational shift. For more on the story, let's bring in our conglomerate's consumer and gaming reporter, Shirley Zhao, with a take today. So, yeah, I guess we'll start off with the year that's been and how that informs us about the potential major changes ahead.
Yeah, so Li Ka-shing and his family are planning basically 3 major moves for their flagship conglomerate, CK Hutchison. So they are considering an IPO for their retail arm, A.S. Watson, which is their biggest revenue contributor, and they are also considering options for their telecom businesses, including a potential listing as well as sales and mergers in some markets. And of course, they are planning to sell 43 ports globally, which account for the majority of their port portfolio. So if all these deals are completed, that would be quite significant because CK Hutchison would have already divested or spun off most of its core operations, and that could also grant the Li family a fresh war chest to fend off global risks as well as preparing for future opportunities.
It's more than a facelift, right? If these 3 simultaneous deals come to fruition. Do we have I know some of these are fairly complicated, like the ports deal, for example. I know we've covered that as well recently. But do we have a better understanding of when we might see these deals actually come to fruition?
So these deals all face pretty big challenges. So for example, the ports deal has angered Beijing because of the involvement of the U.S. investment firm BlackRock as a buyer. And President Donald Trump has come out and said that this is a U.S. win over the strategic Panama Canal because the 43 ports include 2 ports in Panama. So Beijing is unhappy, and CK Hutchison has invited a Chinese investor, China's biggest shipping company, COSCO, into the buyer mix in the hope of appeasing Beijing. But talks, we learned, that have slowed down recently due to the complexity of the deal. And CK Hutchison's executives have said that it's unlikely for the deal to be completed this year. And other deals involving telecom, for example, would often require antitrust scrutiny in terms of telecom mergers in some markets. And the retail arm listing, CK Hutchison has actually been considering that on and off since 2013, but it still hasn't been able to do that due to market volatility and valuation issues. So it's not easy to pull this off, but we learned from people familiar with the matter that CK Hutchison wanted to do these deals because they want to unlock value for CK Hutchison's assets. If you look at CK Hutchison's stock, it has really been trading at a steep discount ever since 2015 when CK Hutchison as a company came into being. And the Li family really believes that these moves can potentially reduce the discount and lead to a completely reshuffle of returns for shareholders, which of course include the Li family, which owns 30% of CK Hutchison.
I was actually going to ask you about the why, and because there could be a difference between realizing value by listing some units and a complete pivot in terms of, you mentioned, right, core businesses, and the fact that they're facing a lot of regulatory friction means that they've gotten into very central businesses, right? And I wonder whether it's simply unlocking value, or is there a major pivot away, strategic pivot into new businesses, and what new businesses could those be?
That's also a very good observation. So if you look at how Li Ka-shing built his empire, he developed really close relationship with major banks in Hong Kong as well as China's top leadership. And he utilized that relationship to expand globally. So by the early 2000s, he has already developed his empire into the world's biggest port operator, as well as the biggest Asia investor in the European telecom sector. But if you look at today's global environment where his elder son Victor is operating in, it's completely different. So Li Ka-shing's early bets in sectors including ports, retail, telecom, utilities, and infrastructure paid off because of globalization, because these sectors benefited greatly from globalization. But Victor today is facing a world where deglobalization is increasingly becoming the theme. So observers are saying that this is a good time for the Li family to monetize on the giant wealth that they have built over the past decade. And some observers are saying that this could lead to a sector change for CK Hutchison. But in terms of what other sectors CK Hutchison could invest in, or is there any other use the family is planning for the capital that they may accumulate from these deals, it remains to be seen.
There we go. The starting point, I guess, of how a conversation around how conglomerates remain relevant, agnostic of, or through generations, let's put it that way. Shirley, fantastic piece there. For our clients, you can check out Shirley's piece. It's on the terminal. It's also on the website for you. Shirley Zhao there, conglomerates and consumer and gaming reporter. A look at markets. We're coming off highs quite quickly. We're now flat in the Hang Seng Index. Plenty more ahead. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back, and here are some of the corporate stories that we're tracking today. President Trump has announced deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK come in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. Disney's Avatar: Fire and Ash has debuted at the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. So, Dave, I think it's interesting because at the same time you're seeing that strength in the Chinese movie market, Chinese consumer stocks have certainly been one of the standouts to the downside this year.
Yeah, they have. And you got to wonder where spending 2 hours watching movies, if you think about it, the time spent watching movies is about the same time, if not shorter, than the time people spend nursing an already quite lukewarm matcha latte at cafes, right? And that's just to say 2 hours of paying something and doing nothing. I guess in some ways you could spend more. You could find a better time spending more for 2 hours, but that is just to say, of course, movie stocks are on the way down. And you know what? That's not a bad life, isn't it? Okay. We'll leave you with a look at Hong Kong listings today. Not the best day as far as debuts are concerned. It's been a fantastic year, though. And, yep, we will see you all tomorrow. Thank you for joining us today. You're watching The China Show.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badant.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Coming up, the US pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. We assess the impact with Geopolitical Futures Chairman George Friedman. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa Claus rally. The AI trade in focus as well, with China's More Threads unveiling a new generation chip lineup set to challenge developers' dependence on NVIDIA. And we'll get market insights for 2026 with SGMC Capital CIO Ed Gomez, who sees strong resilience in the technologies powering today's productivity gains. Also, India's institutional real estate investment topping $10 billion this year to set a second straight record. We'll take a deep dive into the outlook for the sector with JLL's Lata Pillai and Sonali Rawal from Anand Rathi Private Wealth. Well, we're keeping an eye on commodities, both gold and silver, both hitting fresh records, and this as rising geopolitical tensions enhance the haven appeal of precious metals. Oil prices also in focus today after Bloomberg reported that the US is still pursuing a third oil tanker near Venezuela. President Trump has been intensifying an oil blockade on Nicolas Maduro's government. For more, let's get to our oil trading reporter, Rongwei Neo in Singapore. So, Rongwei, talk us through what happened over the weekend. What are the latest details?
Well, so it's been quite an action-packed weekend with the U.S. administration boarding a tanker carrying Venezuela crude on early Saturday, as well as right now, as you have just rightfully said, Paul, it's in pursuit of a third tanker. So this is not exactly a surprise, as it comes right after the Trump administration has said that it will implement a blockade on sanctioned oil tankers carrying oil out of Venezuela. And of course, this comes as the US administration is amping up pressure on the Maduro's administration, trying to cut off one of its most revenue-generating stream. Well, in this case, that's the oil trade. So once exports from Venezuela are curbed, experts expect that the oil storages in Venezuela will start to fill up, and eventually this would kind of cause or force them into closing several oil wells, which is of course expected to hit the Maduro's administration quite heavily. I do have to note that one of the surprises that we've seen over the weekend was actually one of the tankers that was boarded, Centuries, which was boarded on Saturday, was actually not on any official sanction list. And of course, the ship was actually, it has links to a Hong Kong-based entity, and this perhaps casted a spotlight on whether the US administration, apart from ramping up pressure on exports coming out from Venezuela, it also kind of hints at the fact that they could be possibly taking more heavy-handed actions further downstream, which of course includes the buyers of Venezuelan oil.
Yeah, you mentioned the importance of Venezuelan oil to Venezuela, but in a global sense, it only accounts for a tiny fraction of supply. So what's the wider impact for oil markets?
Right. So one of the interesting dynamics that Venezuela play in the global oil market is the fact that, of course, one, it's an OPEC producer, which means it's one of the major producers in the world, although that market share that it has once owned has slowly dwindled over the years due to several factors such as sanctions and whatnot. We do have to note that Venezuela is home to the largest known oil reserves globally. And of course, right now, it mainly supplies oil to two major countries, China as well as the US, with China taking the bulk of the oil. Of course, we have seen in oil prices today that it has edged up slightly, possibly on enhanced geopolitical risks and fears due to the additional tanker actions being taken by the US administration. But overall, in the long term, when I spoke to Chinese buyers, as well as wider observers of the Chinese market, it's not widely expected to affect supply, because this comes at a time where the demand coming up from China is low. Chinese private refiners mainly take in Venezuelan heavy, sludgier crude to create bitumen. And right now, the downstream market for that product is kind of weak as well.
All right, oil trading reporter Rongwei Neo there in Singapore. Well, our next guest is an internationally recognized geopolitical forecaster and strategist on international affairs, and he has briefed numerous military and government organizations in the US and overseas. Let's get to George Friedman, founder and chairman of Geopolitical Futures. George, thanks so much for joining us today. I just want to pick up on what Rongwei was saying there about the US pursuing this tanker. The Bella 1 says it was sailing under a false flag. How do you see Venezuela responding to this type of pressure?
Well, I don't think Venezuela is in a position to respond to anything. I also think that the amount of naval vessels in the Caribbean are far more than necessary for blockade, whereas the number of troops there are far less than is needed to invade Venezuela. Therefore, I suspect there's another dimension to this, which is cutting off Venezuelan oil heading to Cuba. The first ship that was intercepted was going to Cuba. And we are, I think, in the United States, putting pressure not only on Venezuela, but also indirectly on Cuba.
That's an interesting theory. Can you unpack that a little bit more for us? What's the motivation of the U.S. wanting to put pressure on Cuba at this stage?
Well, Cuba has always been a dangerous geography for us. At the same time, recently, after the U.S. threatened to send more missiles to Ukraine, the Russians signed a new treaty with the Cubans on defense matters. And there is a concern in some quarters of Russian missiles coming into Cuba again as they once did. And therefore, I think at this point, when the focus is on the Western Hemisphere rather than the Eastern Hemisphere, as Trump has put it, we want to more than deal with Venezuela, although that's part of the story, but also deal with the Cubans.
So a similar question then that I posed you about Venezuela. How do you see Cuba reacting to this pressure, if you're correct? And could Cuba not just source its oil from elsewhere?
It could possibly do so, but not very quickly. But the situation inside of Cuba is pretty bad. There's a great deal of poverty in Cuba. Frequently, electricity is unavailable for extended periods of time. There's a healthcare issue. And the Cuban government at this point is pretty weak and unstable in my mind. Therefore, this happens to be also a time not only to deal with the Venezuelans and the cartels, but also to deal with Cuba.
Do you think the U.S. is pursuing regime change in Cuba? And if yes, what would an alternative government look like?
Well, the United States has always wanted a regime change in Cuba, ever since the 1960s and the Cuban Missile Crisis. They were unwilling to pay the price to do it, but given how weak Cuba is right now, this might be a chance. The nature of the regime after that would be fundamentally, if possible, and not anti-American, as the Cuban is. And therefore, it would also send a signal to Latin America that when we speak about turning to the Western Hemisphere, we're turning our power on the Western Hemisphere.
The focus on the front pages at least, is still Venezuela, however, and President Trump has described the Maduro regime as a terrorist organization. So is the same goal there to pursue regime change in Venezuela? And also the same question, if not Nicolas Maduro, who?
Certainly, they would like to replace Maduro. And for the same reason, the Russians have a great deal of influence with Maduro as well. He's very close to them, as well as being the source of shipment of drugs to the United States, most of those drugs being grown in Colombia. Therefore, there's a broader picture than just the Venezuelan question. And as to what will replace it will obviously be a very complex issue, But if the United States has the ability to overthrow Maduro, it will have the ability to install a pro-American government, probably.
What's your timeline for all of this reaching some sort of denouement? Because as Wrongway was saying, you know, if Venezuela's unable to load tankers, oil's just piling up on shore. It may lead to the need to shutter wells. What's the timeline in terms of how you see this playing out?
I would say weeks and months. The first issue being Maduro, and the second issue being how we have influenced Cuba, what we are after. If we are after basic undermining of both the Maduro regime and the Cuban regime, it'll take several months probably. But then
George, there's a few.
That is a way that the oil might start flowing again after regime change.
George, there's obviously plenty of other geopolitical tensions around the world that we need to discuss, also involving Russia. And I just want to talk a little bit about the progress of peace talks between Russia and Ukraine. I mean, the U.S. Special Envoy Steve Witkoff said there were productive and constructive meetings between European and Ukrainian counterparts in Florida. But is what was discussed there going to be in any way acceptable to Russia? Is this moving things forward at all?
Well, two things. The Russians have failed in their mission. Having fought for 4 years and only conquered this part of the country shows the weakness of the Russians. At the same time, Trump wants to make a settlement. Putin, on the other hand, cannot make a settlement after spending 4 years at war and countless Russian lives and barely taking any serious territory from Ukraine. Remember, most of that territory is not yet held by the Russians, by far most of it. And at the same time, when you take a look at the intentions of the Russians, they invaded the entire country, including the attack the capital in Kiev, and were beaten back. So I think the Russians have a real problem on their hands. Their military is not that strong. It has not succeeded even slightly in 4 years.
At the same time, they're also not going backwards, and Vladimir Putin's showing no sign of wanting to throw in the towel here. So what's your expectation for a peace process in 2026? And can it involve any ceding of Ukrainian land to Russia, which Ukraine would find unacceptable?
Well, at this point, the war has to end. The Ukrainians cannot push the Russians out. Russia has not shown the ability to advance forward. It's a frozen war. At the same time, the fundamental question is not U.S. politics or Ukrainian politics, it's Russian politics. The Russian economy is in very bad shape. The number of people who've been killed in the war are in bad shape. Now the Russians are recruiting people from Africa and other Asian countries to be in the military. That's not because their military is doing well. And so the question is, how long will the Russian public, the people around Putin and so on and so forth, allow him to extend the war because if it ends it now, it ends in basic defeat for Russia, even if they hold this territory in Ukraine.
What's your outlook for European defense spending in this environment? And given the way you just characterized the Russian economy, how well positioned is it to engage in an arms race?
It's quite well positioned. The European Union's GDP is slightly larger than the Chinese. The question is, and this is the fundamental question we're facing in the world, does Europe unite and create a single European army and a single European government, or does it remain in various shattered relationships with each other, different, unable to reach for a certain end? The fundamental question is, when you say Europe, Europe is a continent. It's not a nation.
Yeah, indeed. There's not always alignment on every issue. Even if peace were agreed, however, how can a guarantee be reached that Russia's not going to try again, potentially within the decade, to carve off another piece of Ukraine?
The Russian army has showed itself incapable of conquering a much weaker country. The threat of Russia that exists, which the Russians really want to maintain, is that somehow he's going to throw forces in all over the place and threaten Europe and threaten other areas. Given the performance of the Russian army in Ukraine, that's pretty unlikely. So we continue to feel that the Russians are somehow capable of very many things that they're really not capable of. They couldn't take Ukraine.
All right, George Friedman, founder and chairman of Geopolitical Futures. Thanks so much for joining us today. And let's stay with geopolitics. Thailand's military has reportedly struck targets in Cambodian territory over the weekend, including bombing a casino and a bridge. Bloomberg's Southeast Asia managing editor Katrina Nichols is right here in Sydney with us for more. So, Katrina, bring us up to speed with the latest developments over the weekend. And I've got to observe, striking a casino seems like an odd move.
It does on the surface of it. That's certainly true. So we've got reports that the Thai Royal Air Force carried out airstrikes on at least 2 significant targets inside Cambodia. One was the Ojek Bridge that's been described by the Thai military as a strategic supply route. And the other, as you mentioned, is a casino complex and some other facilities, and they were hit on Saturday, with Thailand asserting that these sites had become bases to support the Cambodian military operations. Cambodian officials, meanwhile, have condemned those actions as attacks on civilian infrastructure. The conflict, which really began escalating again earlier this month, it's well into its second week now, has involved heavy artillery and drones on both sides, and now has displaced hundreds and thousands of civilians, about 750,000 on both sides, and 40 people have perished in the clashes. As you mentioned, casino is a somewhat random thing to be hitting, but Thailand has increasingly framed part of its offensive as a war on scam centres and linking some of the facilities that it's been targeting, particularly these casinos, to transnational cybercrime and fraud networks. And that adds a pretty complex security dimension to what essentially started off as a territorial dispute.
Now, we've also got ASEAN foreign ministers meeting today to try and broker an end to this. How realistic is that outcome?
Yeah, well, today all attention, of course, swings to Kuala Lumpur and the ASEAN foreign ministers meeting that kicks off there right about now, actually, and is expected to last several hours. This is seen as the most tangible chance yet to secure a formal ceasefire and halt the recent escalation along those disputed borders. The diplomats hope the meeting will certainly reinvigorate dialogue after previous agreements have faltered, and they're framing the talks as being really critical for regional stability.
President Trump's previously taken an interest in this conflict. Is there a role for the US in helping broker an end to it?
Well, of course, earlier this month, President Trump did call the leaders of both Thailand and Cambodia and urge them to stop the fighting, and indeed said that this would help de-escalate the situation. Now, that didn't happen. The fighting just continued on. You have to wonder whether those peace negotiations are linked to tariff and trade discussions. The Prime Minister of Thailand, Anutin, certainly said that was not the case. But let's see if the US weighs in again.
All right. Bloomberg Southeast Asia managing editor Katrina Nichols there. Next up on Insight, the Trump administration defends removing an image of the president from its latest release of files tied to Jeffrey Epstein, saying the move was to protect victims. Much more ahead. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back. You're watching Insight. Here's another story we're watching. The Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files includes thousands of pages and pictures, phone records and notes from investigations, but with many of those documents heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasize that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
That's Bloomberg's Miles Miller. Let's take a look at how Asian benchmarks are tracking at the moment. Pretty good day to close out, the final trading week of the year, effectively, the final full one anyway. We've got the Hang Seng Index better by about 1/5% there. Stocks in South Korea performing particularly well, better by 1.7%. We did have some numbers out of China a little bit earlier for the 1- and 5-year loan prime rate. Those were both unchanged. A little bit later on, we're going to have CPI numbers for the month of November out of Hong Kong as well. Now, we've got an ongoing rally happening in gold, fueled in part by ongoing geopolitical tensions linked to what's happening with the oil price as well. As we were discussing earlier, the US is now in pursuit of a third oil tanker, this one the Bella 1, which the US accuses of sailing under a false flag. That blockade off the coast of Venezuela intensifying, and it will soon start creating problems for Venezuela, as if it's unable to load tankers, oil's going to start piling up onshore, potentially leading to shuttering of some wells. Still to come, Chinese chip maker More Threads unveils a new generation chip lineup. It's a fresh challenge to NVIDIA. We'll have details of that story next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. You're watching Insight. Here's a quick look at where markets stand. We do have China going on a lunch break. Japan is coming back online as well. So we're seeing pretty much a strong risk-on sentiment across the region at the moment. The Nikkei better by almost 2% at the moment. We've got Chinese stocks doing pretty well as well. The CSI 300 better by 0.8%. The Hang Seng also moving higher by 1/3%. If we take a look at the yen there towards the bottom of your screen, 157.45, pretty weak. It has been range-bound, but we did hear from the Japanese Finance Minister Katayama signaling concern over rapid one-sided FX movements. And this was after we didn't also get a lot of guidance from Governor Ueda on Friday about where the neutral rate in Japan lies after we had that 25 basis point rate increase, which pretty much everybody was expecting. Now, a lot of the action happening in the precious metal space again. Gold has captured a fresh record high, right now trading $4,389 an ounce, and is taking other precious metals along for the ride as well. Silver advancing also just shy of $69 an ounce now, and even platinum performing pretty well, advancing an 8th straight session, and it's cracked 2,000 an ounce for the first time since 2008. Well, China's More Threads has introduced a new generation of chips aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's get to our China correspondent, Min Min Lo, with more on this. So, Min Min, tell us about More Threads' new chip and how it compares with NVIDIA's product.
Yeah, so More Threads is launching 2 new chips, the Lushan and Huashan, which are named after Chinese mountains. The Huashan chips are meant for AI inferencing and training, and the CEO says that it is better than NVIDIA's Hopper series chips, including the H100 and H200, and that it's closing the gap with the current Blackwell architecture. So this is pretty significant because if China already can do better than the H200, that eliminates the need for Chinese companies to buy from NVIDIA, even after the company had gotten that approval from the Trump administration to sell to China recently. More Threads also unveiled a new generation of chips for graphics processing. That's the Lushan chips, which it says is able to perform 15 times better than before. It also unveiled this GPU architecture that could enable the linkage of 100,000 chips in a supercomputing cluster that is supposed to be 10 times more energy efficient and have 50% increase in computing capacity as well.
So what are the implications for NVIDIA in China here? Because, Jensen Huang's already said that he doesn't expect to sell anything there. Is that going to be the case for the foreseeable future after these developments?
Well, it really depends because the Trump administration has given the green light for NVIDIA to sell to China. But the problem is the Chinese government hasn't really provided a clear guidance to its own companies whether or not they will be allowed to buy from the U.S. because the previous round, the H20 chips, the Chinese government had basically told its companies not to buy. We know the Chinese government has been meeting with Chinese tech companies to assess their need for the H200 chips and asking them to justify in some sense why they want to buy from NVIDIA as opposed to homegrown chips. And I think More Threads, by offering something that is equally advanced or if not better than the H200, it really reduces the chance of China approving the H200 for purchase in China. So question is what is next and whether or not NVIDIA would push Trump to allow for the Blackwell series of chips to be sold in China, but that we know has gotten quite a bit of pushback from U.S. lawmakers so far.
Yeah, there's also getting pushback in terms of listing some of these names as, relating to military production in China. What are House Republicans saying about this?
That's right. So Republican lawmakers have been lobbying the U.S. government to add 19 new companies to a Pentagon list that would list these companies as Chinese military companies. So among them include DeepSeek, the robotics firm Unitree, some of the firms that you see on the board there. Wuxi is a pharma company, Xiaomi as well, RoboSense. So these are pretty wide-ranging sectors that are affected. The implication is the Department of Defense will not be able to start new contracts or renew contracts with these companies. But for other regular companies, it also sends a signal, right, a warning signal for them about the risk of associating or working with some of these companies. So certainly this is something that could worsen ties between U.S. and China, and it's very hard to get off this list because we know that Hesai, for example, the Chinese LiDAR company, has been one of those that had sued the Pentagon for including it on the list, and it claims that it does not have relationship with the Chinese military. It successfully got off the list, but then it was immediately relisted, and that shows you the stickiness of the label and how hard it is to really challenge the Pentagon on this.
All right, Bloomberg's China correspondent Min Min Lo there. Let's get some more market insights from Ed Gomez, CIO of SGMC Capital, a multi-family office. Ed, thanks so much for joining us, and I do want to start on some of these themes in the tech and AI space. First off, we always mention AI in the same breath as a potential bubble. Can this rally continue? Are we in bubble territory? Can you give us the case for each potential scenario, and which do you believe?
So the way we look at bubbles, clearly there is a lot of enthusiasm for anything which is AI, and that in itself is problematic. At the bottom of the markets in 2022, 2023, people were talking about AI, but not too many people were interested in buying because you had just gotten into a massive decline in the NASDAQ of around 30%. Today, you say AI and everyone's willing to throw money at almost any project. So clearly, projects which will fund fairly weak technologies, sometimes borderline fraud. Investors have to be very, very clear about what they're funding. But when you have companies which are delivering very, very solid products, services, and have a very clear sight into what the future will hold, not just for themselves, but the overall wave of technologies, then yes, valuations could get stretched, but most of these companies will bounce back from any kind of sell-off.
There's also a monumental amount of spending going on, and we have a chart on the Bloomberg terminal that illustrates this. Hyperscalers are seen spending another $500 billion in capex over the next 12 months. That's $500 billion. Okay, they're building out, but do you have any concerns about this? Some of the circular deal making that sometimes seems to be involved, or questions about where all of this money is coming from?
I think, before I answer those, what exactly is this going to fund? So yes, it is going to fund physical infrastructure. There are going to be chips, there are going to be data centers, there are going to be cooling solutions which are put in place. And all of those obviously have a limited life cycle. You also have the entire debate about, whether these are being depreciated or amortized appropriately or not. And, that it does require some amount of thought. But at the same time, a lot of this is powering, and if you look at the OpenAI information which has come out just overnight, they're willing and able to sell more and more paid licenses, whether it's in the enterprise space or in the personal commercial space. So you have a lot of take-up for this, and a lot of this is powering, massive amounts of intelligence creation as well. If you look at what DeepMind is doing, and the entire team at Google, their ability to fold proteins and crack problems which have been intractable for decades is just a testament to the power of these technologies. So clearly there's a build-out which happens, but at the same time there's a lot of positive development in terms of deployment of the technologies as well.
When you're looking at allocating investment to this space, in geographical terms, where do you look? Do you prefer the US names, or are you looking more towards Asia, Japan, Korea, and China as well?
The bulk in the US, just for the simple reason that the information flow from American companies, disclosures, CEOs speaking to analysts, as well as CEOs speaking to the media broadly, it does provide a much richer backdrop on which to base estimates or to base analysis. When you're looking at Japan, South Korea, and Taiwan, I think they're extremely interesting areas, and we do have some exposure to those names as well. But the bulk of our investments are currently in the U.S.
You mentioned transparency there, and I brought this up with Min Min a moment ago in terms of Jensen Huang's remarks around NVIDIA sales into China. I mean, he's not expecting any. Do you consider that that's going to continue to be the case for the foreseeable future?
In the short term, yes, absolutely. Jensen would love to sell to China. He's been making a very, very strong case about how the U.S. gets stronger by allowing NVIDIA technologies to proliferate. So clearly, it's a large market for NVIDIA. It was until the geopolitical problems started emerging. But at the same time, there's a lot of take-up of NVIDIA's technologies, regardless of whether the China piece kicks in or not. Our belief is that NVIDIA is, and Jensen Huang says this himself, you're looking at companies producing chips, which are great, but you also need to now consider NVIDIA as an AI factory and factory equipment manufacturer rather than just chip maker, because the entire ecosystem has gotten so complex. In terms of connecting data centers, in terms of connecting chips. We were talking about Micron earlier as well, in terms of the ability to connect and deliver the high bandwidth memory which is needed. So it's not just one product, it's not just one chip, it's the entire ecosystem. And let's not forget CUDA, which is their software coding platform, which allows optimizations to be made on those chips. So not really concerned about NVIDIA and demand at that point in time.
You mentioned, just to get back to your point about transparency, yes, the same level of transparency isn't there with these Chinese chip makers as you enjoy in the United States. But what is your outlook for more threads, Cambricon, DeepSeek, and others? I mean, particularly in mind that the US keeps looking to try and to squeeze these Chinese chip makers on national security grounds.
Absolutely. It's a massive minefield, just the geopolitics of it all. And, AI chips is the current bugbear. Earlier it used to be soybeans, or earlier it used to be some other kind of product. But we don't see this go away for a long time. Donald Trump has his style and his agenda. The Chinese Communist Party and Xi Jinping have their agenda. We don't take sides on that. Each country is always going to be pushing for its own advantages. So, the competition overall for consumers at the end of the day is clearly great, because what that means is you have, as you mentioned, DeepSeek as an open source models, which puts pricing pressure on all kinds of other proprietary model owners and developers. So that's great news for consumers. It also means it's great news for proliferation of these technologies across the economy. So it's not just technologists and technology companies which are using this. You have manufacturing companies, eventually, which will be able to squeeze out efficiencies in their entire supply chain or operations on the back of strong and powerful models. So, we look at that, and the competition is a massively positive development.
All right, Ed Gomez, CIO of SGMC Capital, is sticking around. And when we come back, we will get his insights on emerging markets like India, which has become one of the calmest stock markets in the world. Keep it here with us. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back. You're watching Insight. Let's take a look at how Indian markets are tracking at the open. Seeing a risk on sentiment here as well. The Sensex better by 0.4% in the early going, tracking much of what we've seen around some of the other major Asian markets this Monday. Also, the rupee back below 90 against the greenback. We did see the Reserve Bank of India rather enthusiastically getting involved in FX markets, and the RBI is going to be holding a $1 trillion rupee two-day variable rate repo auction starting today to inject liquidity as well. Right, let's get back to Ed Gomez, CIO of SGMC Capital, still with us. Ed, thanks for waiting. And I do want to start on some of that rupee strength, relatively speaking, or really dollar weakness is what I want to talk about, because we've got some of the big houses, JP Morgan, Morgan Stanley among them, seeing a lot of optimism for emerging markets in 2026 due to a weak greenback. Are you part of that club?
The long EM trade has been on, and there is some amount of correlation with the overall tech trade. And you do the correlation versus the Nasdaq has been pretty strong. But in general, just the demographics of countries like India are so positive that the government just needs to put in place the effective infrastructure which allows the rest of the country to go about just doing business, and that's what they're doing. So yes, we're very comfortable with Southeast Asia demographics as well as India. Those are markets that we really are building on positions as we build as time goes on.
That said, though, we've seen a lot of foreign outflows leaving India, certainly towards the last quarter of this year. Why is that happening, considering, as you say, that the longer-term growth story is a rather compelling one?
I guess some of it is just rebalancing to the extent that global investors, are also getting sucked into what might just be the sexiest trade out there, which is AI, right? So to the extent that India is a more infrastructure play, more financial markets play, a more consumer-related play, yes, there is a very, very strong component of technology. There's a lot of economic activity which is in the technology sector as well, but that doesn't necessarily get captured in the markets. So we'd expect that some amount of those outflows would be related to rebalancing of portfolios, into like I said, the sexier part of the overall market story as of right now.
So when you're looking across emerging Asia in 2026, which market offers the most compelling growth story to you?
India for sure, and some of the recent elements of news which have come through about the hyperscalers investing hundreds of millions of dollars into India in terms of offices and hiring. That's going to be a big driver. You also have the recent news on the insurance companies being allowed to operate 100% owned entities out of India. It was earlier 74%. Already had a fair amount of control, but now it's like full control. That's going to drive investment. Again, like we mentioned, the demographics of the country will dictate that insurance is going to be a massive need in the coming years as the middle class just grows and delivers more economic prosperity. So that's going to be another area which is going to be very, very strong going forward. The banks and the financial system, just in terms of the credit lending, just given the propensity of the consumer to borrow money to buy, whether it's automobiles or even housing, is going to deliver massive amounts of economic growth as well. So we're looking at more less in the tech sector in these markets. We like Indonesia as well, so that's another market which is a strong favorite.
And what's your approach to China as well? Because, we discussed the positive story around AI in China, but at the same time, the country's still grappling with a serious deflation problem and an ongoing rolling problem in the property market as well. So how do you approach China as a market?
We tend to stick with some of the safer names, and we also tend to play the indices. We don't want to get involved at this point in time in terms of trying to find, the best stock in each sector. We're happy to play the index futures, options on the index futures, because that can give us the upside, without getting into micro name risks, which suddenly pop out of nowhere. With China, equally optimistic. To the extent that the government focuses on a pro-business stance, we think the country can deliver, phenomenal gains for investors. But just at this point of time, we just prefer playing the indexes, for portfolios.
All right, Ed Gomez, CIO of SGMC Capital. Thanks so much for joining us today with your insights. Well, the Adani Group is planning to invest more than $11 billion in its airports business by 2030. It's looking to bid for nearly a dozen new terminals, upgrade infrastructure and expand into aircraft maintenance as well. Let's bring in Bloomberg Conglomerate's media and telecom reporter, PR Sanjay, for more. So, PR, what are the details of this planned investment by Adani in India's airports?
So, Adani Airport Holding, the holding company of airport conglomerate, has huge plans. They want to invest at least $11 billion in next 5 years. And there are a lot of details. In fact, they want to successfully launch the new Navi Mumbai International Airport, which will be taking off. The first commercial flight will be taking off from December 25th, the Christmas day. And they also want to go for an IPO between 2027 to 28. And this IPO is relying to three things. One is successful commercial operation of Navi Mumbai International Airport and self-sufficient operations of the airport business as itself. And they also want to complete the city side development, including Aerotropolis, which will be giving more focus on retail, hospitality, etc. So that's one. And they are also looking at MRO opportunities to help the entire aviation landscape of India. And they hinted that they would want to get into the aircraft manufacturing opportunity. They say that it is very early. They are not actually tied up with any partners, but it will be done through a partnership model. It is like slightly early position at this time, but they're hugely pinning hopes on airport operations, and airports would be the unit which will be demerged out of the conglomerate and will be taking wings of IPO.
So tell us about some of the features that will be being worked on as well, because this would really look to take India's airport infrastructure, well, propel it well into the future.
Well, I think that's a great perspective, because what Navi Mumbai International Airport would do is it will be, first of all, taking a lot of stress from the Mumbai International Airport. And India, as an Indian aviation, very badly need a hub, because it's a growing market, but it doesn't have a proper hub. So Adani would look at creating a hub with an anchor airline. For example, on Air India or Indigo, etc., could be an anchor airline. They would want to make Navi Mumbai International as an airport, because Mumbai Airport was always operating out of a 1.5 runway. Now Navi Mumbai will be having 2 runways, and have already appointed a consultant for the 3rd runway, which means this Navi Mumbai International Airport will be like a very key critical milestone for not for just Adani, for Indian aviation as well, considering the plans and considering the Aerotropolis and IPO and financing plans what we are picking up right now.
Pia, can you also tell us about Adani's plans to expand in nuclear energy as well?
Oh, that's an interesting thing. That is another foray from the port to power conglomerate. They want to build small modular reactors. Adani's would be first among the private players which would be getting into this new landscape, which government has most recently okayed it. But it's Adani doesn't have that kind of a capability to run the plant. So what we are picking, what sources are telling us, India's Nuclear Power Corporation of India Limited would be running. They will be the operator, and the research wing of Department of Atomic Energy, Baba Atomic Research Center, would be designing these small modular reactors. And at the end of the day, Adani's might be getting some flexibility to sell the power generated out of this ambitious small modular reactor atomic plants.
Yep. All right, Bloomberg Conglomerate's media and telecom reporter PR Sanjay there in Mumbai. Still to come, Andrew Collier will share his views on China's property crisis as embattled developer Vanke enters a critical day, just hours now to avoid default. We'll also get the outlook for India's real estate markets as well. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what when we first, I'll give you a really prime example, the film cameras. when you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
Welcome back. You're watching Insight. Let's take a look at how Asian markets are performing at the moment. Pretty well. A lot of green on the screen. Looks like we're heading into a year-end rally. The only thing that's a little softer is the Japanese yen, but we see the Nikkei having a good day, better by 2%. Even the Indian rupee strengthening, back below 90 against the dollar. Precious metals in particular having a moment. Gold and silver both hitting fresh records. Silver now not far off $70 an ounce. Crude prices rising, as well as we have the United States continuing to pursue a third tanker off the coast of Venezuela that it accuses of sailing under a false flag. Well, it is a pivotal day for Chinese developer China Vanke as the grace period for its December 15 bond payment deadline expires. If creditors don't agree to an extension, Vanke could be tipped into default. Let's get to our managing editor for Asia Equities now, Lian Ting Tu. So, Lian Ting, when do we expect to have the results of a vote?
Yeah, the vote already should be in by 10 o'clock Hong Kong time, but actually the filing will come out much later in the day because the votes will be tallied. And so we expect something after 4 p.m. Hong Kong market close, but it could come out late in the day. So we're all prepared for that. But overall, the whole vote is really about whether to grant Vanke a bit more time to forestall a default.
So what's the expectation of that? Is Vanke going to get the time that it's looking for, and how likely is a default? And if there is a default, what's the fallout going to be?
Yeah, specifically, as you said, there's going to be a vote on whether to allow Vanke to delay the bond payment on that 2 billion yuan bond by 12 months, or to give it until January 28th to renegotiate terms with its creditors. So overall, if Vanke ends today without a deal or an agreement to extend the bond or no payment, then really, I think bondholders can potentially call default default on Vanke. And if there's indeed a default, I think it's just going to be a further shakeup in sentiment among investors in China's real estate sector, because Vanke is a state-backed real estate developer, and it used to be the biggest in China. And Shenzhen Metro, its a big state backer, used to really committed to backing Vanke, but suddenly halfway it reduced its commitment. So that is sending a very strong signal among investors whether those state-backed real estate developers really has that state backing when they really need it.
How much could bondholders and creditors potentially lose here?
Yeah, it could be a lot. If you look at the bond prices, those onshore bonds are already trading at around 20 yuan. So that is a drop from about 80 yuan just about 2 months ago. So you can see people are already pricing in about 20% return. And Vanke, in addition to a lot of bonds, it also has a lot of bank loans, which are actually pretty much backed by its property assets. So bank holders obviously will be a little bit more senior to bondholders. But yeah, if you look at bond prices, it's really not trading with much value left.
All right, Bloomberg Managing Editor for Asia Equities, Lian Ting Tu, as we await the publication of that vote. Our next guest has been closely watching the China property crisis, including Vanke's situation and the lack of bailouts. Let's get insights now from Andrew Collier, Senior Fellow at the Harvard Kennedy School. Andrew, if you were a betting man, how would you say that today's vote is going to go? And is Vanke going to get more time to come up with the goods on that bond?
My guess is that they're not going to win on this vote. I think bondholders have decided that there's no point in extending and pretending anymore, that they might as well take the hit now and see if they can restructure the debt and get something out of it, rather than letting this sort of foolish scenario continue. So the real question is, what's the attitude of the central government? That's the question. The central government appears to have taken the view that it's up to the provinces to handle all these problems. And given the lack of revenue in the provinces from the collapse in land sales, the local governments in Guangzhou and elsewhere, and also companies like Shenzhen Metro, are basically saying, look, we're out of money, so we just cannot help anymore.
So just to be clear, you're expecting to hear of a default this afternoon?
Yes, I think they'll probably be driven into default. Now, it's possible they'll try to figure out some sort of compromise, but I don't quite see what that is, because most of, as Lian Ting probably knows well, most of their assets are tied up with other commitments, and so there's a limit to what they can really offer to bondholders at this point.
Is default in some ways potentially the best option here? Because Bloomberg opinion columnist Xu Liren was writing last week that it'd be better just to get this over with rather than eventually all the assets just shrink away to nothing.
Well, I'm concerned with the long-term future of the Chinese economy based upon the collapse of the property market. I've just finished a book, and essentially the downturn is taking a 31% hit in GDP. And this kind of scenario, even if they're not listed companies with bonds, is occurring all across the country, where there's defaults of all sorts of natures, and then or non-payment of goods. And I'm getting concerned both about the potential for unrest in parts of the country where they've run out of money, and also what's the impact on the banks. Most people, analysts, dismiss that problem because they say that loans are less than 10% of the loan book, property loans. But they're not factoring in other parts that are related to property, including the local government financing vehicles, which have at least $9 trillion of debt, which is about 12.5% of GDP. So there's a huge problem that the central government is washing its hands of, and I think they're going to be in an awkward position in the future.
Yeah, I want to touch on the social unrest question in a moment, because that's an interesting point that you raise. But in terms of, let's assume you're correct and there is a default later today, what is the contagion risk? Do you feel that next week we might be seeing stories about banks being in trouble?
Well, that's the key question. Now, the central government has the ability to slow roll defaults in the banking system. They've been doing this for several decades. So they will step in quietly, and there may be, in some cases, for a local bank, there might be some sort of merger, or for a state-owned bank like the Bank of China, where I used to work, there could be something where they delay payments within their system. So that contagion risk won't be like the United States financial crisis, which rolled through in a matter of basically months and then, squashed mortgage holders and then moved on. That's not the way it works in China. So the control of the banking system will be less of a short-term contagion risk, but more of a steady downturn.
Yeah, banks obviously too big to fail in this case, but what isn't too big to fail in the wake of contagion risk from Ivanka default?
Well, you've got, obviously Shenzhen Metro is in trouble. Shenzhen Metro is maybe a state-owned firm, but it's a local state-owned firm, and I think it's got private interests in it. So it's not really going to be defended by the Beijing. It'll be defended, if anything, by the Guangdong government or the Shenzhen government, both of which have 10 or 15% annual decreases in revenue from the collapse of land sales. So they're not really going to be interested in bailing out Shenzhen Metro. So then that's going to affect a lot of other people. And, eventually, remember in the 90s, with the SOE restructuring, 60 million people were made unemployed. That was a huge number, and they never really got their jobs back. We're starting to see that kind of contagion in terms of layoffs throughout the economy, but it's just not being reported, and it's all being quietly buried away.
How difficult is it for Chinese property developers to raise money at the moment in this environment?
Well, it's near impossible. Because basically everybody knows that the money will be used to pay back previous debts, and there's not a lot of construction activity. So I don't think a lot of people, I met a developer here in Hong Kong with mainland assets, and they were sort of saying, well, we're just trying to figure out when to sell. So I don't see a lot of capital raising occurring. Certainly with the international markets, I don't see a lot of that going on.
Do you think there's any end in sight for these property market troubles? Because it feels as if it's been circling the drain for an awfully long time now.
It has been circling the drain for a long time. Even since the construction boom 15 years ago when I used to run around China, I kept thinking, what's the demand for all this? You've had something like a $14 trillion drop in valuations, at least for the property market as a whole. Now, at some point, they'll get down to a level from, the peak was 1.6 trillion billion square meters of construction around 2020, and they have to get down to somewhere like 500 or 600 million square meters, but nobody really knows when the bottom is. But by 2026, you could see the decline slowing down. But we're still seeing a 14% annual drop in investment by the property sector, which is pretty significant.
Well, I said I'd like to circle back to the social unrest question. This feels like a good time to do it because, of course, the property market very closely linked to consumption, consumer sentiments, personal wealth as well. If things do start to get worse following Ivanka default, what do you anticipate is going to happen?
Well, Beijing so far, as I said, has steered clear and doesn't believe that there's that risk. Otherwise, they would have stepped in. I was told that to bail out Shenzhen Metro, the Shenzhen government cut the salaries of its workers in order to save cash for the bailouts. So that's an example in one of China's wealthier cities. Obviously, if you got laid off by a state firm and you owned your apartment for 20 years, you had a good 10 years of gains, so you're still in the money on those. So certain parts of the country, their attitude is, okay, it's bad, but we'll live. But these layoffs are in across different provinces, and they can be buried within the local governments and their security forces. So up to a certain point, you can have significant pain that's just not being reported or dealt with by Beijing.
So we've been talking a lot today and on other shows previously about the bright hope offered by AI investment and how China's tech sector is performing. Would you expect that this might be a way out of the mess?
Well, certainly there are some great companies that have been developed under the very, very intensive state investment schemes and EVs and DeepSeek and so forth. However, according to the official data, tech as a whole is about 9 or 10% of GDP, and property at its peak was 31% of GDP, including infrastructure. So it's questionable how much that can replace that. And the second issue is let's say you have this booming EV sector, which you do. First of all, you've wasted a lot of money to get there. The estimate is around $200 or $300 billion. And second of all, that depends on exports. And you could have increases in Africa and Southeast Asia, but the big markets in the U.S. and Europe are obviously getting more protectionist. So I'm skeptical that they're going to be able to export the way Japan did basically in the 90s. And Japan also was able to move capital to the United States and build auto factories. That's not going to happen under the current regime in the United States. So it's pretty tough to see how tech can really replace property. I mean, the main thing is you've got to start essentially defunding the state sector and letting private companies start to develop their own internal markets and rebalance to the consumer, which is not happening.
Well, if it's tough to see how tech can replace property, I've got an even tougher proposition for you. I mean, Chinese policymakers have long been wanting to rebalance the economy, more heavily favoured in terms of domestic consumption. Can that be achieved as long as the property market is in such a parlous state?
Well, that's the first problem. I mean, there's a shortage of money and tax revenue for local governments. And the second problem is you're sitting there in Beijing and you've got all these elites who are tied up to the state system. You've got huge ministries, you've got huge state banks, and you tell them, look, we're going to start defunding you. Imagine how that would go over. It's not going to go over well. So, and I think Xi Jinping believes in state-directed investment. So he's perfectly happy to double down on funding chips and AI and other forms of technology. So I don't see any chance of that happening, even though the Central Economic Work Report claimed that they were going to try to rebalance. I just see no evidence of it yet.
All right, Andrew Collier, Senior Fellow at Harvard Kennedy School. Thanks so much for joining us today. Now, in other news, former TikTok CEO Kevin Myers says he's confident the US majority ownership plan for the social media platform will unfold seamlessly. Meyer also told us it's a show of faith in Oracle, which is among the companies leading the joint venture.
I think it works operationally. I think having a company like Oracle, a very trusted company run by Larry Ellison, who's a trustworthy figure, obviously, being in the center, in charge of looking after and securing that U.S. data, that's crucial. And I think they're licensing the algorithm from China, so ByteDance will still own the code, but I do think this license will take another instance of the algorithm, all the code, put on Oracle servers, and then trained on the U.S. data that Oracle alone has access to. So I think it's going to end up having a vastly different feed and sort of content algorithm than you'll see around the world. So I think that will work. And I think that ByteDance will, is now below 20% ownership, 19.9% ownership. That's a substantial difference from status quo. And I do think that ByteDance has an operational role commercializing TikTok, selling ads, making sure e-commerce works and all the other commercialization factors. But really, it will be run by a U.S. board and it would be a separate U.S. company.
Kevin,
I think it works.
It works, but the proof is in the pudding as to whether the algorithm is as powerful. How do you see, as someone who's in charge of content development and wanting to get your content out there in a marketing capacity, do you have confidence that it will be as good without ByteDance as heavily involved?
Well, I think it probably will be. There's a lot of intricacies and a lot of AI, that's the word of the day, in that code. And I think that code base being kept intact is crucial. I think had they tried to recreate a new algorithm from scratch because of security concerns, that would have been exceedingly difficult. That has taken years and years and thousands of engineers in China to develop this very sophisticated AI recommendation engine. So the fact that they'll have access to that, it will remain interoperable with all the other TikTok instances around the world. I think that matters quite a bit. And I think just retraining that same code base, that same algorithm with US data should provide a very robust solution. I think it will be seamless.
That's former TikTok CEO Kevin Myers speaking there with Bloomberg's Caroline Hyde. Up next, Seven & I's US arm faces pressure from the top to shape up in 2026 as it gears up for an IPO. We'll have the details next. This is Bloomberg.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stradwatts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Welcome back. You're watching Insight. 7-Eleven operator 7&I is pressing its US convenience stores business to deliver a faster turnaround as the retailer seeks a public listing of the unit. For more, let's get to Bloomberg senior editor Reed Stevenson in Tokyo. So, Reed, tell us, Stephen Dacus wants improved performance ahead of this potential IPO. What does improved performance look like? What's he chasing here?
Yeah, indeed. I mean, the whole point here is to try and unlock value ahead of, offering a listing or new shares to investors. Essentially, what he's trying to do is improve margins as well as sales in an environment that's pretty tough for all retailers in the U.S. Inflation is really hitting people's wallets. And of course, for a while, 7&I had chased a scale there with the acquisition of Speedway and Sunoco gasoline stations. But now he's really sort of pushing this message where they're trying to do several things. Number one is improving the mix of private label brands, which have higher profit margins. Two is larger format stores, focusing on food as well. Three, cutting costs. And then finally, many of these outlets are in fact gasoline stations or petrol stations. And so essentially try to cut out costs because they're effectively buying at the end of the downstream market, trying to go upstream and capture some of the profits there as well. And so that's really just a message he's putting forth, to investors as well as probably the company itself as it operates in the U.S.
So in terms of pursuing some of those goals, how challenging is it in the current economic environment?
Yeah, it's no easy feat. I mean, you have competition coming from really all ends of the spectrum. When you're talking about 7-Eleven outlets, a lot of the focus is now shifting toward food. That means you're competing for essentially against fast food outlets there. And then on the other end, a lot of consumers are going to like dollar stores and opting to buy goods there. And so really it's about delivering convenience but also value as well as food. Something that obviously 7&I has done extremely well here in Japan, and what they're really trying to do is do that in the US as well.
So can you tell us a little bit about the timeline for this potential IPO and any factors that could either bring that forward or push it back?
Yeah, so the second half of 2026 is what the company has indicated. Now, when we spoke with Stephen Dacus, he said they're not on a schedule and they want to see improvements in the performance first before they embark on an initial public offering. So we're just going to have to see how things play out for the company in North America.
All right, Bloomberg senior editor Reed Stevenson there in Tokyo. Let's take a look at how US futures are tracking at the moment. We are, of course, seeing somewhat of a decent rally in the Asia Pacific at the moment. So we've got US futures currently, if you just bear with me for a moment, E-mini futures are looking a little bit better to the tune of about 0.25%. NASDAQ futures also pointing higher as well. Dollar weakness continues to emerge as a theme after we did have the Fed ease very much as expected at its last meeting. January meeting very much up in the air, and of course that could be clouded somewhat by another potential government shutdown at the end of the month, which might lead to some more of those Swiss cheese data reports that we were talking about last week. However, for the moment, looks like we're heading towards a Santa Claus rally in the US as well. Well, Amazon Robotics says it's preparing its workforce for how tech and AI will impact hiring and career paths. Its chief technologist told Bloomberg that the company is already using physical AI and robotics at scale to help employees.
When we think about robotics and you think robotics and physical AI at scale, when you ship millions and millions every day, just 1% of exception handling can kind of eat your lunch. So any tools that we have to help us with the exception handling, maybe one of the systems is not picking up a particular object right. So that learning needs to be propagated through our other manipulation systems. Or maybe a mobility system is having some bottlenecks because of the way the inventory is stored inside of the building. People have really good skills of critical reasoning and critical thinking and using common sense. So tools that allow them to understand the situation better, perceive their environment better through the use of robotics, and then have truly physical agents to help with that in concert with our employees is going to allow us to deal with all the exceptions that we see, every day, especially at peak.
Hey, Ty, just got about a minute left here, and I know we've talked about this with you before, and I think it's a fair question. You guys have addressed it about the impact on your workforce, and I wonder if it's smarter to think about maybe not that what you guys are doing in terms of automation, or other companies for that matter, that it means doing away with workers, but maybe it means that you will have to hire fewer workers in the future. Is that fair?
Well, first of all, Carol, any question you ask is fair. So I think it is fair to always ask those questions, and we should always kind of, have the mindset of people first, and which we do inside of Amazon. So what are we doing specifically for our employees? And I'm really proud of this. We're building better machines for them. We're listening to them. We're iterating on our designs. We're rolling out a tool set for them to use that every day at scale, a scale that's almost unimaginable when it comes to what we've done inside of robotics. We're upskilling them. We have a $2.5 billion pledge that we call Future Ready to prepare 50 million people for how technology will impact and change not only the nature of work, but also what their everyday lives. And we're also creating a safer environment with our robotics, eliminating the repetitive, the menial, the mundane, allowing machines to do the heavy lifting and the repetitive actions, and allowing people to work with them in order to use this beautiful thing here.
Still to come, we'll take a deep dive into India's property markets as investments hit a fresh record. JLL and Anand Rathi Private Wealth Management are going to join us for that discussion next. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back. You're watching Insight. The Indian government has pushed through far-reaching policy reforms in the final parliamentary session of the year, and that's as Prime Minister Narendra Modi seeks to bolster the economy in the face of trade headwinds. For more, let's bring in South Asia political reporter Swati Gupta. So, Swati, we've heard about some of these changes and the involves of loosening up the nuclear industry, the insurance industry as well. Can you give us the details on some of the announcements and others?
Yeah, so India had its parliament session this month, and they pushed through quite a few bills, including the one which opens up the nuclear sector to private firms and removing some of the liability clauses that it has had for years, which have made it very difficult for investment to come through in that sector. And the second bill that they pushed through was allowing 100% foreign investment for insurance companies. So now global firms, which were earlier capped at 74%, can completely own an insurance company. So that will, both these things will allow hundreds of billions of dollars to flow into the Indian market and actually boost the economy, which is much needed at this point.
Yeah, so why the urgency? These are being pushed through in a very short time span.
So India has not had a very good start to the year. It is still in very protracted negotiations with the US on a trade deal. And it is right now under 50% tariffs, 25% of which is a penalty imposed by President Donald Trump for importing Russian oil. So this will lessen a little bit of the hurt that India is feeling. In addition, the government has also made a few other changes to its tax regulations, as well as reformed some of the labor codes that we have. So making things a little bit easier, improving the ease for doing business in India, and also removing a little bit of the burden on the taxpayer.
Can you give us an update on the progress, if any, on trade talks with the United States? And in the absence of that, India has signed a number of other free trade agreements this year, right?
Yeah, so actually there is not a really big update on the US-India trade talks. They are ongoing, as are the trade talks with the European Union. But India has been pushing for a little bit of diversification. So they are right now, they've just signed a trade deal with Oman, and there is a deal with New Zealand that is going to be announced soon. But at the moment, it doesn't look like we're going to have a trade deal with the US in this year. So this will definitely now slip into the new year.
All right, South Asia political reporter Swati Gupta there. Let's take a look at how Indian markets are tracking, broadly following the risk-on sentiment that we're seeing across the Asia-Pacific at the moment. We've got the benchmark rising in early trade. Gains in private banks and Infosys. We see the bank index better by about 0.5%, but Infosys is leading the gains in the Nifty 50, up more than 2%. So we've got almost all of the stocks on the index are better at the moment. Well, India's stock market has become one of the calmest in the world, prompting a rethink of strategies among players in the derivative space. Bloomberg's Savio Shetty joins us with more from Mumbai. So, Savio, why has India's stock market remained relatively stable? And this is in spite of the heightened geopolitical tensions and also, as Swati was saying, a long delay on this US trade deal.
Hi, Paul. Thank you for having me. This is on regards of two things. One is the amount of FII selling that we've had this year. Foreign investors have sold, but that has been almost seamlessly swallowed in by domestic investors. We've had almost $17 billion sold by FIIs, and domestic investors have pumped in almost $80 billion. India doesn't seem to be the market anymore that gets affected by big, strong news. We've had geopolitical tensions. We've also had the ongoing trade deal, but yet it seems that we don't move more than 1.5% on either side. The current streak is also quite long. I mean, it's almost the longest since 2023. A part of it has also got to do with the number of option contracts that have been culled. Weekly contracts by the regulator have been culled, and currently we have only 2 of them in the market. So I think it's a combination of like some kind of maturity in the market and a lot of option contracts being culled.
So which trading strategies have been most affected by these market conditions, and how are traders repositioning in response?
Yes, that's an excellent question. Ideally, any strategy that has to do with selling of volatility, because volatility is already so suppressed, would lead to dire losses. So you would, I mean, previously you would have volatility at 13-14%, you would have a short seller coming and selling in. With volatility at 10 and at times even 9.5, most of the volatility selling strategies have now gone out of the window. We may see, I mean, in our talks with experts, we may see a return of trend following strategies where you have a sustained trend for more than 2-3 months that can take place. But in general, people are moving more into options buying rather than option selling, because in options buying, if you have low volatility, that tends to make it a very profitable entry point.
Well, we've seen a regulatory crackdown from SEBI. How has that impacted options trading volume?
There has been a huge impact. We've had options daily average turnover in notional falling by almost 35%. This is the first time it's ever happened since data that goes back to 2017. It's clear that India's option market is no longer what it was, say, a couple of years ago, or even for that matter last year. But we've seen some kind of pickup in the last 3 to 4 months. All of this hinges now on what happens to weekly options contract. We've had the regulators saying that there will be a consultation paper that comes in soon. The drift seems to be that weekly options are here to stay for now, but only time will say what happens in that regard.
All right, Bloomberg's India Equities option reporter Savio Shetty there. A new report from JLL says India's real estate sector is expected to reach an unprecedented milestone in 2025, with institutional investments soaring to more than $10 billion. That is a second consecutive year of record performance. Domestic institutional investors make up more than half of the share, while private equity players fuel the momentum with a 30% contribution. Well, let's get some more on India's property investment outlook with JLL's head of India Capital Markets, Lata Pillai. Also joining us is Shanali Rawal, International Business Head at Anand Rathi Private Wealth Management. Lata, I'd like to start with you and talking about the report you just released. A lot of records broken. Can you just run us through some of the highlights, the things that stood out for you?
Hi, Paul. Thank you for having me. I guess the fact that from the last 4 or 5 years, barring last year, I guess on an average, the investments, foreign investments or institutional investments into the country on real estate hovered around $4.5 to $5 billion. Last year broke the trend at around more than $8 billion. And this year, I think we've crossed it and reached $10.4 billion. And I think what is really interesting this year has been the emergence of the domestic institutional investment, which is more than 50% of the investment that has happened in the country. A few interesting highlights here would be the fact that bulk of the investment is in the form of equity and also in core assets. So, and office remains the dominant sector where the investment has really come in.
So office remains the most dominant sector. Can you tell us about how some of those other sectors are performing?
Always residential used to be the preferred sector that we saw investments coming into. Indian domestic residential business is built to sale business, and you had a lot of investors looking at coming in for the development piece. You also had a bunch of public market issuances made by domestic developers, which actually increased the participation on the QIP side. And last year, that's what we saw a lot of it happening. This year, interestingly, there was takers for the office REIT stock, which is basically the public market platform for office assets. And this was what was really found a lot of investment interest. The other sector which saw interest would be the retail side. Again, there was a platform on a REIT platform on retail assets, and one saw participation in that asset class as well. The other one which finds a lot of favor is the logistics piece. Traditionally, the logistics piece has seen a lot of interest from foreign investors as well as in this particular space. And interestingly, on a platform basis, the largest investment that happened this year was on a data center platform, which was put together by a couple of very large international investors and a very large player in the sector in the country.
Shanali, I want to get to you as well and just get your view on how India's real estate market as a sector has performed this year compared to the rest of the market.
So with the real estate, there's always more of a concentrated rally that we end up seeing. Essentially, it's more, as Lata was mentioning, on the commercial side. So the rental yields play a very big role on the real estate investment as an investment. And on the residential side, you don't see too much of rental yield. It's more 6 to 8% on the commercial. And that's where, there has been some amount of uptake with the GCCs coming in and the logistics and the warehousing and the institutional investors showing interest more on the commercial space. You saw India's top 8 cities having about 16.3 million square feet of net office space absorption in the Q3 of 2025. And that's a 35% year-on-year growth. So what we look at in this particular year compared to the equity markets, the commercial real estate has definitely done a little bit better. But this is also a trend of the real estate market. There are pockets of very high returns, and then there are also pockets of very low return. So it's a lot more volatile. So if an investor really wants to unlock this return, you have to get the right instrument as to which part of the commercial. Getting that right is quite key on the real estate sector, and which is contrary to maybe when we're looking at the Indian equity markets. Indian equity markets is more broad-based and more consistent, dependent a lot more on the fundamentals. If you see 5-year cycles of the Nifty comparing it to the realty index, you see the Nifty ending up giving double-digit returns on almost all sectors on all time frames of 5 years that we have. Whereas the realty index, there are certain time frames that it would do negative and highly negative, and there are certain time frames that you have got highly positive. So it's a lot more volatile is what I would say.
Yeah, well, as Lata was saying in the JLL report, I mean, we've had back-to-back years of consecutive records now for domestic investment. Considering how this sort of plays to the broader growth narrative in India, do you see that trend continuing? Can you tell us about your outlook for real estate?
So our outlook for real estate remains that it would be in concentrated segments of commercial and office spaces. The big cities, when we are looking at residential real estate, that would have muted growth because there is demand in the smaller ticket size projects, but you don't see a lot of them coming in the big cities. The focus is more on the bigger ticket sizes in the larger cities, and that we think that has reached its saturation point. There is a lot more supply than what is the demand, but the office spaces in tier 2 cities and commercial, that's where the opportunity lies, and it's more concentrated in those. There would be in tier 2, tier 3 cities in the residential space, but again, very, very pocket dependent. So overall outlook for real estate would be more on the commercial side and the focus on the commercial segment. So it's segment specific. You could see some.
Lata, I want to take it back to you because you did mention the enthusiasm from domestic investors, but how much interest is there from foreign investors in this sector, and are there barriers to entry?
No, Paul. I guess, while 52%, if you look at it as a percentage terms, it looks like domestic seems to be taking the lead. But I think there has been a substantial growth of almost 18 to 20%, even on the foreign capital that came into real estate. So, in fact, one feels particularly optimistic that, the interest that we see is, and, one thing which I would want to mention here is that couple of things. When an investor comes into the country and make investments in any sector, they are looking for reasonable exit options. And that is something which has been provided very interestingly by the REIT space, especially on the commercial real estate piece. Many investors who have been making investments here have been able to get profitable exits and been able to do substantial sizes of exits from the market because of that. And I think that is what is fueling the continued optimism of foreign investments. And last year, if you look at 2025, almost 66% of these investments of 10.5 billion has happened in the last 2 quarters. That is after we had certain political uncertainties, certain macroeconomic headwinds. I think there was a slowing down in the first 2 quarters, which really kind of the last 2 quarters have really seen that being abated and investments coming through. Few other things which I would like to mention here is the development of the REIT platform, has really helped in building the confidence of investors, both domestic and otherwise. Recently, there was a regulatory change that was made that actually classified REIT investments as equity. What it really does is higher market participation in this particular asset class. You will see, index funds also being able to invest into this particular asset class. This is an asset class which allows investors to invest into commercial real estate, as Sonali mentioned, with the liquidity that usually an equity market provides. And that is really what has attracted the interest. And you have found a lot of takers for this. And as far as the other sectors, sorry.
I was just wanting to bring Sonali in on that point as well, because there are plenty of opportunities for foreign investors to get involved in the Indian growth story. But this is something we've been raising a lot on Bloomberg recently. We have a chart to show it as well. Just the amount of foreign capital outflows, particularly in the last quarter of 2025. But as you were saying, the longer-term narrative around India's growth is a solid one. Do you see foreign investors making a return next year, particularly as the US dollar softens?
So when it comes to the foreign institutional investors, there's a lot of factors that end up playing out, and I think one of the biggest ones remains geopolitical uncertainty, and I think the big factor of the return will be the US-India trade deal. That is the single largest risk, I think, that we have for the equity markets or the India growth story, because all of the domestic factors are there. There is domestic growth that is taking place. There are consumption measures that have been put in. There you are seeing domestic institutional investors coming in, investor behavior completely changing, looking at growth and not just fixed income assets, which used to be in the past. So if you have to look at it, all of the ingredients are there for the growth story to unfold. What lies is the external factor of coming into a conclusion. It's the uncertainty of what's going to happen and how it's going to play out is what is been spooking the investors. And of course, with growth coming in the US as well, having good yields there, that has also obviously led to some amount of capital continuing to go back. This 2025 was, as earlier was mentioned as well by Mr. Shetty, that we've seen $17 billion go out, but the domestic growth of $80 billion has really led to a lot of the equity markets staying buoyant. 2026 could be a year of reversal, but again, a full 100% or a 90% conviction isn't there until we get some amount of clarity on the US-India trade deal.
Okay. Lata, just before we let you go, I'm curious, was there anything in your report about investment in data centers in India?
Yes, of course. I guess that is something which has caught the interest across the world, and India is not to be left behind here. As I mentioned, this year as well, there were large investments made by an Asian fund. Most of the data centers are development of data centers because there aren't too many assets which are built which can be traded. So it is primarily in the development sector and the development side. And you have investments and a platform, as I mentioned earlier, of almost 11 billion that has been set up to build data centers in different geographies across the country. So data centers remain a big area of interest, both by domestic as well as foreign investors. More so foreign investors, I would like to say.
All right, Lata Pillai of JLL and Sonali Rawal of Anand Rathi Private Wealth Management. Thank you both so much for joining us. We have more ahead. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back. You're watching Insight. Here are some of the stories we're following. Cambodian media reports say Thailand's army shelled Cambodian territory on Sunday, including strikes on a temple. Earlier, Thai media quoted the military saying F-16 fighter jets launched Friday night bombing raids on a Cambodian casino and a bridge being used as an ammunition supply route. The reported attacks come ahead of an ASEAN foreign ministers meeting on Monday. China has criticized the latest US weapons sale to Taiwan, saying it raises the chances of conflict between the two superpowers. The US last week approved arms sales worth up to $11 billion, including missiles, drones, and artillery systems. China's foreign ministry says arming Taiwan puts the island's people on a powder keg. The US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X, saying the move does not mark the beginning of a war, but is a declaration of vengeance. Bloomberg's been told the US is still pursuing a third oil tanker near Venezuela as President Trump intensifies an oil blockade on Nicolas Maduro's government. A source says the Bella 1 tanker is a Panamanian-flagged vessel sanctioned by the United States. The attempted interdiction follows the boarding of the Century's supertanker early on Saturday and the skipper on December the 10th. All right, amid all this geopolitical tension, we are seeing tailwinds for all the commodities you see on the board there. We've got Brent above $61 a barrel, gold and silver both hitting fresh records, silver up 3 1/3%. Before we go, here's a look at tomorrow's show. We're going to get the macro and markets outlook for 2026 with BCA Research Chief EM Strategist Arthur Budagayan with a focus on trade tensions between the US and China. That's it for Insight. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basechi. A very good morning to you. We are nearly there, and we actually have traders pretty optimistic towards the end of the year. Taking a look at how these markets are faring this morning, and we have futures pointing higher stateside. And already seeing gains in the Asia session. They are lower futures in Europe, however, but flipped cross asset, and we've got gold and silver at record highs this morning on the geopolitical tensions. Oil up 2 on the Venezuela blockade. And if we just take a look as well at the 10-year US Treasury yield, 4.16 is where we are right now. Ahead of the US growth data coming out later on this week. And really, though, JGB yields are where you want to be focusing, so we'll bring you more in that in just a moment. I mentioned that oil's higher on the Venezuela story. Let's take a closer look at the big picture in 2025, because actually you've got crude set for its biggest drop since 2017. Peace in Ukraine, a hopeful possibility, and the oversupply concerns dominating as well. So we're perhaps looking more for a floor than a ceiling when it comes to the oil price. Largest annual drop since 2018 as per that chart. Now let's get over to Asia for a look at how markets there are faring. We could go to Min Min Lo, who's waiting for us in our Hong Kong studio. Min Min.
Hey Lizzie, we are firmly in the green in the Asia session here, and certainly it seems like we could be set up for a center rally after all. After the volatility that we saw last week, we did see buyers come in on Friday night in the US session to stabilize the tech sector, and certainly over here in Asia, it seems like the tech sector is driving the stocks up, especially on the Kospi, the TAIEX, the Nikkei as well, up by close to 2%, and that's really being supported by the yen as well. We did see yen continuing to weaken after the BOJ rate hike last week. Investors not convinced with Ueda's commentaries that he's going to continue hiking rates fast enough, and some analysts are saying that 160 on dollar yen could be in sight as futures contracts point to more demand for shorting the yen. And you can see the yields here also rising across the curve. The 2-year yield is now at the highest since 1997, and that really doesn't bode well for an upcoming auction of the 2-year bonds on Christmas Day. So we'll be keeping an eye on that. Lizzie.
Okay, Min Min, good to see you. Thank you so much. Min Min Lo in Hong Kong there. Now, for more on the markets, Abdul Qadir Hussain, MD for Fixed Income Asset Management over at Arkham Capital, I'm pleased to say, joins me now. Good morning to you, Abdul. I want to start with your outlook for 2026, because it looks like you're cautiously optimistic, at least when it comes to the US economy. What are the biggest risks into the next year?
Yeah, I think the biggest risk clearly, I think, is the market sort of underpricing inflationary risks. I think that most people are quite complacent that the Fed will cut at least once, if not twice, next year, and that inflation is well under control. I think if that narrative somehow changes and you start seeing inflation reaccelerating, that could cause significant volatility not only in rates markets but also overall in risk markets. So I think that's probably our biggest thing that we're watching out for. Obviously, some of that is also going to be dependent on what happens with the Fed, and if you get a dovish Fed and how that sort of plays into term premiums. So the rates market is probably the main area we're looking at.
But you're not worried about Fed independence, are you?
No, I don't think we are. I think for us to think that the Fed is going to do something unconventional, like Turkey a couple of years ago, I think that's clearly not going to happen. If the data is pointing towards tightening monetary policy, I think the Fed is going to do that. It might do it with a lag. It might do it in a more dovish manner, but I don't think they would go unconventional. So I don't think that Fed independence is an issue at this point.
Okay, and when do you expect artificial intelligence to deliver serious productivity gains? And do you expect that to come with job losses? How much equity volatility do you expect is needed to get there?
Yeah, I mean, I think that that AI it has several areas where it can impact. I think next year, obviously, equity valuations, and if you do get any kind of correction on that, is going to be an issue. Productivity and sort of how it feeds into inflation. And the third area where it, I think, has a big impact, at least as far as fixed income is concerned, is the supply. You have significant debt supply, potentially coming out of not only out of direct AI, tech companies, but also out of power utilities that are building out infrastructure to meet the demand for power. So if you get significant issuance out of sort of the AI sector, that's going to affect some of the crossover demand that's going to come into the EM space and spreads in EM. So I think we're looking out at multiple areas, obviously. Yeah, so in 25 they had about 67 billion across the entire spectrum. So sovereigns had about 20 billion, and the rest of it came from banks and GREs and corporates. I think we're going to get at least as much, if not 5 to 10% more across all of those sectors. So somewhere between 20 to 25 billion directly from the sovereign, and potentially somewhere between 45 to 50 billion across the rest of the universe. So it is, it was almost 45% of total issuance out of the MENA region in 25, and I think it's going to be at least that much in 2026.
And beyond the sovereign, how active do you expect the Saudi Public Investment Fund and its portfolio companies to be in debt markets next year?
Yeah, I mean, I think the sovereign is obviously trying to get the companies to fund themselves and to come to the markets themselves, and you saw that particularly in the banking sector in 25. You're probably going to get issuance again across PIF. Across Aramco, potentially across Saudi electricity, and plus the sovereign. The question obviously is going to be how much does the market take before it starts sort of really widening spreads, and that's where my concern about a lot of issuance in DM markets comes from, because one of the sources of demand in 25, which caused spreads to remain tight, with crossover investors from DM. And if that happens to go away, then that could be one of the headwinds for a lot of Saudi issuance.
Well, yeah, are you seeing signs that the market's getting concerned about how much Saudi paper's coming through?
Well, I mean, 25 you didn't, because like you said, oil prices actually, fell significantly in 25, and yet Saudi spreads, even despite the record issuance, tightened significantly. But that was primarily due to huge inflows into EM ETFs, in demand from Asia, crossover demand, and also Qatar and Kuwait exiting the MB, which sort of directed some more flows into Saudi. I think we're still confident about EM inflows inflows into EM ETFs in 2026, but a little bit less confident about crossover demand, and potentially you do have UAE potentially exiting the index, so that could also cause some flows. But and also with JGB yields, which you mentioned earlier, going higher, Asian demand potentially also could be at risk. So if you do get weakening in Asian demand and you do get weakening in crossover demand, then you could see some spread widening if Saudi issues as much as it did in 2025.
All right, great to get your take. Abdul Qadir Hussain, Fixed Income Asset Management Managing Director over at Arkham Capital. We thank you so much. Now, to a look at some of our other stories we're following this morning. President Trump's top economic advisor says that a Supreme Court ruling against the administration's tariffs regime would create a major administrative problem. Judges are currently weighing a legal challenge to the tariffs that Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding the levies should deter the court from ruling that way.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Meanwhile, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says that it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Coming up, we turn to White House geopolitics. US President Donald Trump intensifying a blockade on Venezuela as the US is said to be pursuing a third oil tanker. The details next. This is Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, oil prices are in focus today after Bloomberg reported that the US is still pursuing a third oil tanker near Venezuela. President Trump has been intensifying an oil blockade on Nicolas Maduro's government. And for more, we can bring in Bloomberg's Stephen Stapczynski. Stephen, good morning. Just bring us the latest on the scale of the blockade and how much it's actually choking off oil. How much pressure is this putting on Maduro's government?
Well, this is putting a lot more pressure than it was just before. So for those just catching up, the Trump administration had basically taken a sanctioned oil tanker a bit back earlier this month, and that was seen as their operation. The blockade would be for sanctioned oil tankers. Not all of Venezuela's oil is sent on sanctioned tankers. There are a number of dark fleet vessels that have not been sanctioned by the U.S. Now, over the weekend, this has changed. The Trump administration boarded a vessel that was not sanctioned, and now they're pursuing another one that hasn't even loaded any crude yet. So this is certainly them trying to put a maximum pressure on companies to not be able to at least export or take any of Venezuela's crude that is sanctioned by the United States. Now, the small caveat, of course, is that Chevron has a waiver to allow them to export some of it. So it doesn't affect everything, but it is going to affect essentially most of it.
OK, so where does it leave oil prices in the context of oversupply pressures as the bigger picture?
You know, Venezuela, it's not an enormous producer in the grand scheme of things. They have very large reserves, but they're only producing less than 1% of global demand. So if the Trump administration were to bring all of their exports down to zero, yes, you would probably see a knee-jerk reaction where you would see an increase in prices. People are trading on sentiment. Maybe there will be a mixed match between what China has to buy and they have to find other supplies elsewhere. But in the grand scheme of things, it doesn't really affect the global supply balance because the market is facing quite a large oversupply going into 2026. Demand hasn't really increased more than that supply is being added to the market. OPEC Plus is adding barrels. U.S. supply is very strong. There are other countries as well adding more. And so when you look at the larger supply-demand balance, even if you remove these barrels, you might see an increase in prices for a few days, but we are going to be trending likely downward, according to banks and analysts, just because there's so much more supply than there is demand, especially going into next year.
OK, so Brent at $60 a barrel right now, but Venezuela, as you say, not the biggest player in terms of the broader oil market. But this, of course, hugely significant for the Venezuelan economy. Where does the pressure leave the Venezuelan economy?
I mean, yes, so that's the bigger impact, right? This is the Trump administration putting maximum pressure on the Venezuelan leadership. This is them likely trying to push for regime change. This is hurting them where they need the profits the most, and that's oil. And that's one of the ways that they were able to get real currency, real dollars, real anything to try to prop up their economy. But without this, their most valuable export, they're in big trouble. So where does that put them? What does that leave the current government? And this is going to put them on the back foot, especially if the Trump administration continues with this pressure, if they look at potential military strikes. This is them really tightening the noose around the current government.
All right, Stephen, thank you so much for that latest update. Stephen Stopczynski there, we thank you. Coming up on the programme, President Trump expands the US travel ban, adding new countries and tightening entry restrictions. We'll bring you that story next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:20 a.m. Well, President Trump is expanding his travel ban, adding new countries to a growing list of nations facing full or partial entry restrictions. The White House says that the move is aimed at tightening national security and migration controls too. For more, we're joined by Bloomberg's Anthony Osei-Brown. Anthony, just walk us through how the Trump administration's expanded this travel ban. What are the new restrictions here?
Yeah, so basically the new restrictions are around, they are basically to partial and full travel bans. And the partial bans include include the immigrant and non-immigrant visas. And then there are full family unification visas that have gone on the ban. So it's quite extensive now. A lot of nationals may not be able to travel to the US under these new travel restrictions. And it's far, far more expensive than the 2017 visa ban. From 7 countries in the 2017-2022 visa ban, we now have 39 countries fully included in the travel bans.
And to what extent was this inevitable, expected, and how much is it the product of recent events?
Well, I think it's always been expected. Trump had hinted several times that he's looking at this direction. What he needed was just a trigger, and the trigger was the killing of the U.S. Marine by an Afghan national, and that just triggered his decision to expand the travel ban. So it was inevitable. People knew that this was coming, and what's the excuse? They just needed an excuse to make it happen, and the excuse was the killing of the U.S. Marine in Washington, D.C., and that just gave him a reason to expand the travel ban and included several countries, which is now based on national security concerns. His main argument that these countries have poor security visa vetting processes, and so it makes it likely that people with bad security intentions could easily get into the United States. So he's going to use this as an excuse to get them out of the US.
And I say this only partly tongue-in-cheek. To what extent will it affect the World Cup?
Sadly, no. Not much, because most of the countries, like we have 26 countries in this travel ban, coming from African countries. These are countries that would naturally not have had much opportunity to go and watch the World Cup because most of them are poorer. They would rather watch the World Cup from their home countries on televisions and everything. Yeah, but it takes some shine away from the World Cup because people will not feel the enthusiasm for watching the World Cup will be lowered by the fact that these countries are banned from going to the World Cup physically to watch it. Not that many of them would have gone there anyway to watch these countries, but yeah, it takes away from the celebration of the World Cup, which is supposed to be a global event where everybody is included. But then it's going to the World Cup is now going to take place under the shadow of certain number of countries banned from entering the US. So that's to the extent it will affect it. But in terms of attendance, I think most of these people from these countries would not have attended the World Cup anyway, physically in the US, or possibly the US would not even have given them visas to attend. So, yeah, but yeah, it just casts a shadow over the whole World Cup event.
Okay, Anthony, good to see you. Bloomberg's Anthony Oso-Brown there. We thank you for that update on the travel ban. Now, for a look at some of the other stories we're following this morning, Nigeria has secured a $500 million loan from the World Bank to boost lending to small and medium-sized businesses. The facility will be managed by the Development Bank of Nigeria and includes credit guarantees to businesses considered too risky. The World Bank says that the programme could mobilise nearly $1.9 billion in private capital and support 250,000 firms. Elsewhere, Fitch has cut Gabon's credit rating deeper into junk territory, citing rising debt risks and mounting pressure on government finances. The ratings agency downgraded the nation's long-term foreign currency rating for the second time this year to CCC-. Fitch says it assumes no new support from the IMF in its base case scenario, citing obstacles including the government's expansionary fiscal policy and accumulation of external arrears. Well, checking in on these markets, we've got futures pointing higher stateside. Already we saw the gains in the Asia session. They continue with the MSCI Pacific Index up 0.9%. We had that rally in US stocks on Friday. European futures, however, pointing south. Euro Stoxx 50 futures down 0.2%. And if we flip over to your Treasury space, we have the 10-year yield up 2 basis points at 4.16. The 2-year up a basis point at 3.48. And at the long end, the 30-year at 4.84 right now, up 2 basis points, as we look ahead, of course, to that growth data stateside later on this week. Also, just checking in on oil, of course, we were discussing the competing currents in the oil market with Stephen Stapczynski a moment ago. Brent now up 0.9% at $61 a barrel. We have the intensifying blockade on Venezuela. We also have hopes of a peace settlement for Ukraine, but the big picture really is the oversupply concerns, and that's set to be the dominant theme into 2026. But coming up on the programme, we are going to take a look at Bitcoin. Bitcoin bracing for more swings with $23 billion in options set to expire, really putting pressure on the crypto markets on edge to end the year. Well, that conversation with Yoni Assia, founder and CEO of eToro, coming up next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US, meanwhile, pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jumana Versace. Welcome to the programme if you're just joining us. You've nearly made it. We're nearly at the end of the year and things are looking optimistic as we head towards it. We've got futures pointing higher stateside by 0.2% on S&P E-minis, lower here in Europe, down 0.2%, but already we're seeing gains in the Asia session of about 0.8%. We had that rally on Wall Street to end last week. Let's see if it continues into Monday's session. But flip the board over to the cross-asset picture, and you've got silver and gold at record highs on the geopolitics that we've just been discussing. Gold up at $4,405 a troy ounce, up more than 1.5% right now. We have oil up to $61 a barrel on Brent, as we've been discussing Trump intensifying that Venezuela blockade, and the 10-year US Treasury yield there not doing too much at 4.16 as things stand. Of course, we look out for that US growth data later in the week. But the real action in your bond space is happening over in Asia. So let's get over to Min Min Lo. She's in Hong Kong with a look at how Asian markets are faring. Min Min.
Hey, Lizzie, Asia markets largely in the green today, but we're watching the chip stocks in particular in China because Mothreads, that's a company that debuted on Shanghai Star Market a couple of weeks ago, had announced over the weekend at a company event that they are launching 2 new generation of chips, including an AI chip that is better than NVIDIA's Hopper series chips, the H100 and H200 chips, and is closing the gap with the current Blackwell series, and that is a significant development for the domestic substitution theme in China, and it really eliminates the need for Chinese companies to buy from NVIDIA. And here you can see most of these chip-related stocks, SMIC up by 7%, Hua Hong as well up by 5%. But we're also watching 19 other companies that US lawmakers are calling the Pentagon to list as Chinese military companies, and some of these companies are private companies, the likes of DeepSeek, for example, the robotics company Unitree. Here you can see Wuxi AppTech, that is a pharma company. Goshen is a lithium battery company. So pretty wide-ranging sectors that are affected. If Pentagon does list them as military companies, it means the Department of Defense won't be able to work with these companies, and it also sends a warning to other companies trying to collaborate with these companies. It is a blow to some of these companies if they get listed when it comes to any plans to expand overseas or work with overseas suppliers. Lizzie.
All right, Min Min, great to see you again. Thank you so much. Min Min Lo there, out of Hong Kong. Now, Bitcoin is set to end the year lower despite a risk-on period for stocks and demand for havens like gold. Around $23 billion worth of contracts also set to expire on Friday, threatening to amplify the already elevated volatility in the crypto market. So we've got the perfect guest for you on this very subject, and that is Yoni Arcia, CEO and founder of eToro. Really good to see you, Yoni. Thanks for joining us this morning. You're very, very optimistic, it has to be said, when it comes to Bitcoin. People talk about the UAE as the Wall Street of crypto, but you go further. You've saying that Abu Dhabi is going to be the global hub. So just talk to us about how close we actually are to that.
Well, first of all, I think this was a very good year for the crypto, Bitcoin, blockchain narrative in general. What we're seeing right now is actually capital markets copying the crypto markets. With a very strong sentiment across tokenization, across a lot of people recently. I've just been to the Abu Dhabi Finance Week. People are talking about the tokenization of real estate, of private markets, of public markets. We've seen this year capital markets copying crypto markets, moving 24/5 and now moving 24/7. Abu Dhabi, the capital of capital, has always said that they wanted to take a significant part in that transition into the digital asset economy and the digital space, which we're definitely seeing scaling up across the world with more than 400 people now with digital assets. And now we're seeing also the US saying that they want to lead in crypto, that they want to see US capital markets moving on chain. So we're seeing a lot of trends right now happening from capital markets into crypto markets.
Well, hold on a minute, Yuri, because you've got Bitcoin heading for its worst quarter since 2022. It's set to end the year lower, as I say, despite the general risk attitude in stocks and the demand for havens like gold. I'm interested why you see it as the digital gold in that case.
Well, I've been in crypto since 2011. Luckily at eToro, we caught it very early on the intersection of finance and technology. So we actually looked at Bitcoin back at $5 per Bitcoin in 2011. Then we saw it rise to $1,200 and listed it on eToro back in 2013, just moments before it crushed back in, I'd say, the first crypto enter in 2014. So we've seen several cycles into the crypto markets, into Bitcoin price. I would generally say in capital markets, when everybody's expecting something, you know, an asset to move in a certain direction, in many cases, sometimes it might surprise. So I think a lot of people are surprised while this is the friendliest administration in the US to crypto. A lot of developments in the technology part of the crypto space and Bitcoin space with recent even tokenization on Bitcoin to see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles, of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I've no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
Okay, so a long-term view. You had Eric Trump telling Bitcoin Miner 2024 that you're going to see Bitcoin hitting $1 million. How long-term is that view? Is that sort of talk helping the market, or is it just fantasy?
I think it's helping the market. I don't think it's fantasy. I think if you look today at, and it's a great time to look at the market cap of gold and silver right now hitting all-time high. I remember my grandfather talking to me about buying gold in the 70s for $50. It's coming up to $5,000, I think, with $4,400 right now. So that's 100 times on gold since the 70s. So I think deflationary assets like Bitcoin, like gold, are actually positioned to grow over time, basically reversing, or reversing the correlation to inflation, which has been growing in recent years, especially in COVID. So I do think Bitcoin represents digital gold. We need to remember gold has been with us for 5,000 years, powering a lot of the global commerce. Bitcoin is with us only about 15, 16 years, powering the digital economy of a new generation of Gen Y, and even more than that, Gen Zers and Gen Alpha, who are more crypto native. And I think people are looking at Bitcoin as their digital gold, but that's younger generations who are going to amass over $100 trillion in the next 20 years. But right now, the vast majority of assets in the world are still held with central banks, financial institutions, and people over their 70s.
All right, Yoni, we'll see where it goes in 2026. But for now, good to see you. Yoni Arcia, founder and CEO of eToro there. Well, for more of these stories, looking into the intersection between wealth and power in the region, do sign up to our Mideast Money newsletter. You can find it on Bloomberg.com. Well, the United Arab Emirates state oil company ADNOC, meanwhile, has secured $11 billion in financing to develop massive offshore natural gas fields. We can go now to Bloomberg's Stephen Stapczynski for more. Stephen, hi again. Just talk us through why ADNOC's ramping up supply against what we've already discussed, a backdrop of looming supply gluts.
Yeah, I mean, I think ADNOC's view is they're not looking at the short-term site on the market, right? The global liquefied natural gas market, global gas markets are facing a glut of supply that will push down prices, that will keep prices lower probably through the end of the decade. What ADNOC has strategically been doing is look at, okay, where can we find ways to get into this market like our neighbor Qatar? Qatar is the world's biggest exporter of liquefied natural gas. They've made a fortune doing it. They've locked in long-term contracts, and they've been doubling down on the fuel. They're looking to expand their capacity more than 50% over the next 5 years. Now, ADNOC is taking a very similar approach. They're looking at the future beyond oil, right? Oil, peak demand for oil, depending on who you ask, could happen this decade. Chinese demand as well isn't showing up. Prices are lower. Now that goes to natural gas. They see natural gas as the transition fuel. It's something that's going to backstop intermittent renewables. And they just actually pushed forward recently something called the Ruwais LNG project. It's one of their biggest gas export projects that they push forward, and they're also trying to find customers for that. At the same time, they want their economy to run on gas as well. So overall, they just see gas as the option at home, as also abroad, as they see it as the fastest growing fossil fuel, and that's why they're really kind of tripling down into it. We've been seeing.
Okay, so who's involved in the financing then? How's it going to be used?
Okay, so we've got quite a few folks involved. So first off, they've brought in Italy's Eni as well as Thailand's PTT to be among those who are arranging the financing. The banks include, of course, Abu Dhabi's Commercial Bank, Abu Dhabi Islamic Bank, and the Agricultural Bank of China. Those as well from abroad include Citigroup, Standard Chartered, and as well as UAE's largest lender, the Abu Dhabi Bank, and Emirates NBD rather. And now the way it's going to be used is for financing this project to produce 1.8 billion cubic feet of gas a day. Now that's going to backstop declining production elsewhere, and it's going to help them not only be able to keep their current levels, but also push forward with the expansion of LNG exports.
All right, Stephen, appreciate all your reporting this morning. Stephen Stapczynski there, thank you so much. Well, we're going to stay in the Middle East next. Coming up, Israel warning the Trump administration of an Iranian missile exercise. We'll be live in Jerusalem with the details next. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Axios is reporting Israel has warned the Trump administration that an Iranian Revolutionary Guard Corps missile exercise could be preparations for a strike on Israel. Prime Minister Benjamin Netanyahu is expected to travel to the US later this month to meet with President Trump. It comes as talks on the phase 2 of the Gaza peace process are slowly advancing, with US Secretary of State Marco Rubio saying that the next step should be naming a board of peace.
The next step here is announcing the board of peace, announcing the Palestinian technocratic group that will help provide daily governance. And then once that's in place, I think that will allow us to firm up the stabilization force, including how it's going to be paid for, what the rules of engagement are, what their role will be in demilitarization, and so forth.
Let's go now to Jerusalem and speak to Bloomberg's Dan Williams. Dan, good morning. We had Witkoff meeting with senior officials from Egypt, Turkey and Qatar to advance the talks on the second phase of this Gaza plan. What do we know about those talks?
Well, we have a reading from Witkoff himself, a statement he put out at the end of those talks, saying effectively that those powers, it's worth remembering that when it comes to Egypt and Qatar, these are long-term mediators between Israel and Hamas in Gaza. Turkey is on the periphery. It wants to be a stakeholder. That is resisted by Israel, given tensions with Ankara going back well over a decade. Nonetheless, these are 3 significant US-aligned powers in the region, and according to Witkoff, they basically affirmed that phase 1 had proceeded largely as planned. They affirmed the need to move to phase 2. These would seem to be baby steps. Hard to know exactly where this is going, but all parties we've spoken to have indicated that that will firm up, or is expected to be firmed up, toward the end of the month, when the Israeli Prime Minister Netanyahu is expected to be meeting also in South Florida at Mar-a-Lago with the US President Trump to discuss prospects for moving to that phase 2 of the Gaza plan.
And you'll be at that meeting in Mar-a-Lago. What's on the agenda?
Not much discussed publicly so far. In fact, officials are saying they're still trying to work that out. But it would appear, especially given from what we just heard from Rubio, that appointing the Board of Peace is really where all this begins and from which all of this flows. This would be the Supreme Oversight Committee, headed by Trump himself. We're told he's looking for other serving national heads of government or heads of state to be there alongside him. Underneath the Board of Peace would be a so-called executive board, potentially with the former British Prime Minister Blair, with Witkoff himself. Beneath that, a CEO, and beneath that, the Palestinian technocratic government, that interim government that would run day-to-day activities. So a quite complicated, stratified system in place there. However, when you ask officials involved in this whether there's some room for skepticism about whether this will go ahead, they point out that just 3 months ago, no one thought there could be a ceasefire in Gaza, a recovery of the last living hostages, in fact, a recovery of all dead hostages held by Hamas since the October 7th attack, with the exception of one body yet to be recovered. There was also a UN Security Council resolution endorsing the Trump plan just a couple months ago. So they look at these achievements as markers of how, with quiet, patience, and with hard work behind the scenes, more can be achieved. I think that will become clearer toward December 29th, when and if that meeting goes ahead. It's worth noting the White House has yet to formally invite Netanyahu, yet to formally announce the meeting will go ahead, but the Israelis are treating it as a given. So while much of the world is away on Christmas, New Year's vacations, there will be hard work being done at Mar-a-Lago to push ahead this Gaza plan.
Okay, well, we appreciate all your hard work. Bloomberg's Dan Williams, excellent coverage. We thank you so much. Now, for a look at other geopolitical stories we're following this morning. Israel's finance minister says that the Security Cabinet gave legal status or authorised 19 West Bank settlements. In total, he says the government has given legal status or authorised 69 West Bank settlements in the past 3 years. Meanwhile, the US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defense Secretary Pete Hegseth posted on X saying that the move does not mark the beginning of a war, but is a declaration of vengeance. And US Special Envoy Steve Witkoff says the Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. He says discussions covered the existing 20-point peace plan, a US security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Well, coming up on the programme, China's More Threads is unveiling a new generation chip lineup set to challenge developers' dependence on NVIDIA. The details next. This is Bloomberg.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:52 a.m. Well, China's More Threads has introduced a new generation of chips aimed at reducing AI developers' dependence on NVIDIA's hardware. Let's get more with our China correspondent, Min Lo now. Min, hello again. Just talk us through what these new products do. How do they actually compare with NVIDIA's chips?
Yeah, so More Threads had a company event over the weekend, and they unveiled 2 new generations of chips. They are called Huashan and Lushan, named after Chinese mountains. So Huashan is an AI inference and training chip that the CEO says is going to be better than NVIDIA's Hopper series chips. So that includes the H100 and H200 chips. And he says it is closing the gap with the Blackwell series chips. That's the latest line that is available from NVIDIA. NVIDIA. So this is a very significant development because we know that NVIDIA just got approval from the Trump administration to sell the H200 chips to China. China hasn't yet given a clear guidelines to its companies whether or not Beijing will be allowing companies to buy from NVIDIA. But this breakthrough shows that there really isn't a need for Chinese companies to rely on NVIDIA here because they can already make chips that are better than that. So certainly an important development. The company says that it will enter mass production for these chips as soon as next year. It also unveiled the Lushan chips, which are for graphics processing. The company saying that it has 15 times better performance for gaming. It also unveiled this new GPU architecture that could allow the linkage of as many as 100,000 chips together to form this supercomputing cluster, which again the company says is 10 times more energy efficient and can increase computing capacity by 50%.
Well, it all sounds very impressive. What stands in the way then of more threads closing the gap with the US?
Yeah, so one big challenge is that there is still all these restrictions when it comes to chip making equipment, the lithography machines. So more threads, for example, rely on foundries such as SMIC to produce its chips, and it's really being capped by what SMIC can do, right? Because SMIC's ability to make 2 nanometers or sub 2 nanometers chips is still very limited at this point, and that's what TSMC is already working on. So that's one. Number two is that More Threads is built upon its own proprietary computing platform. So it has its own platform called Musa. NVIDIA has its own called CUDA. So companies that have built their software around NVIDIA's chips and architecture will require a fair bit of adaptation to be able to integrate to the More Threads system. So there's a bit of transitional cost there. And when it comes to that supercomputing cluster, a lot of it is going to hinge upon connectivity. When it comes to the network sort of fabric, these are the hardware that allow the chips to sort of talk to one another, the end-to-end bandwidth to ensure that there is enough server capacity to crunch a huge amount of data. How reliable that entire system is still untested at this point. So that's something to continue watching.
And of course, we know that US lawmakers are calling for more Chinese firms to be listed under the Pentagon's list as military companies. So we shall keep an eye on that. For now, Min Min, really good reporting. We thank you so much. Min Min Lo there, our China correspondent. Well, let's check in our last couple of moments here on these markets. We've got futures pointing higher stateside, up 0.25% on S&P E-minis, even higher for Nasdaq futures, up 0.4%. Eurostock 50 futures, though, in the red as things stand, not following the moves in the Asia session. The MSCI Asia Pacific Index up 0.9% at the moment. And just looking into your bond space, we have the 2-year Treasury yield up a basis point at 3.48%, the 10-year up 2 basis points at 4.16, and we do keep one eye on oil as well. Brent up more than 1% at $61 a barrel. Of course, we continue to monitor this blockade on Venezuela by the US. But that does it for Horizons Middle East and Africa. I'm Lizzie Burden in London. Do stay with us for Daybreak Europe. Oliver Crook is coming up next. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes. And I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Gold, silver, copper all hit records highs while stocks rally in Asia as investors bet on a strong finish to 2025. Oil gains as the U.S. intensifies a blockade on Venezuela with the Coast Guard in pursuit of a third tanker after boarding another vessel this weekend. Plus, the Trump administration defends the decision to remove several photos from the latest release of the Epstein file, saying it was done to protect the victims. Well, happy Monday morning. Let's get a check in on the markets this morning. Looking at the futures here across Europe, down just a little bit, about 1/5 of 1 percentage point there. Eurostoxx futures down about 12 points. The FTSE futures, similar story, down about 1/8 of a percentage point this morning. S&P, on the other hand, up about 1/4%. That adds to the rally we saw on Friday. S&P futures up almost 1 percentage point, erasing all the gains of the week. That continues into Monday. Same thing for NASDAQ. NASDAQ rallied hard on Monday, up 1.3%. That continues into the session again this Monday morning. When we go across asset to see what else is going across the asset spectrum this morning, we are looking at gold at a new record high, 1.5 percentage points up. That is the new record for gold. You have $4,400 a troy ounce, and Brent crude also catching a bid after what we've been seeing off of the shores of Venezuela. A third tanker, we understand, in pursuit by the U.S. Coast Guard. U.S. Treasuries, on the other hand, up a little bit this morning, up about 4.16%, and Bitcoin catching another rally, about 1 percentage point. Let's see how the Asian market session is faring with Min Min Lo in Hong Kong.
Hey Ollie, it is a happy Monday indeed here in Asia. We are seeing green across the board, and it did seem like after the very volatile week last week, the dip buyers came in to stabilize the market, especially the tech shares, and it looks like we could be set up for the center rally after all. The tech shares gaining and driving up the Kospi, the TAIEX, the Nikkei up by close to 2%, and the Nikkei as well is also supported by the weakness in the yen after the BOJ rate hike on Friday. Despite the FX chief from Japan this morning warning against excessive FX moves, we continue to see the yen at the weakest end in about a month. If we flip the board, you can take a look at where the yen is, I believe about 157 level, and some analysts are saying that 160 could be in sight for dollar yen, just given how futures contracts are pointing to more demand for shorting the yen. And here you can see the yields pointing up across the board, the 2-year yield hitting above 1.1%, the highest since 1997, and that that doesn't bode well for the upcoming bond auction, 2-year bond auction taking place on Christmas Day. So we'll be watching that. But what else we're watching in Asia also, if you flip the board, is More Threads, because that's a Chinese tech company that over the weekend unveiled 2 new generations of chips that it says is going to be better than NVIDIA's Hopper series, the H100 or H200 chips, and is closing the gap with the Blackwell series of chips. And here you can see big gains across most of these chip stocks in Asia. SMIC up about 6.3%, Hua Hong as well up by 5%. Ollie.
Thanks very much. Min Lo in Hong Kong with the wrap-up of the Asian markets. Now let's take it to the commodity market. Oil prices are in focus today after Bloomberg reported that the U.S. is still pursuing a third tanker near Venezuela. This as President Trump intensifies an oil blockade of Nicolas Maduro's government. For more, let's bring in Bloomberg's Stephen Stepczynski with the latest of what's going on there off the coast of Venezuela. Stephen, if you could just for us illustrate the scale of the sort of Venezuelan blockade right now and how much oil is now at risk.
Yeah, so I think earlier this month we had the Trump administration seize a U.S. sanctioned oil tanker, and then he put a blockade saying that they were going to also be stopping any other sanctioned oil flows. I think there was a wide expectation that means unsanctioned vessels or maybe even empty vessels would be fine to continue going to Venezuela as long as they weren't leaving the area. But over the weekend, Trump stepped that up again. They seized a non-sanctioned non-sanctioned vessel carrying Venezuela crude, which the U.S. said is carrying, sanctioned fuel. The U.S. has sanctioned those oil exports, so they were able to board that vessel. And then now they're pursuing a third vessel, which is not carrying any oil, but it's on its way to Venezuela. According to analysts and those who follow the market very closely, that third vessel is seen as part of the shadow fleet and has ferried sanctioned oil in the past. So overall, Trump's effort at setting up a blockade is going to likely fall down to whether or not other ships are willing to try to take that risk. The risk is that they could be boarded, that they could be seized. And if that does happen, that's going to reduce Venezuela's oil exports quite significantly. Now, the impact on the market so far, I think it's more of a shock and bang sort of thing, and you're seeing prices kind of jump a little bit because of that as a knee-jerk reaction. But when you actually take a step out and look at the fundamentals, the oil market isn't really that affected. Venezuelan crude makes up less than 1% of global demand, so even if you take a lot of it off of the market, especially since we're going to an oversupplied oil market next year, more so than we are at the moment, there's ways to find alternative supplies. So to summarize, yes, Trump is ratcheting things up. Yes, there is an impact on prices right now, but in the long term, the market is likely going to be able to find replacements.
So, Stephen, it's a pretty muted reaction in terms of the impact that it's going to have on the broader oil market. What kind of impact is this happening on the Venezuelan economy? How much pressure is being brought to bear on Maduro? Do we have a clear picture of how much pressure this instigates?
Yeah, I mean, this is a much larger impact on Venezuela itself, their economy, and the leadership than it does on the broader oil market. Venezuela needs those crude sales far more than the Chinese need it, for example, purchased through shadow fleet vessels. Now, they need this because they need the currency, they need the dollar, they need some way to prop up their economy, some sort of sales to help them there. So according to analysts, if this were to continue, this would be a huge hit on their economy. It could lead to more inflation. It could really hurt their coffers and also put further pressure on a government that's under attack by the U.S. government. So when you look at that all together, it does seem like the Trump administration is aiming for some sort of regime change, and this is their way of doing it through at least economic means.
Well, Bloomberg's Stephen Stepczynski, thank you so much for bringing us that latest off the sort of coast of Venezuela there and how much the impact will be on the oil market. Taking from oil to gold and silver. Gold and silver both hitting record highs amid heightened geopolitical tensions as U.S. President Donald Trump intensifies the blockade on Venezuela that we were just talking about. For more on that and the hopes for a year-end rally, let's bring in the Bloomberg M Live strategist, Ven Ram. So, Ven, is the Santa rally on? Can we call it at this point in the year?
Morning, Oliver. Good to be talking to you. I think that, there is definitely a Santa rally in the works, especially if you look at commodities and U.S. stocks. I think what is happening with commodities is interesting because it is usually the gold that kind of sets off silver on a rally. But this time around, it's the other way. It's silver surging higher and higher on the back of the supply squeeze story, and that tail is wagging the dog, which is gold. And gold has gone up to a new record today as we speak. So I think that, gold is going to go further as well, perhaps in the first quarter. Why do we say that? Because there's seasonality in gold. In the first quarter, in 17 of the past 20 first quarters, gold has rallied because that ties into the seasonality of heightened wedding demand in India and in China for the Lunar New Year sales. So that augury holds well for gold and silver in the first quarter. And of course, stocks, there's no reason to be selling US stocks at the moment for traders because there's the story of artificial intelligence propping up valuations. So it does look like Santa is coming to the markets this time.
And part of that story is, of course, what the Federal Reserve is expected to do next year. We've had some comments out of the Cleveland Fed saying that maybe it's time to take a pause and see where things go. What do you expect from the Fed next year, and how much is that playing into both the rally on commodities but also the broader equity market?
Well, the Fed has outlined one more rate cut in 2026, according to the December 2025 dot plot. So if they take it to heart, I think that we should be getting just about one or probably two rate cuts, depending on how the labor market functions from here on. We had one very low inflation print in November, but that has been distorted by sampling issues. So it would be hard to read into that, which is what Beth Hammack mentioned over the weekend. So I think that, if you look at average PCE inflation, Oliver, this year, it's been hovering around 2.8%. So with Fed rates already at 350, there is not much of a case for them to keep going lower and lower. And for them, they may want to preserve the level of restriction in the Fed funds rate. So I think that, the Fed is going to be restrained, not be able to cut rates as much as investors think they will be able to cut rates. But gold and silver, to your point on gold and silver, I think they are their own trajectories. I think their rallies have gone far beyond what would be mandated by rate cut expectations alone. So there is an element of speculation there. So I think that there is no incentive for traders to take too much money off the table there.
Well, Ven Ram, thank you very much there. Gold and silver decoupled from the Fed. M-Line strategist Ven Ram, thank you very much indeed. The Trump administration has defended the decision to pull several pictures from the latest release of the documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files include thousands of pages of pictures, phone records, and notes from investigations, but many of the documents were heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
Bloomberg's Miles Miller there for the latest on the Epstein file release that we got there on Friday. Let's get to the week ahead and all the things that we are watching this Christmas week. On Tuesday, we're going to get that delayed U.S. GDP third quarter reading. The expectations are for a print of 3.2 percentage points there coming in on Tuesday. Also on Tuesday, the Euro area new car registrations. We have seen some really impressive numbers from U.S. EU car registrations in the last couple of months. We're expecting that to continue. October was up about almost 6% in terms of the sales. We're going to wait that November number a little bit later in the weekend, watching very closely the electric vehicle sales alongside that as the EU stepped away from some of its climate targets on combustion engines. And on Wednesday, U.S. jobless data, Christmas Eve, U.S. jobless claims. We're expecting those to continue to signal limited job layoffs. Bloomberg Economics estimates initial jobless claims to come in at 223,000. You can get a roundup from all the stories you need to know on your what's going on today on this edition of Daybreak. We're focusing obviously very much on the silver rally, the gold rally, everything that we're seeing there, and obviously what's going on across in the commodity space as well as in oil. As we understand, the United States is pursuing a final tanker there off of the coast of Venezuela. Terminal subscribers can go to DAYB Go. Coming up, we'll dive a little bit deeper into the crypto markets as Bitcoin sells off into the close of 2025. Are there brighter days ahead? We'll ask the CEO of crypto analytics firm Kaiko. That's next, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Daybreak Europe. Let's get into the crypto sphere a little bit here today. Crypto is set to end the year lower despite a risk-on period for stocks and demand for havens like gold increasing in the last couple months of the year. The cryptocurrency is headed for the fourth annual decline in its history, and the first that didn't coincide with a major scandal or industry meltdown. To dive a little deeper into the market, we are joined now by Ambre Soubiran, the CEO of crypto analytics firm Kaiko. So, Ambre, thank you so much for joining us this morning from Paris. We'd love to get your perspective on sort of what is driving crypto at this point. When we thought, or I thought at least, I had some understanding there was a coupling to gold. We have that massive sort of decoupling into the end of the year. What's going on?
So I think the decoupling is more an indication that crypto, and specifically Bitcoin, is now its own asset class. We've seen a very significant shift during the year and a fundamental change in the types of flows we're seeing in the crypto markets. Earlier in the year, we've seen a lot of participation in ETFs and digital asset treasuries, and that pushed market depth to record high, as well as provided some form of liquidity floor. That has somehow withdrawn in the second half of this year, but it was more a signal that institutions are shifting from momentum buyer to price-sensitive allocators. Mm-hmm. And I think this is more an indication of the industry maturation rather than a weakness. Mm-hmm. And what we're seeing in the markets is basically deeper order books, tighter spreads, and lower volatility.
And so how do you account for that sell-off in the last couple of months?
I mean, first of all, there's a correction, just a natural correction from the second half of the year that was very strong. Then we have seen the October 10th crash, which was quite significant. We've seen $2 billion worth of Bitcoin that was liquidated on the markets, and this is not something we can completely ignore. However, I think it's important to point out that the October 10th crash didn't break the market, right? It was more like it provided a reset, and it wiped leverage for a while. It flushed out the leverage. It controlled, it tightened the risk controls, and I think the investment became slightly more conservative, especially when we look at leveraged derivatives markets. That being said, it didn't retract any of the investor demand. I think it just transformed, a fundamental shift from the investors in how they become more kind of balance sheet risk-focused investors and rather just momentum buyers.
And so you've taken us through some of the lessons I think we've learned, some of the things we've learned about Bitcoin and cryptocurrency in 2025. Looking into 2026, what do you think are the catalysts that are going to be really driving the crypto trade going into next year?
Yeah, so we're seeing mostly three main trends, I think, that we're going to be driving the crypto prices as we enter in 2026. The first one is obviously all of the institutional inflow that is broadening the buyer base, and that is about durable buyer base, right? We're talking about identifiable institutional participants that are investing from balance sheets, and that, I think, is a structural change in the nature of crypto markets. So institutionalization is one of them. The second one, which I think is a very interesting trend, is perpetual futures. This is still driving somewhere around 60% of Bitcoin volume is driven by perpetual swap trading. And this is going to be interesting to see how it plays out over 2026. It's important to note also that most of the perps volume is concentrated on a single trading venue called Hyperliquid, and they're getting increased competition, and we're going to see that evolve. Now, the third interesting theme in 2026 is stablecoins. And stablecoins, we're going to see how that kind of moves into a more durable settlement layer for on and off chain, and how that becomes a structural piece of the market infrastructure. We've seen this year record volumes for USDT and USDC. And I think we're going to see large-scale stablecoin adoption. We're seeing regulatory clarity around stablecoins, and that will be a very important trend as we get into next year.
And in the things you're sort of looking for catalysts for next year, I didn't hear President Trump. How important is the President of the United States and him making crypto a sort of priority? Do you consider him still to be one of the catalysts here, and what could he do to support the market? And do you think that it's still a priority for him in his administration?
I do think it's still a priority for him. I think he did, completely create a release of the pressure, of the fear pressure that institutions had doing anything remotely related to crypto. He did that in a way that created some volatility and confusion about a year ago. But when we look at where we are a year from from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this. And I think getting into next year, it's we're past a point of no return when it comes to regulation and institutions interacting with crypto markets. And that has also released all of the pressure around initiatives about using blockchain as a technology, and this is all we hear about tokenization. Recently we've heard about the native tokenization on-chain of U.S. treasuries. I mean, we're seeing now so much more than just crypto, and a lot of that is due to the current administration around views around crypto and blockchain in general.
And I'd like to end on a very sort of unfair question, which is, where do you see Bitcoin ending the year next year, if you can make a call on that?
I've seen a bunch of assumptions around 200, 250, and I would agree with that.
Okay, well, thank you so much, Ambre Soubiran, CEO of Kaiko, joining us this morning from Paris. Thank you very much. Coming up, talks between the U.S. and Ukraine described as constructive, but still no deal to end the war. More on that later in the program, and this is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The U.S. president's most senior economic advisor has warned of, quote, administrative problems if the Supreme Court rules against Donald Trump's tariffs and orders refunds. Speaking to CBS's Face the Nation, Kevin Hassett said he's confident the Supreme Court will find in the government's favor.
We really expect the Supreme Court is going to find with us. And I also think that if they didn't find with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
And Spanish Prime Minister Pedro Sanchez has suffered a large defeat in a regional election. The People's Party won 43% of the vote with 29 seats, while Sanchez's Socialist Party won 18 seats. Support for Sanchez has been eroded in recent months by scandals and graft investigations, leaving the government increasingly isolated politically despite Spain's strong economic performance. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment in accounting software maker at $8.4 billion, including debt. The private equity group also includes participation from the Singaporean state investment company Temasek and key support from Francisco Partners. And coming up, Russia threatened legal action if its assets are used in the fund to fund Ukraine's war. More on that next. This is Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Gold, silver, and copper all hit record highs while stocks rally in Asia and investors bet on a strong finish to the year. Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding another vessel over the weekend. Plus, talks between the U.S. and Ukraine described as productive and constructive, but President Zelensky says the signals from Russia remain, quote, only negative. Getting into a little bit of the cross-asset picture here this morning as we head into this morning of trading here in Europe. We are looking at futures for the European stocks 50, up about 1/5 of a percentage point, almost a quarter there at 5,778. FTSE futures 100 down a little bit, just a hair down, about 1/8 of 1 percentage point. Where the real action is the S&P futures and the NASDAQ futures building on those gains on Friday. S&P futures were up almost 1 percentage point on Friday. They wiped out all the losses that we had seen on the week. That builds again today. NASDAQ futures up almost 1/2 percentage point. We saw them close up about 1.3% on Friday, so that rally continues into Christmas week. When we look across the boards, cross asset and the rest of the sort of market, gold, of course, hitting a record high for the year, once again beating what we saw back in October. $4,400 a troy ounce is what we're looking at this morning, up 1.4 percentage points. Brent crude catching a bit of a bid after those headlines we're seeing off of the coast of Venezuela. U.S. Treasuries, for their part, up about, let's call it 2 basis points this morning, and Bitcoin also catching a bid, up almost 1 percentage point this morning. Moving on to Ukraine, the U.S. Special Envoy Steve Witkoff says talks with Ukrainian officials from Ukraine and Europe were productive and constructive. Meanwhile, the U.S. U.S. Secretary of State, I should say, Marco Rubio, says that the U.S. is still hoping for a deal that satisfies both sides.
Only a negotiated settlement gives us the opportunity to end this war. A negotiated settlement requires 2 things: both sides to get something out of it, and both sides to give something. And we're trying to figure out what can Russia give and what do they expect to get, what can Ukraine give and what can Ukraine expect to get. In the end, the decision will be up to Ukraine and up to Russia. It will not be up to the United States. So that's the role we are trying to play in this, and that's why you see so many meetings going on. This is not about imposing a deal on anybody.
Well, Bloomberg's Jill Desis is in Hong Kong. Jill, thanks so much for joining us this morning. We know that these conversations and many of these negotiations have sort of moved underground in terms of what their actual content is since we saw that 28-point plan initially. Do we have an idea of what was discussed this weekend, excuse me, and how much progress was made?
Yes, Oliver. Well, what we've heard from the U.S. side, at least, is that they did discuss that, 28-point plan. Of course, that's something that obviously the initial plan put forward by Witkoff was met with quite a bit of resistance from the European side. But although Zelensky and the Europeans did counter with something, so it does appear that there was something in sort of the gist of a multi-point plan that was discussed at this meeting. They also talked a lot about U.S. security guarantees for Ukraine potentially. That's something that we did get an inkling of about a week or so ago, might be something that is moving forward the needle a little bit, that the Europeans were maybe more satisfied with the U.S. being more open to the idea of sort of Article 5 style security guarantees for Ukraine. And then they also discussed more about the economic development for Ukraine. So, obviously really, really big picture topics here that are being discussed, a lot of which has had, a significant amount of movement in the last few weeks. So, the fact that we've got these sides saying that these were productive, constructive talks does indicate that at the very least, there does seem to be some negotiation on some of those finer points when it comes to the main things that we're looking at, this idea of a, multi-point peace plan, and then obviously, also talking, a little bit more about those security guarantees.
Yeah, we also got an offer for trilateral talks that would include the United States, Ukraine, Russia, possibly the Europeans. Do we have a clear idea if we're at a point now where that is sort of an appropriate measure? Do we think that can happen, or is there any other kind of sequencing we need to be paying attention to for the next couple of days?
Right, Oliver, I think, it's actually, unfortunately, still a little bit vague at this point. So what we heard from Zelensky last Friday as these talks were about to, sort of get underway, was that, he was saying that it was really sort of contingent on how the outcome of the U.S.-Ukraine talks went to, whether or not he thought that they could actually get to that point where you're looking at some kind of a trilateral. The latest we heard from Zelensky on Sunday was, effectively that, they were in discussions here, but obviously, as we've been discussing this idea of maybe Russia being the sticking point here. It could be possible that we get something, but I think at this point, obviously there's still some of these pretty major sticking points. Zelensky is not willing to give up a lot of these territorial considerations that Russia obviously wants, and something that the U.S. has been trying to negotiate on. So it does seem like that does continue to be a sticking point, and I haven't heard anything out of the talks so far, whether this weekend or prior, that really indicate that we've seen any sort of a true meaningful breakthrough there. Obviously, Donald Trump himself has gotten, incredibly involved in these kinds of conversations, meeting with Zelensky, meeting with Putin. Whether we actually see something that results in sort of that three-way meeting, I think we just don't really have as much info as we'd really like from the outcome of this meeting, as promising as it is for them to say that talks have been productive, to actually see whether or not we've got a trilateral meeting in short order.
Well, Jill Desis, thank you so much for your time this morning out of Hong Kong for the update there on those discussions that took place over the weekend in Florida. The Russian president, meanwhile, has threatened legal action if international reserves are seized. Vladimir Putin was speaking after the European Union decided against tapping those Russian frozen assets and to help fund Ukraine's war effort.
We will protect our interests. Where? Well, first of all, in the courts. We will try to find a jurisdiction that will be independent of political decisions.
Well, For more on this and what we saw out of Europe on Friday, we're joined now by Elena Rybakova, non-resident fellow at Bruegel. Elena, thank you so much for taking the time this morning. I'd like to get into some of the sort of big news we got out of the Europeans. Last Friday, we do have a 90 billion euro loan that will go to the Ukrainians, what they are calling, a major breakthrough. And obviously that is for Ukraine, which we know was running out of money in the first quarter of the year. First, let's just set up what the significance of getting that money to Ukraine is and where that puts Ukraine going into 2026.
Well, the IMF estimates Ukraine's financial needs about $65 billion over the next 4 years, most of that coming up in the next 2 years. That is the big issue for the moment. And this money goes a long way to be able to deal with that. Then we have the issue of military needs. The military needs are significant as well, about 60 billion per year. And this money, 90 billion, covers Ukraine for about a year and a half.
And looking at what the actual deal was and what was struck there, I mean, I was at the meetings there on Thursday and into Friday morning, and I was covering it. I did not have a very clear idea of how exactly this was working. We understand that it's joint debt. It's going to be backed by the EU budget, but at the same time, it's kind of backed by the Russian assets. So you have European leaders saying that actually this is not a risk that the European Union and member states are carrying, and yet they still seem to have kicked the can down the road on what to do with those Russian assets. What is your understanding a couple days out from this of how this is actually going to work?
Well, it still remains very confusing. We'll look forward to more comments from the European Union members, from the member states, as well as from the European Commission, because the article says at the moment 90 billion against the budget headroom in the EU. So it's common borrowing against the budget headroom. At the same time, the 3 smaller countries are exempt. So in the unlikely scenario where Ukraine sort of defaults on the loan, then the 3 smaller countries will not be liable for this money. So we're looking forward to hear more about the details. However, it's not surprising we don't have all the details because the European Commission European member states had to come up with it at the last moment. And therefore, it's also a very big deal. Let's remember the common borrowing in the EU. We've had it during the COVID period, and since then it's been very small. So it is a big deal for European Union to go ahead with this.
And thinking also about what it tells us about European risk appetite and how, to what degree they seem to have been intimidated by Russia, potentially by the Trump administration. What do you think it tells us that they decided to not go for these Russian assets?
Well, it tells you that the European Union is still very afraid to have a confrontational stance with Russia. And I think it's more important about sort of fractures in the European Union. Some countries are closer than the others towards Russia, and therefore there are more pressure points to apply to these countries.
And also looking at the Russian economy itself, I have a simple question for you, but it's actually a pretty complicated one, which is 4 years into this war, after all of these sanctions that we've seen on the Russians, how is the Russian economy faring? Do you have a clear idea of that? This is something that you study very closely. And looking into 2026, on what footing is the Russian economy?
Well, the Russian economy is in recession at the moment. It's unlikely we will actually see the numbers that will show negative growth, but for this last half a year of 2025, Russian economy has stalled. Most likely there will be either zero growth or maybe very marginal growth for the year as a whole. Next year, it's a big breaking moment for the Russian economy because they're running out of funding, not enough to stop the war, but they're running out of this sort of cyclical boost to the economy, and they need to find a new way to expand production, and they've been struggling with that.
And looking at the sort of peace negotiations, is this a moment at which the Russians can sort of afford to end the war? They've sort of basically geared their entire economy to be a wartime economy. Obviously, when you reshape an economy to that degree, stopping a war the next day is going to have a major impact. Do you think that that is why, part of the reason the U.S. administration is so insistent on having them come back to the global economy, because that is a sort of necessity for the Russians if they are to end this war?
It is a necessity for them, but let's not forget that the geopolitical objectives have been much more important for this administration than any economic objectives. Yes, that would be critical for them to reintegrate back into the global economy, but they have strengthened their ties with China, and I think the economics at the moment is subject to the geopolitical objectives.
Do you think there's anything the United States could do to force them to the negotiating table? Could those, for example, Lindsey Graham sanctions, those secondary sanctions that put, 500% tariffs or whatever it is on any country buying crude oil, buying natural gas from the Russians, would that be enough to bring them to the negotiating table?
I think pressure on the Russian oil and gas exports is the key measure to try to slow down the economy and their ability to finance the war. However, it is not the secondary tariffs. It's rather the secondary sanctions on the financial system that can make it or break it on the oil and gas exports as well as the export controls.
And it seems the Europeans have managed to get themselves sort of a seat at the table, maybe a seat at the kids' table in these sort of negotiations. Do you think there's anything left for the Europeans to do that could actually earn them a seat at the actual table here?
Sorry, could you go ahead? I just sort of had a break in my connection.
No, I was just wondering if you think there's anything left for the Europeans to do to earn themselves a seat at the table in terms of these negotiations. Is there any room for them on sanctions, Russian assets, anything else?
I think Europeans have the critical role on the shadow fleet, as well as developing their own ability to do secondary sanctions, as well as being part of the negotiations with backing up Ukraine in these negotiations.
Well, Alina Rybakova, thank you so much for your time this morning, non-resident fellow at Bruegel there for the latest update on the assessment of the Russian economy and the path forward for Ukraine. Coming up, we'll discuss how AI is transforming cities next year and the role of entrepreneurs in innovating towards net zero. Will 2026 be the year of autonomous cars? Our next guest thinks so. That's next, and this is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make novel style.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Last week, the European Union rolled back plans to phase out combustion engines by 2035 in the latest challenge to the energy transition. It caps a year in which the COP Climate Summit achieved so little that it was rated 2.5 out of 10 by Bloomberg NEF, competitive category for least productive years on climate technology. My next guest argues that it won't be politicians who will solve the climate challenge, but rather it will be entrepreneurs. Tommy Standlin, thank you so much for joining us, co-founder, general partner at Giant Ventures. Thank you so much for joining us this morning. Let's deal first with this question of climate. Is this sort of the mirror in which the kind of climate ambitions sort of died officially? Is there more going on beneath the surface that we should be aware of?
Well, you mentioned COP. I've been going to COP since COP 15. I think it's now COP 30, 31, and we're still no closer to the politicians sorting this issue out. And I think the reality is no action is going to be taken by the UN or by politicians. But there is incredibly meaningful action being taken by entrepreneurs all around the world. And this was the year, I think, 2025, where in some ways climate died a death in terms of economic interest. But that is so completely different to what's going on under the surface. I think climate's had a rebrand. So the same technology companies which are performing extraordinary feats are now rebranding themselves as American dynamism companies, or they're working on AI. But the reality is, I believe the climate is warming, whatever the man in the White House may say. And I believe, therefore, that if we get anywhere close to decarbonizing the global economy, that is the biggest investment opportunity of the century still. But what's happening is that the companies which require a green premium, they require governments or customers to pay more for climate action, are not going to win.
Is there a way in which, and this is maybe doing some acrobatics to try to build the sort of climate narrative here, but in the way in which sort of AI, all this energy generation that is required for these data centers, for running these AIs, particularly in Europe where you have a continent that is basically very poor in natural resources to generate that energy, could that be a catalyst that actually builds the argument for renewable energy in order to run these things?
I think that's absolutely right. You know, everyone talks about AI, but the fundamental requirement for AI is clean and cheap power. And that is the big opportunity for the renewable sector. We've been here before in, you know, the clean tech 1.0 boom and bust, and everyone was saying what a disaster that was economically. But actually that produced solar and wind, which is now some of the cheapest energy in the entire world. Solar is, you know, the cheapest form of energy, and you can have enormous success in powering data centers, not just from those type of renewables, but also companies like Radiant, who we backed at Giant, who have signed up $1 billion deal with a data center to provide cheap and clean nuclear energy. So it is a massive opportunity for green tech to be part of the solution to AI and not be left behind.
Now I want to get into some of your kind of bold calls here for 2026, saying that 2026 is the year for physical AI, going out of the chat box and into what?
Absolutely. So I think, you know, so far this year, your viewers will have been using AI to generate images, to maybe make presentations, do legal work, and that's all really exciting, using chatbots for that type of thing. But I think what's even more exciting is how AI is going to transform the physical world. And I think you'll see companies like Cusp AI in London, who are using AI to discover new metal organic frameworks that can redesign things like semiconductors or electric vehicle batteries. Those type of companies are going to not just transform industry, they're going to completely redesign it from first principles. So I think 2026 is the year that AI kind of gets out of the chatbots and into the physical real world to start fundamentally redesigning it. And that is an enormous economic opportunity.
And you think that 2026 is also the year of the autonomous car? It will be driven around in 2026. Is that going to be just in the United States, where it's going to be a little bit easier regulatorily, or are we going to see that in Europe here as well?
Yeah, well, so Waymo is coming to London and Tokyo in 2026. And I think, you know, there's a classic quote about technology, which is the future is here, it's just not evenly distributed. Right. In San Francisco, a quarter of all ride shares are done by Waymo, more than Lyft now. And it's almost zero outside of San Francisco. So if you go to San Francisco, it kind of feels like the future's arrived. It hasn't yet here in London, but it's coming in 2026. And I think you'll start to see very quickly cities feel completely transformed. And by the way, autonomous vehicles can save, you know, 1 million people die every year from car accidents. That can be completely transformed through autonomous vehicles.
And you also see coming of age for European tech. I feel like we've heard about that for a couple of years now. Why is this year different?
So I think that the year just gone is actually a really important year where we've seen some very, very large rounds for AI companies, but also companies like Revolut. Revolut hit a $75 billion valuation this year. So in Europe, we've always had the technical talent. We've always had enough venture funding, actually, in the last few years. What we've really missed is those big success stories, which get to very large scale. And when companies like Revolut get to $75 billion, that created 200 millionaires so far. Those people become not just angel investors in the next generation, they become fantastic founders themselves who go on to start companies. At Giant, we've backed a number of ex-Revolut founders who bring the rigor and the kind of dynamism from that company. And so the role models and the trickle-down effect of talent and angel investors, that takes a lot of time. And yes, we've been talking about European tech for a decade plus, but it does take time for the big winners to emerge and then for this sort of second-order effects to trickle down. And we're starting to see that now.
And I'm wondering if you have a view on European tech, particularly on the continent of Europe, and particularly now with with this European Commission that is theoretically supposed to be cutting back regulations, supposed to be sort of generating more investment into the private sector for European tech. Do you see that as something that's going to actually make a difference? Is it come into your thinking at all in terms of what the Europeans want to do?
Yeah, well, so we've got a view at this, John. We invest 50% Europe, 50% US. And our US friends are often laughing that the only thing that Europeans are good at innovating is the little bottle cap lid, which stays on top and annoys everyone. Actually, I think there's far more going on.
Many memes on there, yeah.
Many memes. But the reality is, Europe minted 28 unicorns this year so far already. So there is enormous progress in technology, and I think we have every bit of a right as the US, particularly on AI and physical AI, at the intersection of technology and some of our big industrial incumbents.
Well, Tommy, thank you so much for joining us this morning. Greatly appreciated there for a view of tech going into 2026. Tommy Stadlin there, co-founder and general partner at Giant Ventures. Excuse me. Now some other news making stories this morning. A power outage across large parts of San Francisco on Saturday led to major disruptions with Waymo's driverless cars freezing mid-journey, potentially some of the risk of those autonomous cars. Passengers who were in those Waymo cars at the time said they were confused by pedestrians crossing at junctions where traffic lights had failed. The Tesla CEO Elon Musk says his company's robotaxis were unaffected by the power cut. An engineer has become the first wheelchair user in space, blasting off with Blue Origin. Severely injured in a mountain bike accident 7 years ago, Michaela Benthaus rocketed away from West Texas on Saturday with Jeff Bezos' company. The launch marked the 16th human space flight for Bezos' tourism company, using New Shepard, a small craft built to send people to short distances at the edge of space, as well as to conduct research missions. Disney's Avatar, Fire and Ash has debuted as the top of the Chinese box office, earning almost $58 million in its opening weekend. It's the second highest debut for a foreign title film this year after Zootopia 2. China's box office take has topped $7 billion this year, exceeding last year's total. The top 5 foreign films have generated about $850 million. Plenty more coming up. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amir, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. We are looking at a couple of charts here to close out the day for us here on Bloomberg Daybreak Europe. The rally in the MSCI Asia Pacific Index, you can see just gathering steam here into the end of the year. And you really think about where we've been this year. This absolutely cratered out back in April, back in Liberation Day. No sign of turning around ever since then, really rallying until the end of the year. And moving along to the commodity space, we're looking at precious metals. Gold has been what we've been talking about. We've got a record high there, but there's another metal that is outperforming even gold. That's rallied 25% in the last 10 sessions. That is platinum. You can see it there, absolutely reaching for the skies there, actually beating gold substantially over the last year, up 118%. Gold up only about 70%. We're also considering, as we close out the year, the dovish year that we've seen from these central banks and the sort of rate cuts we've seen across the board. It's going from the ECB, 100 basis points there. Looking at the Bank of England, another 100 basis points. Bank of Canada, another 100 bips. And the Federal Reserve coming in at 75. Some pretty active debates about what's going to happen next year. And, of course, the BOJ, really, of these major central banks, really the only one to have raised rates by 25 basis points this year. Looking at the futures heading into today's session and opening trade, we're seeing stocks in Europe down a little bit there, about down 1/5 of a percentage point. Similar picture for FTSE futures, down about 10 basis points. But again, I think where the action should be focused and what we're watching very closely, S&P futures building on that rally on Friday, up almost 1 percentage point on Friday, wiped out all the losses, and the NASDAQ up almost another 1/2 of a percentage point after gaining 1.3% at the end of last year. And we'll be speaking a little bit later to Fed Governor Stephen Myron on surveillance at 1:30 London time. That's it for Bloomberg Daybreak Europe. Opening trade is up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this cost that amount of money, this cost that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning from London. I'm Anna Edwards alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding a second vessel over the weekend. Gold and silver hit new highs thanks to geopolitics and rate cut bets as supply concerns, tariff fears and strong demand drive copper prices to a new record. Plus, Japanese yields rise amid speculation the BOJ may need to raise interest rates more aggressively to curb yen weakness.
Okay, good morning, Anna. Good morning, everybody. Let's put all of that into numbers and talk about where we sit with these markets this Monday morning. Euro Stoxx 50 futures are actually down, which is interesting because US futures are higher. Are we going to see that discrepancy closing? The Japanese bond market, epicenter of the action, I would argue. Japanese 10 years north of 2%. When was the last time we were north of 2%? Oh, yeah, 1999. Is the BOJ going to have to move earlier? We're going to talk about that in just a minute. And pick your commodity this morning. I picked gold, but there's plenty to pick from. Gold is up by 1.84%. As Anna says, fresh records. So gold and silver. Copper's on the move. Gold and silver and the precious metals complex are moving higher. But actually, in some ways, the geopolitical story could be in oil. That's also moving higher. We've got a lot to talk about on all of those fronts. I picked gold. It's up by 1.85%. We're going to be spending a lot of time in this show talking about commodities. So let's get it going. The countdown to the opening trade starts right now. Monday morning, good morning. Pick your commodity. Gold, silver, oil. Let's start with oil. Talk about what is happening in Venezuela. The Trump administration is after a third tanker, part of the dark shadow fleet that we talked about in relation to China and Russia and Venezuela. The grip is tightening around Venezuela. What impact is this going to have? Are we expecting higher oil prices? And if so, how does that feed through?
Yeah, we are seeing slightly higher oil prices just this morning, up by 1% then, guys. 61.13 on Brent. We dipped below $60 a barrel last week as we were watching that glut story play out, but then putting a floor under it with this geopolitics. And that continues to be the case this morning. So there's the Venezuela story. Yes, they're after this Centuries tanker. That's the one they boarded, over the weekend. Now they're chasing another one called Bella 1. This is a country that has the largest reserves in the world, but it doesn't export very much right now. What it does export goes to China, and that is the target of the Trump administration right now.
The question is, what message does this send to others that use the shadow fleet as well? Is this also an attack on Russia? Does this have any impact on Russia? What does it do to this kind of secondary market that exists in global oil? And how does it, which actually hasn't changed very much. What you've seen over the last few years is a kind of shuffling of the decks of where oil comes from and goes to. And that has changed quite significantly. You've seen this kind of rewiring process. If you start taking some of these ships out, and taking them to the United States and effectively locking them down, does that change the market for Russian crude? And how does that change India's story and China's story when it comes to crude?
And we are seeing some news flow surrounding the Ukraine story and Russia in that context over the weekend. And on Friday, we saw for the first time a Russian shadow fleet tanker being attacked in the Mediterranean. So this is taking these things to another geography. And this was by Ukraine, of course. This was an empty oil tanker, so not at risk of spilling. But we've also seen Ukraine striking a Lukoil facility in the Caspian Sea. So there is a step up in that kind of attempt to fight back by Ukraine, as the conversations over the weekend in Florida continued between the United States, Ukraine, and the Europeans, at least.
So let's talk about what signal does this send, and let's fold in some of the other kind of metals that we've already mentioned. Gold is up and silver are up. They're up partly on geopolitical concerns. They're up partly on kind of this liquidity story surrounding what is happening with this market, and also concerns about lower rates. There's kind of various things moving gold and silver. Copper, I think, is a much more interesting story as well. And what you're increasingly seeing is a sort of balkanization of the copper market, which takes me back kind of to the oil market. You're seeing kind of segmentation. There's this balkanization. The copper market is now so strategic that it's becoming a critical asset in the way that I just wonder whether Venezuela kind of fits into that narrative as well. I don't know. Copper's going higher. There's clearly an electrification story that surrounds that. You've got fresh records there. You're going to see a lot of choppiness next year because you're going to see a different price in London and New York and Shanghai, and that's going to be really interesting to watch as well. But what does it tell us broadly about inflation? And I think that's the kind of the step back moment. Is all of this basically signaling that there's a lot of people out there trying to hedge the inflation narrative?
Well, that's interesting, isn't it? Because for a lot of when we were worrying about what it would mean to put sanctions on Russia at the start of the Russian attack on Ukraine, we talked about balkanization, about the world falling into different camps, and that would be inflationary broadly. And there has been a conversation about inflation over the last couple of years, of course, but there's also been downward pressure because of increasing supply from OPEC Plus on oil prices. So that has been actually the dominant theme of late, hasn't it? That negativity around the oil price because of OPEC Plus. But yes, you're right to highlight everything thing that's happening in precious metals. We're seeing the highest levels on gold and on silver since 1979. We're also seeing the highest levels on copper since 2009. So incredible moves that we're seeing there. Whilst we're thinking about inflation, let's talk about yields, shall we? And what's going on with Japan, but not just Japan, the global yield narrative.
So let's start with Japan and talk about Japan. You've got the currency chief in Japan out voicing his concerns about the fact that we've seen a rate hike but the yen falling. And there's talk now of intervention. We're chasing the 60 level. The market's clearly going to target that. What are the Japanese going to do? I think that's the question this morning. So we've got a weaker yen. What do the Japanese do next? Do we just see verbal intervention? We've already got that. The market, I think, was probably expecting that. Do we see further and earlier rate cuts coming through? And I think that's the real question. That takes you to your yield story. If we see rate hikes, make sure I get that the way around because it seems anomalous.
Yes.
If we get rate hikes, how much further do the Japanese go? And does that change the narrative with relationship to other bond markets as well?
Yes. Well, what do they need to do to change the narrative around the yen? Because we've seen the yen disconnect from that yield story quite considerably over 2025. So even as we were waiting for these hikes to come through from the BOJ, there was a thought in the markets that, well, there were other things at play when it came to dollar yen. And certainly the yen was not getting a benefit of that sort of interest rate conversation that was happening in Japan. So will they need to come back with more? And we certainly see yields on the move as a result of that. But the global story you nod to is really interesting because on Friday we saw Germany and France, the yields there up by 4 or 5 basis points. Not a huge amount, but this is slowly ticking through. And there was a lot of talk about a stronger Germany. The Bundesbank had a report out talking about a stronger German economy. And if that starts to go global, we've got Treasury yields higher again this morning. If that starts to go global. The US 10-year has struggled to go below 4%. It has done a little bit. But will it start to come back? It seems to be the conversation on the Markets Live blog this morning. And what will that do to stocks?
Yeah. Do you get let's talk about 30 years. What happens to the German 30-year? What happens to the US 30-year? Is the US 30-year potentially going back towards 5%? 5% really matters in the States because mortgage rates have been coming down. The rest of the world doesn't fix in the same way that the US does in terms of the back end of the bond market. Are we going to see that potentially coming through as being a factor into 2026? I don't know, but it feels like the bond market is still setting up other asset prices for some potential shocks. When you get to 5%, you get back to 5% on a US 30-year. What does that do to stocks? What does that do to some of these commodity trades?
And we've asked a number of times on this programme, what happens to the Trump administration's desire to get rates lower if putting somebody more dovish in the seats at the Fed doesn't quite deliver it because the back end of the bond market has just not been listening to front-end rate cuts.
It won't, and probably will continue not to do so. We're going to discuss all of this with Isabel Mateas Ilaga. She is going to be joining us very shortly, BNP Paribas Group Chief Economist. Start with Japan. We'll move on from there. Ben Haddad, France's Minister for European Affairs, has much to discuss with us this morning as well. We'll talk French politics. We'll also talk about the European picture with Ukraine, and there's lots. Europe has a lot to decide at the moment. William Sells, Global Chief Investment Officer at HSBC Private Bank and Premier Wealth, will be joining us, and Tom Athron, Fortnum & Mason's CEO, in full Christmas mode. He doesn't want Fortnum's just to be about Christmas, though. We'll talk to him about what that looks like into 2026. Fed Governor Stephen Myron will be joining Surveillance at 1:30 p.m. London time.
Let us tell you what is coming up this week. I mean, it's Christmas week, so not as much as usual is the short answer. But tomorrow we do get US GDP data. We also get US jobless claims on Wednesday. That's pretty much where it stops in terms of the data points. So that's exciting. Tuesday, Wednesday we'll deliver some news. Then on Thursday and Friday we see markets closed substantially here in Europe. Of course, we'll get trading over in the United States on Friday. I was looking at some Bloomberg economics research, Guy, around the Trump administration and all the things you thought were going to happen going into 2025, some of which did and many of which did not. And some of the outcomes for markets were not as Bloomberg Economics had anticipated that they would be. And they said that the lesson from this is to not underestimate, thinking about GDP growth coming this week, not to underestimate the supportive factors for growth in the States, AI, deregulation, taxes. And we're going to hear a lot about all of those as we go into next year.
Yeah. The recent data just tells you you've got an economy that's actually doing okay. The labour market looks okay. Beth Hammack's been talking about this as well, talking about the fact that actually the labour market data probably is all right. The US economy looks like it's in okay shape. How much growth do you need to get, though, to continue to see stocks moving higher? And I think, again, that's a difficult one. You've priced in an awful lot of growth so far. You've priced in an awful lot of AI. how sensational does this data need to be to deliver what we've just seen again next year?
And what does the link between the economy and jobs need to look like before the consumer starts to respond a little bit differently? That'll be certainly something we'll pick up with some of our guests.
What else do you need to know? You need to know that the M&A story continues and seems to be gaining some traction. A group of private equity firms led by Permira and Warburg Pincus have agreed to acquire Clearwater Analytics. The deal values the investment and accounting software maker at $8.4 billion. That's an enterprise number, i.e. it includes debt. The private equity group also includes participation from the Singapore State Investment Company Temasek and support from Francisco Partners. The US Special Envoy Steve Witkoff says recent talks with officials from Ukraine and Europe were, quote, productive and constructive. According to Witkoff, the group discussed the developments of the existing 20-point plan, the US security guarantee framework and the economic development plan for Ukraine. The Ukrainian President Zelensky agreed that negotiations were constructive, but noted that signals from Russia remain, quote, only negative. And turning to France, the cabinet there is set to meet today to present a special law that will allow it to roll over next year's critical spending and taxation plans. That's after the 2026 budget negotiations were postponed into the beginning of next year. The Finance Committee of the National Assembly says it will review the special law on Tuesday, i.e. tomorrow, making adoption likely this week. This is a story again for next year. We just feel like we're pushing that French story out, and we'll get Mr. Haddad's take on this a little bit later.
Yeah, absolutely. Really interesting to get his perspective on what's going on. We will get the cabinet they're meeting today, and as you said there, that the context is here that they have this special law in France, which means you can roll over last year's budget if you fail to agree on a new one, and that's basically what has happened here. Then we will get the National Assembly, or part of it, adopting this loi spéciale tomorrow, and so it looks as if you don't go into a US shutdown. Is the way things work in France, but it doesn't mean that you've got agreement on next year's budget, and those budget conversations will then carry on into next year. And what will that do to the spread?
So 2027 is presidential. Are we just going to see another year of huge volatility with French politics? Are we going to have a budget? We're not going to have a budget. We're going to have a government. We're not going to have a government. How much is this basically what we can expect to carry on after that kind of failed parliamentary election? And that 2027 presidential election, the period just in the middle just looks like chaos. But I don't see anything that changes that next year.
And what does business do in the meantime? What does the economy in France do in the meantime? We'll speak to Isabel Mathias-Elago about that subject, as well as many others when we get to her shortly. Coming up on the programme then, Europe's luxury leaders are seen widening their growth in 2026 despite uneven consumer sentiment and a stuttering recovery in China. We will get into the retail story throughout this programme. Plus, defence stocks have been on a roller coaster ride this year. We'll check in on those names at the market open as Ukraine peace talks see some progress. Is it progress that will stick to that sector in the trading day today? Up next, traders keep a close eye on the yen amid volatility in Japanese assets. If you have questions, if you want to get involved in these conversations around the desk or with our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly asked Interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives
and laying the foundation for the future.
From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. This is the opening trade. It is Monday, the 22nd of December. The answer to the question is not quite. Are we nearly there yet? Not quite. No, we haven't quite made it to the end of December. There's still quite a lot of news to talk about this morning, and we have a flat picture on European equity futures, but there's a lot on the move, and we'll certainly be watching what happens with basic resources and all the metals that are listed here in Europe, Guy, because we have some new highs on gold, silver, copper, everything this morning.
Commodities are really interesting, and they tell you something about what the inflation narrative is looking like, maybe going into 2026. And the fact that gold and silver are rocketing higher, copper's rocketing higher, maybe you've got a floor being put under crude as well, which will sequentially matter next year. All really interesting as we think about kind of what inflation does. Then you think about what you're seeing in the bond market, this kind of steepening curve story that you're seeing here in Europe. You've seen it in France and Germany last week, as you pointed out. You've got the US curve kind of steepening up as well. What happens in Japan next could be really interesting around all of this. So let's talk a little bit about that. When was the last time that the Japanese 10-year was north of 2%? 1999. That's quite a significant date, isn't it? Anyway, that's where we are now. We're at the highest levels in 26 years. But the significant thing here is that you've got this incredibly weak yen. And the expectation is growing that not only are we going to see verbal intervention, which we've had this morning, maybe you'll see actual intervention, but you also may see further and earlier rate hikes coming through from the Bank of Japan. So let's talk about that, and then we'll fold in all the other stories. Isabel Mateos-Ilagos, Group Chief Economist at BNP Paribas, joins us around the table. Good morning.
Good morning.
Is the BOJ going to have to go earlier than the market thinks? The market thinks 6 months, next hike. Is it going to have to be sooner than that if we keep seeing the yen doing what it's doing?
I think this could very well happen. I'll give you two other data points to add to your partying like it's 1999. 95. Last time the BOJ rate was at 75, was below 1.
Yeah.
So and it was the first time since World War II. So that's a pretty big deal. But I'll give you another data point, which is the labor market. According to the Tankan survey that we got last week, is at its tightest since 91. And so I think the BOJ is facing a situation where I think the market perceives that it may be getting behind the curve. Now, we heard from Governor Ueda that they're not behind the curve and they don't want to be behind the curve, but I think that's the debate. And the reaction in the yen market to the rate hike from Friday, I think that was the signal. The market fears that the BOJ is going to fall behind the curve, and they can't really afford to, especially with a government that is adding fiscal stimulus into the economy. So our forecast is also that they wait another 6 months, but the risks are definitely towards an earlier hike than.
Is that what is the messaging coming through the yen? Because as Anna pointed out, you've got this divergence between the yen and what is happening with the rate story. The yen is what is the yen? What are the signals that we are getting from the yen? Because the yen is weakening. Is that the market basically saying get on with it?
Yeah, I think that's the signal. And also you have to think it's the BOJ is still very heavily involved in the bond market. So the signals you're getting from the bond markets are a bit muffled.
Yep.
The signals you're getting from the FX market, of course, are a lot cleaner unless the government steps in to intervene. But it's a delicate point in Japan for monetary policy, and they also have to manage the politics, of course, and I think that's why they may have wanted to show that they're not eager to go too fast, but if the market is putting pressure on them, then maybe that makes it easier also for them to move a little faster.
Yes, that's certainly the politics with the new Prime Minister very much in play. Isabel, very good to see you. So how do you think about the global rates narrative going into next year then? If we have Japan hiking, they've been going their own way for a little while now, but the big gaps between these interest rate hikes and coming from a really low level, but a different narrative. Then in Europe, things seem to be in flux, maybe the ECB on hold. There's an expectation the Fed keeps cutting, it seems, and the Bank of England maybe does a little bit more. How do we make sense of this sort of diverging picture?
Yeah, so actually it's not, well, on one level it is diverging in the way that you described. On another, it isn't, because really what you have is an ECB that, even though President Lagarde doesn't like to talk about neutral, basically has reached neutral, sees inflation at target through its projection horizon without an interest rate cut. So it's at neutral. Bank of England, Fed are still above neutral, so they're going to cut a little bit more. Bank of Japan is still below neutral. They're going to raise. So actually everybody's converging to neutral. And frankly, the emerging market picture is not all that dissimilar. So it's a picture of everybody going back to neutral, each with their own path. And the ECB, as you said, is already there. At the same time, you've got still a lot of government borrowing happening, in some cases increasing very significantly, for example, in Germany, which is going to impact the European yield curve. So this process of longer end going higher is probably one that's going to continue. Already was one of the big stories of 25, except in the US, but we expect to see more of that in 26.
And what will be the role of Germany in all of that? This report last week from the Bundesbank suggested, I think it was the second quarter of 2026 was when we really start to see the fiscal impact on the growth story kick in Germany, and maybe leads us to higher yields as well. What's the broader takeaway from that German story for you?
It's a very positive takeaway for Germany and for Europe. I mean, already this year we will have seen Germany finally break out of this no growth picture that it had been in since the pandemic. Really, we're expecting around 0.3% growth this year, and then a big jump to 1.4 next year. That will be a very significant lift for the whole of Europe. You know, whether it's more in the second quarter or the exact quarterly pace, you can debate. We're actually seeing some momentum already in the German economy, and of course, the more the government spending comes out, the more it will percolate through the economy. And also very interesting to see in the growth fund announced last week, the idea of really leveraging private sector investment as well. So it's not going to be just a government spending picture. There's also an acceleration of the plans to really mobilize private spending. So it's going to be very positive, and sure, it's going to drive up long-term yields somewhat, but the way we look at it, it's overwhelmingly positive. The benefits to growth far outweigh the impact on yields.
So here's my question. How long can the ECB stay on hold for? What's the average gap between holding rates and raising rates? Is 26 the year we get a rate hike from the ECB? Is 27 the year we get a rate hike from the Fed? When do we start? Because markets are discounting mechanisms, right? When do we start thinking about rate hikes? Because if we're done with rate cuts, the next logical thing to think about is that.
Guy doesn't like standing still.
No.
I think central banks quite like standing still.
I'm sure they do for now, but history doesn't tell us they do it for very long.
Look, the thing is, our forecast, ECB forecast, everybody's forecast is for inflation to go slightly further down in 2026. So that's not an environment where you're going to want to think about raising rates. So they're going to start to think about raising rates
so a rate hike
further out in 27. Probably more a second half story. But it very much depends how quickly this growth acceleration in Europe materializes itself. If we're not optimistic enough, we're already optimistic, but if we were to see a faster rebound, you could hit capacity constraints maybe earlier in 27. It's possible. Also, let's not forget right now we're expecting energy prices to continue to be a disinflationary influence into next year. But energy prices, a lot of things can happen. But in the central scenario, the rate hike is a second half of 27 story, not earlier than that.
Yeah, could we have different signals coming through on energy? Oil prices going lower, but electricity very different, and a scramble for that, for everything AI and data center related. And depending on your reliance on these different sources, that could read very differently into your inflation figures.
That's right. And in fact, it's interesting when you hear ECB policymakers talk about their thought process. They're increasingly trying to push a picture of, well, let's think about inflation x energy, because energy is volatile and it's got nothing to do with really the health of the economy. And that's tempting. You can see why they would say that. And I think indeed it's important to keep an eye on what's happening to inflation in services, which has been stickier than expected, what's happening to wages. So far, the picture is very reassuring and is really a picture that signals an ECB that's going to be entrenched at 2% for some time, but of course need to keep an eye on that.
So can I park the central bank story in 2026? Is it the Fed's going to do what? Is the Fed going to cut once, twice? Is the Bank of England done? Is the ECB done? The BOJ maybe delivers a couple of hikes? I don't know. Where does the action come from in central banking in 2026?
Yeah, so I think central banks are probably going to be less at the center of the story than they were in the last few years, and that's okay. That means the economy has gone back to where it needs to be, and you let the private sector do its own thing. But to answer your question, yes, Fed probably cuts one more time, Bank of England cuts one more time, and that's that, and then you move on to other stories.
Isabel, thank you very much. That sounds fun. Isabel Matias-Ilago joining us from BNP Paribas. We'll be back to talk about metals. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back, everybody. This is the opening trade, 30 minutes from the start of the European equity trading cash session. And the futures picture looks like this. We have European equity market futures pointing a little lower. Interesting to see what happens with London. We are expected to go lower, but oil prices are higher. Some commodity prices have touched new all-time highs. So we might see some outperformance by those basic material-related sectors, even if London does, as futures suggest, backtrack a little bit. But we're flat to negative, Guy, then, when it comes to the futures.
Let's talk about bonds. This is where I think the commodities and bonds, I think, is where the interesting story lies, maybe this Monday morning. Look at what's happening in Germany. Look at what's happening in France. Yields are continuing to push higher. Italy, nothing moving yet. But the story comes out really of Japan today, where you now got the Japanese 10-year JGBs at highs we haven't seen since 1999. We're north of 2%. The yen is down hard. Is that sending a clean signal, as we just heard from Isabel, to authorities saying, actually, maybe we need to see further rate hikes coming through and maybe more aggressively? That's the narrative this morning. There is a spillover effect. There's connective tissue that joins all these bond markets together. And that is what we're going to watch for, I think, quite carefully in 2026. What happens with the Japanese bond market? What happens with the story going into the Treasury market? Adam Linson joins us now from Bloomberg M Live to talk about all of this. Good morning, Adam.
Morning.
Let's talk about what's happening in Japan today. What message should global bond markets take away from the JGB picture?
Yeah, I mean, I think the path of least resistance is for yields to keep climbing higher. I mean, I know the currency's been sending mixed signals. It's kind of been detached from what we're seeing in long-term yields. But if you look globally at the moment, everything is just creeping higher. So JGB yields creeping higher because of rate hikes. In France, yields are climbing higher because of the fiscal situation there. We saw the Bundesbank report on Friday out of Germany. That's added upside to global bond rates. And then we saw that kind of hawkish hold from the cut from the Bank of England last week, which is all adding upward pressure. And I think the interesting thing here is the outlier potentially is, you know, what's going on with the Fed. They're looking to be cutting rates, but as we've seen throughout this cycle so far, rate cuts don't necessarily equal downside in yields. And I think there's a lot of potential for the US to potentially get swept up in this. And, you know, I mean, if you take the US, for example, as well, one of the main themes in this year has been fiscal largesse. And I don't think that's something that's necessarily going to be going away. We're heading into a midterm election year. The Republicans aren't polling particularly well. And, you know, we may see a situation where Trump needs to kind of pull the fiscal levers to try win the electorate over. You know, we've seen things like tariff checks, for example, be touted. Yes, we got the Supreme Court ruling, which could potentially cause some issues, but the administration is still confident that they're going to be able to enact those. And as you mentioned in your introduction as well, from an inflation standpoint, one of the main inputs is energy. We've seen climbs in energy prices because of Venezuela. And then if you take things like copper, gold, silver, those metal prices are all climbing higher as well. So I think globally, the path of least resistance is for yields to keep climbing higher.
OK, so that's the global narrative. And then homing in on the US, you think curve steepness is what's going to dominate the conversation, will it, in the first, quarter?
Yeah, I think we're in a bit of a macro dead spot at the moment. We're not really going to learn anything for the next few weeks. It's not until we have the inflation, the labour market reports for December that get released in January. I don't think we're going to learn anything there, but I think they'll probably skip in January. We'll probably get a cut in March. There's potential for another later in the year, which could add some pressure to the front ends of the US yield curve. But even if it is relatively anchored, for the reasons I mentioned, I do think there is potential for back-end rates to climb. And also, I think, certain issues like Fed independence haven't gone away. I mean, that's been incredibly thematic throughout the year. But one thing I'm kind of, looking at is, OK, if Trump has his person in the chair and they're not able to enact his rate-cutting agenda, what happens then? The pressure that he put on Powell this year could be even more intense on whoever, gets the top job next year.
Let's talk a little bit about kind of how this impacts other markets. You get higher yields. What do equities do? What are the spillover effects?
So I think, the obvious, way to look at this is the AI trade. That's what, everyone is getting increasingly nervous. We've seen some of the wobbles of the CapEx plans. You've seen the likes of Oracle get hit. And I think, the AI trade is clearly maturing, but we're getting to that point where investors are wanting to see more returns on their investments. And if that's in the, kind of taking place, an example where, rates are rising, those pressures are only going to probably intensify. Yeah. And one of the positives for the US equity market we've seen over the past few weeks is we've seen increased participation from small caps. Well, that's obviously a positive, but the one thing small caps don't want to see is increasing yields. So that could potentially, pose some headwinds for the US equity market at the same time.
The start of this year was dominated by the dollar weakness conversation, Adam, but then things have not been as weak of late. Second half of the year was not quite that narrative. And emerging markets have done quite well out of that dollar weakness story. What does the next year look like when it comes to the dollar, do you think?
I think I'm probably a bit more optimistic than most people. I think, the dollar will probably struggle against currencies like the Aussie dollar, which has got a strong hiking case, and it's got some of the commodity story backing it as well. But I think, if you've seen the example of the Japanese yen, it's if you take the dollar index, a part of that is a trade against the Japanese yen. The yen just cannot catch a bid. It will take authorities to meaningfully intervene, and even then, I don't think it's guaranteed. And also, a big part of the dollar index basket is the euro, and I'm not quite as optimistic as many people are. I think the Eurozone economy has been resilient, but I don't think it's necessarily going to run hot, and I still really don't see the case for the ECB to be hiking rates. It's not like Japan, where they're trying to escape from negative interest rates and zero interest rates. The deposit rate's at 2%. They don't necessarily need to keep hiking rates and support the currency. So I'm probably a bit more optimistic on the dollar than many people are.
It's going to be an interesting year ahead then. Adam,
Certainly.
Nice to see you. Thanks very much indeed. Adam's going to be here the next few days. We'll get his take on some of the other markets that we need to be watching. Adam Linton from our M Live team. Let's kind of connect what we've just been talking about with the yield story into what is happening with equity markets. Defence stocks are the obvious connection. I think that's where Louise is starting this morning.
Exactly, yeah. Defence stocks are key on the mind this morning. This is obviously after talks between US Special Envoy Steve Witkoff and Ukrainian and European leaders. They met and they spoke of constructive talks around ending Ukraine and Russia's war. So they're saying, this quote from Steve Witkoff saying, "Our shared priority is to stop the killing, create conditions for Ukraine's recovery." So some potentially positive movements on those talks there. So we'll be looking at the key defence stocks across Europe. So Rheinmetall, BAE Systems, Saab, Leonardo, the usual suspects. Obviously, they've been booming on this rise in defence spending. So we'll be watching them closely on the back of those talks developments. Next up, we're looking at mining stocks. This is after commodities rallying globally. So gold, silver hitting record highs. Oil is also gaining. Copper is also rising, reaching about 12,000 a tonne. So we'll be watching some key mining stocks in Europe on the back of that. We're watching the likes of BHP, Rio, etc. And then finally, we're moving on to Telecom Italia. So Telecom Italia, they've approved a proposal to convert savings shares into ordinary shares. You can see they've already had a great past year, up over 100% in their share price rises. They're saying this is all part of simplifying their capital structure. So, if it goes ahead, it could reduce costs, it could improve liquidity. And you can see the analyst ratings already, 13 buys, only 6 holds and 2 sells. So already quite positive for the stock on that, but we'd expect this to potentially rally on the back of this news today.
Louise, thank you very much. Our equities reporter, Louise Moon, with the latest on some of the sectors and individual stocks we're watching. Coming up on the programme, we will head back to the French story. We talked about this a little bit earlier in the programme, as France's cabinet meets later today to discuss a special budget law. They failed to agree a new budget for 2026, and now they need to roll over the 2025 budget. We will speak to Benjamin Haddad, the French Minister for European Affairs. We'll have that interview for you next. This is Bloomberg.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Monday, the 22nd of December. We're nearly there. 18 minutes to go until the market open. I'm talking about Christmas, of course, not the market open. But this morning, it looks like it's going to be a slightly negative open, which is interesting because actually you've got some fairly interesting action in the bond market, but you've also got US futures actually tracking a little higher.
Yes, you do. So there's a little bit of divergence taking place there. The bond markets this year have been certainly focused to some degree on what's been going on in France. So let's talk a little bit as the year comes to a close about that. This year has witnessed a French government embroiled in near constant turmoil. At the heart of the crisis is France's outsized debt, its beloved social safety net, and what many see as the economic imperative in scaling that back. In this Bloomberg Originals weekly documentary, we lay out the political minefield faced by President Macron, the grave stakes for the country's economy, and what might need to happen to break the deadlock.
In 2019, France watched a national treasure go up in flames. Now, there's a fear that the structures holding up French politics are starting to catch.
There is clearly a problem with French public finances for the worsening of the budget deficit.
France's political crisis deepened today.
Most French citizens adore their nation's system of social safety nets, but those programs have become increasingly unsustainable. France has the euro area's largest deficit, massive debt, and every attempt at reform has ended the same way.
Surprise resignation from the Prime Minister.
4 prime ministers in 20 months.
We're heading into our 5th prime minister now in 2 years.
French politics is in a bit of a mess. It really is an unprecedented crisis.
Benefit reform sparks this. Unions break out the flares, and fragile coalitions collapse under the strain.
France is currently characterized by political blockage due to a very difficult public finance situation.
What people talk about is sort of a gradual sort of suffocation of France's ability to deal with its fundamental economic problems.
History suggests that at this point it's more likely that only a shock can force change. The question is what or who would deliver it?
And viewers can watch the full-length weekly documentary via the terminal or on the Bloomberg Originals YouTube channel. That was just a short section of it. Really interesting watch. Lots to talk about then with our next guest. The French cabinet is set to meet today to present a special law allowing it to roll over vital spending and taxation after budget negotiations were postponed to next year. I'm pleased to say we're joined by Benjamin Haddad, who is France's Minister of European Affairs. Minister, thank you so much for joining us. Lots to discuss in the wake of of that European meeting, European leaders meeting at the end of last week. So lots to talk about there. But let's start with the French situation. In the very here and now, the cabinet is set to meet. We're going to see the special law employed and probably a rollover of this year's budget. How worried should investors be about the inability of France to pass new budgets?
No, look, the truth is we passed a few weeks ago the social security budget thanks to a compromise at the National Assembly. I want to underline this because this was unprecedented the last 3 years where we managed to pass through the 49.3 article of the Constitution, the budget. This time we managed to find a compromise on social security, and we're hopeful that we will find a compromise on the budget at the beginning of year 2026. Now, as you know, in France, we don't have shutdowns. What we do is when we can't find an agreement, we have the special law that rolls over the budget from last year. This is what we will do this week. But we will need to find a compromise between the political forces at the beginning of 2026. That's what our budget minister said yesterday. You know, when you look at the politics, at the end of the day, we're in a very similar situation to the countries around us. For a long time in France, we were used to having absolute majorities in parliament. This is not the case anymore. Now we need to do what our neighbors have had the habit of doing for decades, which is putting political forces around the table and finding consensus, finding compromise, building coalitions. This is first. Once again, this is what we've done on social security. This is what we will need to do on this budget.
Okay, so Minister, how long will investors have to wait to see fiscal consolidation bringing down the budget deficit in France?
Well, so our budget minister said yesterday we will hope to find a budget before the end of January, because indeed, as you said, we need to tackle deficits, we need to reduce our debt, we need to tackle public spending, as well as answer some of the key funding needs we need to face, like the continued increase in defense spending, which is included in this budget. But France will keep its trajectory of reducing its deficit to 3% by 2029. This is the trajectory that we've laid out with the European Commission, with our partners, and it's still clearly our objective to keep this on track.
Minister, good morning. France is struggling to make headway. Europe is definitely struggling to make headway. Last week was a really bad week for Europe. Not only did Europe fail to deliver on this idea that we could use frozen assets to help Ukraine. That didn't happen. The Mercosur deal also didn't get signed. People around the world are looking for leadership from Europe, and Europe can't deliver it. Why was last week so bad? Why can't Europe agree to speak with one voice and deliver on the policies that it has promised? Why can't Europe deliver that right now?
I strongly disagree with this assessment. I strongly disagree with it. If you look at the European Council, we managed to find a unanimous agreement to give funding to Ukraine through Eurobonds, 90 billion euros, that gives Ukrainians the visibility to continue to fund their defense needs in the next 2 years. We could have ended this European Council with no agreement on Ukraine. The most important thing is to defend our security and to defend Ukrainians against Russian aggression. And this is what we've been doing. We found an agreement, 90 billion euros, to give visibility to Ukrainians. Now, the vehicle, at the end of the day, is secondary to the main purpose, which was precisely to give them the funding needs that they were asking for. And we've agreed, by the way, a few days before, on keeping the frozen assets immunized for the constant 6 months to 6 months renewal. So we also found an agreement on this. The frozen assets will stay frozen in Europe as long as Russia doesn't pay reparations. We've agreed to keep working on what we could do with the frozen assets, but the most urgent needs was to answer the defense and economic needs of Ukraine, and this is what we did with this historic decision. But 90 billion euros for Eurobonds. We had done this during other crises like COVID, and we've managed to do this for Ukraine.
Okay. Minister, the view is that Europe wasn't brave enough. The view is that Europe didn't have the bravery necessary to take Plan A. And I appreciate that we got Plan B, but we didn't get Plan A because Europe was too worried to be able to deliver on that. What does that? Why doesn't Europe have more bravery? We're facing a threat. Why doesn't Europe have more bravery to take a big step
this is not the view,
and agree to use these frozen funds?
But ask Ukrainians what they think about this. This is not the view of Ukrainians. Ukrainians are fighting bravely every day against Russian aggression. What they needed was the visibility to be able to continue to fund their defense needs. And this is exactly what Europeans did unanimously. We stepped up, we managed to find an agreement on 90 billion euros. This is a huge amount of money, and this is a historic responsibility. Now, you had a plan A, as you said, by using the frozen asset, not seizing them, by the way, but using them with European guarantees. This was a very complex scheme that raised the legal questions from some member states like Belgium and others. And this is why the most important was to find unanimity. This is what we do at the European level. We find consensus among 27, and we managed to find a scheme to be able to answer the needs so that we will continue to provide the support to the Ukrainian army, continue to increase the cooperation between the European defense industry and the Ukrainian defense industry, as well as the economic needs of Ukraine. I will tell you, in this negotiation, Vladimir Putin thought that we would divide, thought that we wouldn't step up, and for the last 4 years now, we've constantly stayed united. We're the first provider of aid to Ukraine. We're working with Ukrainians also on the security guarantees that we will provide after a ceasefire. So this is, Europeans stepping up for their own security. As for Mercosur, maybe if I can answer the other part of the question, what France has said is always clear. We're not against free trade in general, of course not. But when you trade, you need to ensure a level playing field and stop being naive. You cannot, for example, allow products that are fabricated with pesticides, with food additives that are forbidden in Europe, to enter the European markets. And this is what we've told the Commission with other partners like Italy. We've said we need a level playing field. We need to make sure that we have reciprocity on norms, that we have safeguard clauses to protect against destabilization of markets, that we have effective controls. The Americans do it, the Chinese do it. There's no reason why Europeans should not control the products that are getting into Europe.
Those things might be true, Minister, but this conversation about Mercosur has been going on for more than 2 decades. Why, and now there is a proposal to get to the bottom of it in January. Why will January be any different to December?
Well, because hopefully we expect the European Commission to be able to answer these demands. You've already seen some progress on shaping a safeguard clauses that would protect, it's a break that would protect against too many imports destabilizing a market. We've already seen some work on reciprocity of norms through mirror clauses. We should have effective control starting in January. We're also waiting for the Commission to answer the call of farmers of countries like France, Poland, Italy, and others to also step up on the common agricultural policy and make sure that we have the same level of revenues, the same level of payments through the cap in the next European budget, in the next MFF, as we have in the current one. So these are very serious issues, and they need to be finalized before we can take a vote on Mercosur.
Minister, there's a headline that crossed a few minutes ago, and it comes out of China. I'd like to get your take on it. The headline reads like this: China to impose up to 42.7% anti-subsidy deposits on EU dairy products. They're basically saying that the European Union subsidises its dairy industry, and as a result of which, it should be hit with these kinds of anti-subsidy deposits, they call them. What is your reaction to that? What is the relationship, do you think, between the EU, between France and China looking like? And do you expect to see more of these kinds of headlines?
So first, I think these accusations are baseless, but I will go beyond that. You may have read President Macron's op-ed in the Financial Times a few days ago when he was addressing the issue of China and saying, we want to work with China as a partner, but here again, Europeans should not be naive, protect their interests, and ensure a level playing field. And when you have Chinese overcapacity that are subsidized, that are sent to European markets, we need to find ways to protect ourselves. This is about thinking geo-economically. And you've seen some progress in Europe over the last few weeks. For example, through the safeguard clause on steel, on ferroalloy, we've seen tariffs on electric vehicles. And so this is why we need to stay united, and we need to have a robust trade policy that protects our common interests.
Isn't it a fair argument to say, though, that Europe subsidises its farmers?
But this is done through international law and WTO rules. The thing is, we have reciprocity, and we've always respected international law and how rules are set up in the European market. And we expect the same from our partners. And so you see a world now where the United States and China are having a more aggressive trade policy. This is not about being close.
Thank you, Minister. I've got to leave it there. Thank you very much indeed. Benjamin Haddad.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars.
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Couple of minutes to go until the opening trades this Monday morning here in Europe. Let's talk about Friday before we get to Monday and figure out exactly what happened Friday. Really good session in the States, particularly driven by tech. Look at the difference between performance between the S&P and the Nasdaq. Europe went out here. We finished a little bit higher. The bulk of the gains came sort of reasonably early on, but pushed on into the afternoon, which is interesting as well. The momentum continues because US futures are actually looking okay this morning. It's interesting to see the divergence between what we're seeing in Europe and over in the United States this morning. So let me show you the futures picture. We're not down by much, but we're not up, I think, is the critical question here. And why are we not up? Euro Stoxx 50 futures are down by 0.1%. FTSE futures are down by 0.2%, which is surprising. Oil prices are higher. You've got commodity stocks generally reacting to what we're seeing in gold and silver and copper, and there's a lot of them in London. London's down by 0.2%. DAX futures absolutely flat this morning. We'll keep an eye on defence stocks. Louise Moon was here talking about that a little bit earlier, Anna.
Yes, absolutely. I'll pick up on a couple of those themes right now then, Guy. We've got defence stocks on our list of sectors that we're certainly keeping in focus. We have seen some progress being at least talked about. Productive and constructive is the language being applied to the Ukraine conversations that were taking place in Florida over the weekend by the US participants. But as we said all of last week, this is the US, Ukraine and European officials talking to each other. Not a great deal of engagement engagement with Russia, so we'll wait to see what that throws into the mix, but we'll watch defence stocks with that in mind. Basic resources, for the reason, Guy, you pointed out, that we're seeing higher copper prices, gold prices, silver prices, all of those three touching records in just today's session. We'll keep an eye on those. Watch Danone, watch anything connected with the dairy industry globally, really. I mean, Chinese dairy stocks have been jumping as authorities there are announcing duties on certain dairy imports from the European Union. So we'll certainly keep an eye on the dairy sector with Danone in mind, the Netherlands in mind, all that in focus this morning, Guy.
OK, here we go. Let's talk about the session that we're about to see this Monday morning and how it's going to begin. We're not expecting it to be that positive, but I think flat is probably a better word maybe to describe what we're going to see. The FTSE 100 expected to be down by 0.2%. Not a great deal on the downside. I'm not expecting big volumes, but there's still work to be done between this side of Christmas. The Stock 600, as anticipated, absolutely nothing to see here, 0.01%. So you've got a flat market there. FTSE, as anticipated, down 0.2%. We'll see how the CAC reacts. There you go, down by 0.2%. The DAX is absolutely flat, as anticipated as well. The IBEX down by 0.2%. At an index level, I don't think there's a particularly clear message coming from these markets. Are we seeing something different at a sector level and at a single stock level? Anna.
Yes, let's dive into some of that detail then, Guy. And we were certainly right to focus on basic resources and the impact that that sector would have this morning, because that and energy are the best performing sectors at this stage of the trading day, just less than a minute in. But basic resources up by 0.7%. We've got new highs on copper prices, gold prices, silver prices. So Fresnillo, which produces at least one of those, is up this morning, and most of that sector is in positive territory. Energy is another strong performer, up by 0.5%. The oil price is up 1% this morning at $61 a barrel on Brent. We've got Saipem higher. I think there was a contract win there. Subsea 7 is higher. So some of those oil services businesses, as well as the oil majors, trading a little bit higher this morning. Technology, another sector that's not doing too badly. Let's go to the downside, though. We do see utilities under pressure, and around 2/3 of sectors actually in negative territory this morning. But some of the UK-listed utilities seem to be a little weak this morning. So Pennon, National Grid, United Utilities, those are the ones at the bottom of the basket. And food, beverage and tobacco, I'm thinking of the dairy story out of China. I don't see a huge amount of that impact here. It's certainly not the case that Danone is one of the worst performers here. We're waiting for Nestle to open up, but we do have Anheuser-Busch down by 1.3%. So there's certainly a negativity around the drink space in this morning's session.
What is interesting is the pharma's off. So in terms of the biggest drag this morning in terms of points, it's AstraZeneca, Roche, both tracking a little bit lower. Then you get HSBC, Nestle and Novartis. So out of the top 5, you've got 3 big pharma stocks that are adding significant sort of downside pressure. On the upside, it's still some tech trades, so you're still seeing a bleed across, I think, from Friday in that tech story. So ASML is the biggest point gainer. It's up by only 0.7%, but it's adding the most points. Siemens is tracking a little higher as well. Infineon is up. So what you've got is a tech trade this morning that is on, an energy trade and a metals trade. Glencore is up, Rio Tinto's up, Total is up. So you've got all of those kind of areas moving higher. And then maybe we're rotating away from some of the more defensive names, the Roches, the AstraZenecas, the Nestles, the Novartises.
And we add into the mix some of the news flow we had at the very end of last week around drug pricing deals with the US administration. And we've had Thomas Schinecker, who is the Roche CEO, has been saying this morning that new US drug deals signed last week could raise prices for some medicines in Switzerland. So if the US is not going to be backstopping the global pharma R&D mission to such a degree, then perhaps others have to pay more for their drugs. Anyway, we are seeing some... Is
that good news for the drugs maker, or is that bad news for the drugs makers? It depends if the others push back and say, no, we're not going to do that, which was the policy that was applied by the UK but didn't work out particularly well. Does one offset the other, and do we just see a netting out effect?
Yeah.
Or is this a positive or a negative? I don't know.
Yeah, let's throw the global pharma sector into the mix in our next conversation then. Willem Sells joins us, Global CIO for HSBC Private Bank and Premier Wealth. Willem, very nice to speak to you. Thank you for coming in. It's interesting to kick off on that thought around pharma and where it goes in 2026, because for all that we've talked in US equities about the strength in big tech, actually we've seen quite a bit of strength in some of the drug companies, utilities, energy. It's actually been a slightly broader trade than maybe we'd anticipated, or maybe than the news flow gives credit for. What's the role of pharma for you, that kind of business? We'll start with that granularity and then we'll step back.
Yeah, I guess it's a diversifier, and lots of people are obviously looking at diversifiers, because I think what you're seeing this morning as well, AI trade, right? Technology as well as the metals doing well, and so you need to be positive. I think only.
Are they the same trade now? Is technology and metals the same
I think
trade?
it's coupled because it is linked to infrastructure, which therefore to metals as well. I mean, so much is linked to AI, unfortunately, right? Even if you look at GDP, our economists were talking about this, half of the growth of GDP in the first half was linked to AI-related investment. And actually, that may be underestimating it because there is also the wealth effect through the AI stock upside that then is driving the top end of the consumer. And remember that the top end of the consumer, 20% highest earners, are responsible for 40% of consumption. If it warrants for that, so if AI goes down next year for some reason, even AI sentiment or AI activity, then it has a big impact on stock markets, on the economy, and so on. So I think that's why people are really pulling out all of the stops in terms of diversification. So that is cross-asset diversification, a lot more interest from our clients in hedge funds as well. Trying to play the relative losers and alpha rather than beta. But certainly healthcare comes in that as well.
Okay, so that's the diversification story. Back to AI and all that will deliver in 2026. You say that we're on the verge of a really strong capex cycle. I mean, it's already started, but you see it intensifying in the United States. And you think that the market is underappreciating that. I mean, some of the numbers around capex are enormous. What is to underappreciate, Willem? What are we not realizing?
So it's basically the adoption. So if you look at the adoption in different industries, so it's people tend to focus on on the chips, on the technology, on the software, and so on. But there is an adoption in the healthcare industry in terms of faster diagnosis, drug development, and so on. So a lot of investment is going to go into that in the financial sector, in the in the telecom sector, fraud detection, those kind of things. So every company is looking at it, and quite often it's relatively low investments that they need to make as adopters to have to get the low-hanging fruit. Now, investment is going to the delta, so the growth rate of investment is going to slow. It was about something like 85% growth of AI-related investment this year. We think that's going to slow to 45%, but from a higher base.
Okay.
So still very substantial, and still going to drive a lot of economic growth.
Could you just talk a little bit about what's happening in the bond market? Back end of the bond market is beginning to see higher and higher yields. Let me just get the drop down right here. The US is now 4.8, 4.845. High of the year, 5.095. How do equity markets react? How do assets react if we start seeing the back end of the bond market basically signaling high yields are ahead? What's most vulnerable to that?
So I first need to tell you that we expect no further Fed cuts in the front end. And that is because growth.
Does that mean the back end doesn't go up as much?
So the thing is, so that's our core case. You could have an insurance cut if your unemployment continues to rise, but nevertheless, the Fed is almost done. If they do more than that, all of that speculation, or if the markets start to speculate about them doing more than that because of political reasons, etc., then central bank independence questions, then you just have a steepening of the curve. So the back end, as you're saying, is not going to rally. The back end has that pressure from supply. So far, all of that supply is well absorbed, whether it's supply to fund that AI or government supply. But nevertheless, you're not going to get a rally. And mortgage rates, therefore, stay quite high, for example. So one of the obstacles for economic growth. The truth, though, is that so if you have much less monetary support, you have fiscal support that is accelerating. Lots of payouts that are going to happen, refunds, etc., on taxes in the US, the SALT taxes, etc. In Europe as well, in China. Then you have the AI boost and so on. So we are having to rely much less on the monetary motor and much more on the others. But we think they're solid enough.
Are the others inflationary?
The others could be slightly inflationary, but your inflation has come down to enough of an extent for there not to be interest rate hikes. It's one of the reasons why you're stop seeing the interest rate cuts, right? And why even in the UK as well, you're going to have we have delayed our next interest rate cut to April because of that sticky inflation that you currently have. I think it would be a stretch to see interest rate hikes apart from obviously Japan New Zealand.
So this is the second conversation we've had today where we've been thinking that maybe central banks aren't quite as central to the narrative next year as they've been. Maybe it's fiscal instead, and maybe it's the technology theme continuing.
Ultimately, it's earnings. Right, and so if you look at analysts' earnings upgrades versus downgrades, you are at the highest net number of upgrades in the last 3 years. And it's not just in technology, it's other sectors as well.
But I noticed that the markets that you like are quite tech-leaning, aren't they?
Yes.
So the US, China, China's wider, but Singapore, Japan, South Korea, Hong Kong, there's quite tech elements there.
They're all countries. It's tech, but it's innovation, actually. So if you look at the innovation ranking, basically all of those countries that we're overweight are in the top 15. And unfortunately, you don't see too many European countries in that. Where therefore we have a neutral allocation, whilst we have quite a broad-based Asian overweight.
Right, even though Germany's doing what Germany's doing, and that big fiscal impulse to get back to the
yes,
point that
but the question there again is, are they doing what Mario Draghi in his competitiveness report wanted? And it's probably a no to that, or not quickly
spending the money
enough.
on the wrong things, or
spending the money not on the innovation and making the EU much more competitive very quickly. And so I think markets already, a lot of our clients have been disappointed with the speed of that spending and the areas where they are spending it on. They would rather see, that innovation and the structural change.
So earnings are going to be a driver next year.
Yeah.
But at what point is 27 the year for rate hikes?
For rate hikes?
Rate hikes.
It could well be. Yes.
So at what point? Normally, markets 6 months out start pricing.
Yeah.
So when in do I need to start pricing rate hikes in the back half of 26? And do markets are we going to peak in the middle of 26 and start basically talking about those rate hikes? Rate hikes usually end a cycle for equities.
But I think you said very correctly that I sort of changed your question. You're starting to talk about rate hikes, but you were asking about the long end. And I think that is the one where you could see volatility quite quickly in 2026, even in the second half of 26 already. I think the first bit of 26, you're not yet going to see that upward pressure on bond yields. And therefore, we also think that you need to go to 470 or something like that on the Treasury before you really start to have an impact on the equity market. But you could see that in the second half of the year. The actual rate hikes, the ones that we've penciled in for 26, I'm calling it this year now, 26, Japan, New Zealand, maybe Australia, and then 27, the ECB, but only in the second half for now.
The Fed? Sorry,
the Fed could be. If we continue to have, the strong, different engines, right? So the AI and all of that together with that helping the discretionary, the top end of the discretionary consumer.
And Willem, you mentioned in your notes ahead of our conversation, you mentioned liking certain income stories. I wonder how that fits with such a heavy capex cycle and a lot to invest for.
Yes, so it is, again, because you need to pull out all of the stops in terms of diversification and stabilization of your portfolio, because of the very big weight of technology together with communications, the impact that AI has on different sectors, even just the consumer sector, the metal sector, etc. So there are very few things that are uncorrelated. So therefore, you need to go to the hedge funds, but you also need to go to have some income in the portfolio. Obviously, we're also overweight gold, and that income clearly we can't be long duration at this point, because what we just discussed, a little bit more emerging markets than we used to have there. Still private credit as well, clearly diversified, strong manager selection, and so on. But you need an income element in the portfolio. The dividend payouts, the share buybacks, that is going to continue to happen as well, together with M&A and so on. But so you get a little bit of income there as well.
Great to see you. We'll see you again next year. It feels like we're already there, but we'll see you again next year. Have a great holiday season.
You too.
Willem Sels, Global CIO for HSBC Private Bank and Premier Wealth. Thank you very much indeed. Let's take a look at the call 6 this morning and figure out what is happening in terms of the major stocks that we track. Tech's on the front foot. You can see that with ASML. Schneider's also tracking a little bit higher. Luxury's not having a bad day, but it's interesting that actually you are seeing some divergence within the pharma space. Nova is up, but if you want to look at kind of the sort of the barbell effect, Tech up, Nestle down. So that's the trade you're effectively watching here today. Defence stocks are also on the move. A little bit of weakness there. Let's start there with Louisa Moon.
A bit of weakness in defence stocks this morning. Rheinmetall, BAE, Saab, Leonardo, all down into the red. That's after what was said to be positive talks between the US, Ukraine and European leaders on a plan to end the war in Ukraine. So that's pulling down these defence stocks just slightly this morning into the red. Next up, we're looking at mining. That's after global commodities are rallying, including copper. So we're looking at quite these mining stocks that are exposed to copper in particular. So Rio Tinto, BHP, Anglo American, all ticking slightly higher into the green on the back of that, joining in that rally for commodities and namely copper. Next up, we're looking at Danone and Nestle in particular. This is after China has imposed duties on certain imports of certain European dairy products. So both these companies are very exposed to China, and this is pulling them down into the red, just ticking slightly lower on the back of that news. That's duties of up to about 43% from China starting from tomorrow. Next up, we're looking at Telecom Italia. Oh, sorry. First up, we'll look at Harbour Energy. They've bought a company called LLOG Exploration, so a US oil and gas company, and this is their step into the US Gulf of Mexico. So it's for $3.2 billion, so a big deal. It's them entering into that space, but the shares are dragging slightly lower into the red. Almost 3% lower, despite that kind of big move into the oil and gas space there. And then next up, we are looking at Telecom Italia. So they've approved a proposal to convert their saving shares into ordinary shares, being welcomed by markets slightly into the green.
Thank you, Louise. Louise Moon from our equities team this Monday morning with a look at some of those stocks on the move. She talks about basic resources. We'll pick up on the theme of the underlying metals that's driving some of that trade. Coming up, gold, silver and copper hitting record highs as traders bet on Fed rate cuts and geopolitical tensions, in particular around Venezuela and Ukraine, are still in the market, of course. We will have more on those metals next. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, Monday morning. Welcome back to the opening trade. We are 19, let's call it 20 minutes into the equity session. We're firming a little bit. We're still negative. Remember that US futures are a little bit positive. I'm not though sure that the equity market story is really where the action is. It feels like it's a price taker rather than a price maker today. You've got other markets that I think are dictating the pace. One of those is definitely the bond market, but the other one is what is happening in the commodity space right now. You've got big moves that are taking place in gold, silver, copper and oil, and that's bleeding into other asset classes. So let's kind of figure out exactly what is happening here. That's what the Brent picture, the TI picture looks like this morning. So you've got the prices of energy moving higher. Hydrocarbons are higher. The reason for that, there's a whole bunch of reasons for that, but one of the main ones certainly this morning is that Bloomberg is reporting that the US is still pursuing a third tanker. This is a third tanker now near Venezuela. This is President Trump intensifies an oil blockade on Nicolas Maduro's government in Venezuela. Clara Fiera Marquez joins us now to talk about this and figure out kind of where we go next. Clara, what are we learning about the scale and the extent of US intent in terms of this blockade and the impact that it's having on the country's oil industry?
It's been a remarkable weekend. So remember that we had at the start of December the first time that the US had an interaction or seized an oil tanker in waters off Venezuela. And this weekend we've had two. So a non-sanctioned vessel on Saturday was particularly unusual. And then a sanctioned vessel being pursued yesterday and into today, into the early hours of Monday. It's really a very significant ratcheting up of US efforts to cut off what is a key financial lifeline for the Venezuelan economy. And remember that the Venezuelan oil industry is really decimated relative to what it was perhaps years or decades ago, but it is still, you know, the political system has withstood quite a lot of this pressure. The question now is how much more of this can it take, how much more loss of hard currency can it take and still remain standing?
Yeah, I mean, where does this leave the Venezuelan situation? How much pressure can the country take from Washington? How much pressure is the Maduro regime under right now?
A lot is the answer, but obviously for the moment it's 3 vessels, 3 VLCCs. I mean, that's a very small portion of what is, of course, overall still a pretty small part of oil supply. I think what we're interested now is understanding what happens next, what the sort of rhythm is from here. There's obviously been a very substantial pickup over the weekend, and for the wider sanctions picture, it is also very interesting. So what does this mean for the US willingness to enforce sanctions elsewhere? The Venezuelan situation is different. There is a significant impetus there that perhaps doesn't exist with regard to China's purchase of Iranian oil, for example. All the same, there are some big questions being raised at the moment. The oil market's taking it pretty much in its stride, and that for the moment is largely because of the small amount of supply that's coming out of Venezuela.
Okay. So we should still focus, therefore, on the fact that this is a well-supplied market, that there is a glut of oil out there. That is still the kind of overarching theme that is driving this oil market.
Without question, as we go into 2026, if you look at the big buyer of sanctioned oil, whether it's Russian or Iranian or Venezuelan, that is China. And China is overwhelmed with choice at the moment. It does not require this, you know, specific, the less than 1% of global supply comes from Venezuela, right? Very, very small. However, you know, let's see where we go from here, whether this escalates.
Clara, thank you very much. Clara Ferreira Marquez, thank you for explaining the oil sector to us this morning. Linked in some way, because of the geopolitical tensions, to the metals sector. So let's talk about that. Metal traders are seeing multiple all-time highs as gold, silver and copper see positive momentum. For more, we're joined now by Bloomberg's metals reporter Martin Ritchie in Shanghai. Martin, talk us through then what we're seeing with these record highs, a host of different drivers for the precious metals versus the more industrial type.
Yes, quite an exciting start to this final full week of this year, and it's been a quite amazing year for metals on the whole. So just taking a step back, you've now got gold up more than 2/3 this year. It's benefiting from prospect of lower interest rates in the US next year, from what's called the debasement trade, this kind of growing sort of level of decreasing trust in central banks. The US dollar's been weaker. And then you've got these geopolitical tensions as well, stirring all the time. And gold into next year, a lot of banks, a lot of analysts have picked it as their favorite metal, their favorite commodity for next year. Goldman Sachs saying, it could be on course for 4,900 next year, even higher if some of the private investors who are kind of less exposed to gold so far start putting more money into the metals. And what you're seeing today across the complex, you're seeing all the other precious metals gain a lot. These are relatively small markets, and in a kind of illiquid time of year, with all this going on, they're bound to make kind of quite sharp moves. You've seen silver, platinum, palladium all spike up today, so quite a lot going on towards the end of the year.
And is the momentum that we've got now sustainable, do you think?
In the precious metals space, it's hard to find people who are bearish going into next year. I mentioned Goldman just now, but across a whole sweep of people that watch this market, all the sort of signs are that this could go further. When you've got we're in very uncertain times geopolitically, and in this kind of period, it's when gold does tend to shine, and that's not going to change anytime soon. And as I said, there's not a huge amount of money, private investor money in gold so far. And the more that does go into that market, given all those fears, the more you could see gold rise.
Okay, Martin, thank you very much indeed. Martin Ritchie, Bloomberg's metals reporter, joining us on what is happening on a busy morning in terms of the metal story. I'm going to take you from metals to wicker next. Wicker baskets, wicker hampers, all the great stuff that you could find in a wicker basket, wicker hamper over Christmas. Takes us to our next conversation with Tom Athron, who is the CEO of Fortnum & Mason's, Britain's oldest department store. Trying to break actually away from Christmas, but Christmas at Fortnum's is something to behold. We'll find out what's happening next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade. We're 30 minutes into today's session. So let's have a look at where we are trading this morning. European equity markets just into the green. Was it the outfit? This is as close to Santa as I get this week. But it's not moving markets by much, is it? We're just into the green, though. And it seems as if the US futures pointing a little bit higher, trying to lift us a little bit as we get further towards the US trading day. The DAX getting the best of the gains. The FTSE 100 actually on the back foot, despite the fact we've got some basic resource names and some energy names going higher today on the back of those record highs for some of the commodity prices, and oil prices also a little higher on geopolitics. So despite that, London does not outperform, London being weighed down by perhaps some of the big drug names and utilities. Guys, so that's the picture, just into the green as we approach the festive.
I do feel you're slightly missing a hat. I think a hat would kind of round off the
missing a hat, and that is entirely intentional.
Let's talk about, kind of, as Anna says, a fairly balanced market. 230 up to 344 down. This is the number that slightly confuses me. 105.6% of the 20-day average. I find that slightly hard to believe, but nevertheless, we're not done, I think, is the message actually this Monday morning. There's quite a lot of news flow and quite a few assets that are on the move this morning, and that's rippling through into the equity market. The equity market feels like it's a bit of a price taker this morning in terms of the overall narrative. You do have tech moving higher. I think that's a legacy of what we saw Friday, big session Friday for the United States. ASML continues to respond to that. You've seen it rippling through Asia as well. Siemens is also tracking a little bit higher, up by 1.65%. But when I talk about the kind of the equity market being a price taker, this is what I kind of mean. Rio Tinto up by 1.32% this morning. Copper's really surging once again. You've got gold and silver on the move. The commodities complex broadly is moving high. You've even got crude moving higher as well. And that's rippling through into some of these names. Where you are seeing some weakness today is in the pharma space, which is interesting, and actually in defence. We'll come to defence as well. Roche, AstraZeneca, both down. Like, Astra's a big drag on the FTSE 100 this morning in terms of just the points drop that we're seeing there. We're down by 0.9%. We do have commentary coming through from Switzerland talking about the idea that if the US is going to pay less for drugs, everybody else is going to have to pay more. Does that net each other out? I don't know, but it's maybe a reaction to that we're seeing in the equity market this morning in some of these big names. Maybe the answer to that question is actually no, it doesn't net out, and others will not pay more. Defence stocks are down. You are maybe seeing some slightly, at the margin, more positive news coming on the Ukrainian talks, and they are super sensitive to this. That is rippling through into the defence sector. Safran is down by around 1%. And that's the picture this morning. We thought we were done, but we're not. There's actually some quite big stories moving these markets still.
Absolutely, quite a lot of news flow to keep in focus. Let's get to some of those other stories right now. So oil is on the rise as President Trump intensifies a blockade on Venezuela, with US forces boarding one tanker and pursuing another within weeks of first capturing another vessel. The United States has been stepping up pressure on Nicolas Maduro's government, which aims to choke off the country's key revenue stream. US Special Envoy Steve Witkoff says recent talks with officials from Ukraine and Europe were, quote, productive and constructive. According to Witkoff, the group discussed the development of the existing 20-point plan, the US security guarantee framework, and the economic development plan for Ukraine. Ukrainian President Zelensky agreed that the negotiations were constructive, but noted that signals from Russia remain, quote, only negative. And China is hitting some dairy imports from the European Union with duties of as much as 43%. In a preliminary decision, Beijing said it's adding the duties after finding EU exports were subsidised. China launched an investigation into shipments from the region back in August 2024. We had a conversation earlier on with a government minister from France, Guy, who pushed back against the suggestion that there is support, or at least suggested it's all done with the blessing of the WTO, etc. And so we're watching what happens with dairy names here in Europe and more widely than Europe if they source substantially from Europe.
But what it does, though, speak to is the idea that actually what we're going to see is maybe more trade tensions into next year. And it looks like the European Union is going to maybe have to step up its game, which is what the message looks like coming from the Elysee Palace right now. Emmanuel Macron certainly talking about that in the FT, suggesting that actually Europe is going to have to take a tougher line with China. Anyway, that's all for next year. Something to think about for next year. Before we get there, we've got to think about Christmas. And let's talk about what Christmas looks like right now. Wicker hampers full of festive treats, very much synonymous with London's Fortnum & Mason. Is this season going to be any different? And is a hamper just for Christmas or for the rest of the year as well? Let's try and find out. We're joined now by Fortnum's CEO, Tom Athron. Good morning.
Morning, Guy.
How's it going?
Good, actually. Not too bad. I'm sort of pleased with the way things are going. I would say that we're having to work quite hard for our sales this year. The data that I'm seeing suggests that footfall into retail is down slightly year on year. We have the advantage of just having built this beautiful double helix staircase which sort of sucks people up through the middle of the shop. So actually what we're finding is we're seeing slightly fewer people but spending a little bit more.
And which people are they? Are they tourists? Are they domestic shoppers? Kind of just give us a breakdown of kind of what you are seeing. Is it possible to see?
It is, absolutely. You can use credit card data to see where people's credit cards are registered to, so you can make some inferences as to who they are and who's shopping. We've gone from, I suppose, a situation 10 years ago where 70% of our demand was international, so tourists, and 30% domestic. And we've now switched that on its head. It's now actually 70% domestic and 30% international all the way through the year. Obviously, at certain times of the year, it skews. So in the summer, it's much more heavily international. But at this time of the year, it's almost exclusively domestic trade. And I think I'm pleased with that, actually. I think that it's important for us to appeal to a domestic customer. My sense is that if we do that, the tourists will come anyway. But if we're just a business that appeals to tourists, I don't think anyone will ever take us seriously as a business which is all about extraordinary food and drink.
OK, so, Tom, good morning.
Morning.
That's really interesting, then. So I was going to ask you lots of questions about tourism, which I might still do, but it seems you're telling a story of being slightly less reliant on it than you were.
Yeah.
But in terms of the types of tourists that you get coming through your doors, I imagine, London attracts a lot of well-heeled tourists from the United States, the GCC, from China. Is London increasingly a destination for at the top end for in terms of the people who come here? It's a luxury destination increasingly, it seems.
Sort of. I mean, I think that obviously the removal of the VAT tax break for tourists made an impact on that. And so what you're finding is that whilst London is still very attractive to those customers, they tend to do their shopping overseas, actually. So they might come to Europe and then pop over to Paris or Milan. We're seeing a lot of that trade disappear over there. But, of course, the thing about Fortnum's is because we're a food business, our effective VAT rate is very low. No one comes to Fortnum's to save the VAT on a jar of jam.
No, it's not a handbag.
No, exactly. So, actually, what they do when they come to London is that they do tend to come to Fortnum's. And what we see is really strong trade from the US, Europe and the Middle East in particular. Less so China, actually. Even pre-pandemic, we never saw many Chinese visitors. I'm not sure it sort of really worked for them. Japanese, yes, certainly, but certainly fewer Chinese.
And there's been a lot of conversation in the budget. There was a bit of this talk about putting levies on tourists and perhaps with levies on an overnight stay.
Yeah.
We're not talking about very big amounts of money, so maybe this is of no importance to the types of tourists that you attract.
I think it all goes into the mix. I think if Londoner feels like it's less attractive to an international customer because they've put tiny taxes on lots of small things, I think it does build up, actually. And I think there is work to do to make sure that London and Britain overall remains really attractive to an international visitor, because we're up against the great cities of Europe, and it doesn't take much for people to say, do you know what, I think I'd rather go to Paris or Milan. So I think there's work to do in London to make sure, and Britain overall.
What would you like the government to do?
Well, I think there's a whole load of things that they could do around attracting the tourist, driving the visitor economy more broadly. I'm not sure that sort of visitor levies days is a really good start, I must admit. I do think there is an increasing case to reintroduce that VAT-free shopping for an international visitor. I understand that actually politically that might be quite difficult, but the evidence would suggest that actually every pound that's spent in a hotel, for example, in London, drives another £8 locally in the local economy. So I think that there is an argument to suggest that actually people should be.
Did you feel anything after the budget? Did it feel less buoyant?
I think the budget was neither helpful nor unhelpful for retailers and for hospitality businesses more broadly. I think that inevitably in those industries costs are rising, and as a result of that prices are rising as well. I think the timing of it was not helpful. It was the day before Black Friday, which sort of came very late. I think normally the autumn statement or the budget is sort of at the end of October or the beginning of November. This was right at the end of November, just at the point, certainly for me, when people are starting to think about Christmas. So Christmas this year, and I know retailers have been saying this forever, but Christmas does feel like it's come quite late this year. Interestingly, and this one is for the enthusiast, it's the first time that Christmas has fallen on a Thursday since 2014. It's 11 years. And what that means is that people still feel, even today, people still feel like there's 2 or 3 days to go before Christmas.
Yeah, I'm certainly banking on that.
Whereas if it's on a Monday, people tend to do their Christmas shopping 10 days before. This year, what they did is they left it right until the last minute. So this weekend, actually, was the busiest we've seen all year.
You know, yes, that is for the nerds. The behavioural economics of Christmas is fascinating. No, you're in the right place, Tom. You're definitely in the right place. What about channels and distribution? Because you talked about how this is a business that needs to appeal more to the rest of the country. It can't just be a business for tourists or it won't be taken seriously. And that seems sensible. How do you make that happen? Is it about the channels you use to trade with the rest of the country? What is it?
It definitely is. So we've got quite a significant online business now. It's about 30% of our trade, 35% of our trade. Which has formed a really important part of our growth story, actually, because, of course, what opening up online has done is made the brand accessible to people who aren't necessarily in London every day or every week or every month. So that's been fantastic. We've got 3 shops in and around London, one at the Royal Exchange, just down the road, one in St Pancras Station and one at Heathrow. In fact, we've got a bar and a restaurant at Heathrow. It's the best breakfast in Heathrow Terminal 5, just to sort of say.
Somebody is listening or watching right there, right now.
Hopefully. Yep. And actually, if we can have a shop at every terminal at Heathrow, we would. We think it's a wonderful airport.
Are you talking to them about
that? Sorry?
Are you talking to them about that?
Yes, absolutely. Yeah.
Well, how much further can you take the brand? Are there obvious places that you can see to put more of those kinds of stores?
Yeah, I think there are. I think that there's a big international opportunity for us through wholesale franchising, partnerships overseas. We do a little bit of that already in Japan. We have some decent wholesale relationships in the US as well. I think the trick for Fortnum's, though, is that there is value in sort of scarcity. I don't want to be ubiquitous. I want Fortnum's to be really special. What I really want people to do is, yes, I want them to shop online, but what I really want them to do is think, oh, do you know what? Next time I'm in London, I must go to Piccadilly because this is the most extraordinary, unique shopping experience. There is nothing like it in the world anymore. It is that sort of classic, sort of almost neo-Georgian department store splendour of the 1920s. If that's what you're looking for, that's what you get at Fortnum's, and it's unique. And I really like that. What I love about Fortnum's is that people walk through the shop with their eyes up, looking around, not just looking at products and trying to put things in their basket. And I think it plays a really important role in that.
They're looking for that new staircase.
They are. It's fantastic. We had His Majesty the King came and opened it for us a couple of weeks ago, so it's really beautiful.
Not everyone can say that, can they? So thank you very much, Tom. Thank you for bringing us the story. Very seasonal. Tom Atheron, CEO of Fortnum & Mason. Staying with the luxury theme, according to Bloomberg Intelligence, the luxury goods market could return to 4 to 5% revenue growth in 2026 after 2 disappointing years. Key drivers include new designs, uninterrupted investment and tech projects. Joining us now is Deborah Aitken from Bloomberg Intelligence with the research. Deborah, very good morning to you. So tell us about the growth drivers then for the luxury sector as we head into next year.
Hi. Firstly, pricing. So we've seen pricing of mid-single digit through 2025, partly with an uptick of 2 to 3% overall on the back of the tariffs. So that neutralises out on the tariff side by the end of H1, with some of that already priced into new designs, entry-level design and others to bring pricing down a little bit. So we're expecting within that 4 to 6%, half volume, half price in the year ahead, even 3 to 4% volume, and that will be good down to the operating line on leverage and for some margin contribution.
China?
China, yes, indeed. So our second one on China, We're looking actually toward 4 to 6%, and if we can get it right from the start of 1Q, we would be looking at around 6% growth coming from China. We already at the Q3 went through our whole raft of earnings numbers and saw 10 of our 15 companies in Asia return to growth, globally return to growth, and in China, 7 out of 9 in the Q3 had flicked to growth. That included, for example, LVMH was negative Q2, positive Q3, Hermes neutral Q2, positive Q3, Prada positive Q3. So there's quite a name on the high end coming through at the Q3.
So talking about luxury, we always talk about China and then we always talk about the US. So let's go to the US next. Deborah, has it been robust and can that continue?
It has at the high end, surprisingly so, actually. You know, some parts where maybe the middle market was a little bit squeezed, but you did have aspirational, affordable luxury brands like Tapestry's Coach, one of the key outperformers. And at the very high end, if we look over the whole of 2025, we've had top performances from Hermes, Brunello Cucinelli, but other brands, parts of the LVMH basket doing well. You know, Prada and others, some doing very well out of the US, more than we expected at the half-year stage, and absorbing some of that price hike too.
Deborah, great stuff. Thank you very much indeed. Looking forward to seeing what this delivers in 2026. Deborah Aiken from Bloomberg Intelligence, staying with retail. Christie's is back, a hedge fund for handbags. Hedge fund for handbags. The luxury asset manager, Luxus, is rolling out 2 funds investing in Birkin and Kelly bags after the first one sold out in May. Luxus founder, Dana Auslander, joined Bloomberg Open Interest to talk about the investment vehicle.
It's just like a real estate fund. I mean, we're buying brand new Birkins and Kellys. We are, you know, putting them in a portfolio. We have a whole portfolio construction methodology. We're using most of the bread and butter bags that are flipping over fast. And we're then selling them, and we're selling them both on digital marketplaces. So Sotheby's, First Dibs, My Gemma, Christie's has just did an auction of a pink crocodile. And we're also selling them in real-life experiences. Experiences are all the rage now. So people want to learn more about Hermes and the bags themselves. So
that's interesting. So I've been excited about this since I heard about it too, because I have some friends who have started funds where they buy classic cars, for example, but they just then store the cars and like never use them. You're actually trading essentially handbags, and I guess you're not going to Hermes to buy them new, right? You're buying them.
We're not buying them directly from Hermes, but we are using the resale industry, and there's so much pent-up supply in the entire range of bags. So brand new in the box with plastic still on, all the way down to the beater bags, which are very popular with the Gen Zs. So it's really been interesting to see what is popular now versus what was popular 10 years ago, 15 years ago, 20 years ago, and a bag sells every 48 hours.
Give us the price ranges. We're looking at some bags here. What's that, a Celine there?
That is a joke, right?
Yes, I have no idea. What are we talking about in terms of...
Bags.
They're all Hermes.
They're just Hermes, Birkins, and Kellys. It's a concentrated portfolio, and anything between, I would say, $25,000 to $32,000. And that gold one, which is the brown, is our bestseller. We've already replenished it 3 times, and it's really fun. It's been really great to watch it thrive so much. Fund 2 was 5x oversubscribed, so we're going into 2026 with big plans.
Matt Miller, talking about handbags.
Excellent. That's why we had to replay the tape, really, wasn't it?
To be honest, yes.
Yes, it was brilliant. We thought that was fantastic. Just Hermes, Birkins and Kellys. It's amazing where people can find to store value these days. It is 8:47 here in London. We'll be back with more on the markets next. This is Bloomberg.
are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to the programme. Monday, 22nd of December. Let's get up to date on the latest news flow surrounding Ukraine as we look ahead to the remaining days before Christmas. US Special Envoy Steve Witkoff says Trump officials held, quote, productive and constructive talks with Ukrainian and European counterparts in Florida. The talks included US President Donald Trump's son-in-law Jared Kushner, a top Ukrainian negotiator, and other European security advisors. Bloomberg's chief Europe correspondent Oliver Crook is here. And Ollie, of course, you've been covering this very much from the European side over weeks and months and years even. Does it look like Ukraine will accept the territorial concessions? Because there's been pressure on them to do so.
Yeah, I think that after the problem that we've had with this whole negotiation is since we got that plan where we had all of the information revealed, that since then it's gone really underground. And we keep hearing that the conversations are being very productive, they're being very constructive. But we don't have very clear, we don't have a lot of clarity on basically what is being negotiated at this stage, how much progress that they're being made after these talks. We do know that the United States was suggesting there could be trilateral talks between the U.S. delegation, the Ukrainian delegation, the Russian delegation. Doesn't really feel that we're at that point yet where would be those kind of conversations would be appropriate. I think that's been the dilemma with the sort of Trump momentum in these conversations. There's been so much energy pushed through it. I think that we've seen some of the Russians and the Ukrainians sort of move on some of what their red lines were a little bit, and that has been the positive side. But the negative side is that it's given a false sense of momentum to these talks and still dealing with some very, very tough issues.
We were debating this with the French Europe Minister a little bit earlier on, Benjamin Hadid. Last week we saw this 90 billion loan coming through from Europe, but it wasn't the frozen Russian assets that were being used. Does it matter whether it was that or that?
I think it matters a lot.
Yeah.
I think it matters a lot. I think it tells us a lot of different things. You can read a lot of different things from what we got out of that. Is it just the fact that the Russians, who have made a lot of noise about the Russian assets in the few days leading up to this, you can tell it's something they were very, very concerned about. And also the euphoria that they had, that the Europeans did not actually move on it, is very, very significant. I mean, there is a positive side to this from the European perspective. It leaves the assets on the table for a later date, possibly. But on the other hand, you know, how much of this is also the Trump pressure that we've got from Belgium, on the French, and on some of the others. And I have to say that, you know, Friedrich Merz, when I watched him walk into that meeting, he said the only way forward on this is through the Russian assets. By the end of the meeting, he had completely capitulated on that. This is also going to cause massive issues internally because, on the other hand, everybody seems to have won from this deal, according to the Europeans. On the one hand, they say that the Russian assets sort of back this, and the risk doesn't lie on anybody's balance sheet. That's not possible. So right now, what is being backed is European joint debt. This sits on the books of Europe right now. As far as I can understand, it does not sit at the risk with Russia, and that's what they're trying to sell.
Okay. Well, again, the implications of that, I think, have yet to play out, but I think it'll take a while.
For domestic politics in Europe as well.
Absolutely.
I mean, look at Germany. AfD is going to have a field day with this.
Absolutely. Yeah. Ollie, great stuff. Thank you very much indeed. Looks like Ollie's going to be busy next year on that narrative. OK, let's turn our attention to what is happening in other markets. Japanese yields rising amid speculation the BOJ may need to raise rates a little more aggressively to curb this yen weakness, though the relationship between the two seems to have broken down a bit. Ven Ram joins us now from our MLive team. Ven, let's talk a little bit about what is happening here. We've got a warning coming through from the Japanese currency chief on what is happening with the yen right now. The yen seems to be the cleanest way of basically the market signalling that the BOJ needs to get on with it and hike more. What are you reading into what we are seeing in terms of the asset price moves, both in the bond market and in the currency markets this morning?
Morning, Guy. I think, excuse me, I think the most important point of what's been happening with the yen in the past quarter is that investors have attached a risk premium to the yen. What do we mean by that? If you look at if you pass the yen's trajectory against real interest rate differentials, there's a very striking correlation between the moves, but that has diverged in this quarter ever since it became clear that Takaichi could become the prime minister. So since that time, the investors have embedded a risk premium, meaning the US dollar Japanese yen has gone higher, whereas the real differential rate has gone lower. So I think that's a clear sign that investors are looking to add on to that risk premium. And we have seen the Japanese officials jawboning against inordinate currency weakness, but that is going to fall on deaf ears because unless the Bank of Japan moves quickly to stamp out inflation, I think that risk premium may be here to stay.
Yeah. And let's take the global yield story a little bit wider then, and go to Germany, because German bond yields actually pretty flat this morning. But at the back end of last week, we saw them also elevated. I wonder what you think links these stories. What's driving this?
One is the global trajectory of yields. We have seen that, in Australia and New Zealand, the central banks pivoting away from rate cuts into a rate hiking territory now. At the moment, if you look at the Australian bond yield, it's a telling story. This quarter, the Australian 10-year yield has surged 50 basis points. That's a phenomenal move in less than a quarter. And that is setting the pace elsewhere. Of course, JGBs is also playing into this. And the only yield that has been impervious to all this is the US Treasuries, which has its own idiosyncratic story. So, and in the case of Germany, we had the Bundesbank say last week that growth is going to be strikingly different and next year. And then we have had the Dutch pension fund story playing into that. So all these are weighing on German bond sentiment and pushing yields higher.
OK, Ven, thank you very much. Thanks for the update. Ven Ram joining us there with the latest some of those macro movers. And thinking about global bond yields, how elevated maybe they are or might be next year, we're going to have an interesting conversation coming up on Bloomberg TV shortly. Federal Reserve Governor Stephen Myron will be speaking to Bloomberg. Catch that interview at 1:30 p.m. UK time. Really fascinating to get his take on the global bond markets, what Fed rate cuts should or should not be doing to US Treasury yields, perhaps. That is it for the opening trade for this Monday, 22nd of December. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Oil gains as the U.S. intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding another vessel over the weekend. Gold and silver hit new highs thanks to geopolitics and rate cut bets. This as supply concerns, tariff fears and strong demand drive copper to a new record. And a senior Russian general is reportedly killed after his car explodes in Moscow. Investigators point suspicion for the assassination at Ukraine. Here's how all of that is playing out in the markets this morning. Traders expecting a strong end to 2025. So futures pointing higher stateside after that strong rally on Wall Street on Friday. Not the case in Europe, but we'll get there in a moment. Commodities in the spotlight this morning, thanks both to the geopolitics and the Fed easing bets, but also in the spotlight, Japan. We have yields here at levels not seen since the 1990s. Could this bring Tokyo, the Bank of Japan, to its next move faster? Now, let's dive into what's happening across the European continent, because it's not perhaps what you would expect. The Stock 600 as a whole is flat, and yet, if there is outperformance, if you could call it that, it's happening in Germany, despite the weakness for the defence names, because of the hopes of a peace in Ukraine. And I mentioned the strength for energy and basic resources, but the underperformer this morning is the FTSE, despite that. So the FTSE down 0.4% this morning. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London. Well, we begin this hour with oil prices in focus after Bloomberg reported that the US is still pursuing a third tanker near Venezuela. This as President Trump intensifies an oil blockade on Nicolas Maduro's government. For more, let's bring in Bloomberg's Jill Desis. Morning, Jill. Just bring us up to speed on the latest on the scale of this blockade and just how much it's choking off oil.
Sure, Lizzie. So I think that really from a political standpoint, this is obviously an incredibly significant blockade. We're talking about, what's really the U.S.'s largest military incursion in the Caribbean in decades. I mean, the scale of now pursuing this third oil tanker really does put this on a pretty severe scale and represents a very dramatic escalation of the U.S.'s efforts to, go after Venezuela. Obviously, the Trump administration in particular, I mean, they sanctioned Venezuela and oil back in 2019. But this does really represent a pretty significant ratcheting up of those tensions and obviously of the U.S.'s involvement here.
So where does it leave oil in the context of the oversupply concerns that we've talked about so much in recent weeks and months, Jill?
Yeah, Lizzie, so this is where I think there's actually a little bit more nuance here. Obviously, we've seen some reaction so far during Asia trading in the oil market, up about 1% or so. I think the thing, though, is that you have to keep in mind that Venezuela has really been under pressure for, at this point, years. I mean, remember, it was back in 2019 that the Trump administration was sanctioning Venezuela. We saw oil production at one point drop down to as low as 400,000 barrels per day. Now they're saying, as of over the weekend, production was at about 1.2 million barrels per day. Obviously not massive, but a step up from there. We've really seen sort of a decline over time. Right now, the market is actually fairly well supplied. And if you're looking at major clients like, China, for example, being a significant buyer for Venezuelan oil, they actually have some alternatives that they have here. So I'd say, when we're trying to put this entire incident in context here, obviously this is a very, very serious escalation here. You're talking about a significant sort of shift in terms of how the U.S. is interacting with, a major, a country in South America, Latin America here. But I think in terms of the broader scope, while you are seeing those moves up in oil, at this point, obviously some of those buyers still have some alternatives from Venezuelan oil. But still, looking at Venezuela, obviously terrible news for its economy. We're seeing, some sort of, push against hard currency there. This is really, I think, a significant situation for Venezuela in particular.
Okay, Jill, thank you for the update. Bloomberg's Jill Desis there. So amid those geopolitical tensions that Jill mentions, it's not just oil that's moving. You also have gold, silver and copper hitting new records. And it's not just on the US intensifying this oil blockade against Venezuela. You also have Ukraine attacking an oil tanker from Russia's shadow fleet in the Mediterranean for the first time. So gold on track for its best annual performance since 1979, bouncing back from that retreat we saw after its October peak, when it felt like that rally was perhaps a bit overheated. And it's not all down to geopolitics. You've got looser monetary policy also helping the precious metals. Traders betting that the Federal Reserve will cut rates twice in 2026 after last week's economic data. Plus, of course, President Trump's encouragement of looser monetary policy. And if we just stay with metals, we also, as you can see here, have copper on track for its biggest annual gain since 2009, charging towards $12,000 a tonne at the tail end of a momentous year, dominated by the trade turmoil, the tight supply, and of course that optimism for long-term demand. But let's get back to the geopolitics, because as I say, oil traders keeping another eye on Ukraine peace talks as well as Venezuela. US Special Envoy Steve Witkoff saying that Trump officials held productive and constructive talks with Ukrainian and European counterparts in Florida. Bloomberg's chief Europe correspondent Oliver Crook is here with the detail. Ollie, does it look like Ukraine's going to accept the territorial concessions that Trump's been pushing?
I think it's very difficult to tell at this stage. I think the momentum that we've got from the Trump administration, I do think that that has put a lot of pressure on the Russians as well as the Ukrainians to start amending some of their positions, not all in public, quite obviously, but I suspect, and we heard the Ukrainians say that they might hold a referendum on territory. That is a sort of meaningful step, a meaningful signal from the Ukrainians, but it's very hard to see what's going on under the surface of these negotiations after we got that 28-point plan where everything was sort of spilled out. Everything's gone sort of underground since then in those discussions, but the action was all in Florida. There was a suggestion that there could potentially be a meeting between the Ukrainians, the Russians, and the U.S. I don't know that we're quite there at that point, but the action has certainly been elsewhere. We saw, for example, this morning in Moscow, a car bomb killing a senior general from the Russian military. No one has claimed it yet. The Ukrainians have not given a comment on that, but we've seen the Ukrainians certainly get much more inventive in some of the things that they've been doing. It's the third senior general that they've killed this year, if this is in fact them. There's also been disabling of all the shadow fleet across the Mediterranean and elsewhere, as well as managing to hit submarines that are docked with drones. So really very inventive things from the Ukrainians over the last couple of weeks and months.
And of course, you were in Brussels last week. You covered the summit at which they agreed this substantial loan to Ukraine. Has that changed the situation?
I think it makes a huge difference for the Ukrainians. And when I spoke to Zelensky just 6 or so weeks ago, he said basically this is for us is a matter of life and death. This is a matter of survival. If we do not have these funds, basically they would be forced to surrender to Russia. Now they're in a position that A, they can continue their war effort for the next year, next 2 years. It can also help out with their budget. But at the same time, it's also the difference between sitting across the table of you and me in a negotiation but having $0 in the bank and $100 billion in the bank. And that's what they've got now. So at least they can fight another day and try to get to a better position and more leverage in those discussions.
Yeah, Poland's Donald Tusk put it well. Money today or blood tomorrow. So just talk to us about the internal tensions at the EU. And how they failed to reach a deal on frozen assets, because that was plan A, wasn't it?
Absolutely, it was plan A. And even Friedrich Merz, the Chancellor of Germany, going into this meeting was basically saying there is no plan B. And then suddenly, what do we find 18 hours after in negotiations? Not only is there a plan B, they're going with plan B. And it's a plan B that involves joint debt at the European level. I mean, this is something that if we had been talking about it in the weeks leading up to this, would have been a lot of commentary, a lot of pressure domestically within Germany, a lot of these frugal countries. They managed to get it over the line, and we're not saying a whole lot about it. What I think is really very interesting is all of these European leaders want to say that we've won here, we don't have the risk on our balance sheets, it's Russia that's paying for this. That's not strictly speaking true. What they have done is kick the can down the road. They don't know what they're going to do with these Russian assets. The positive side of that is that it's still on the table potentially to use in the future, but where does this risk lie? We're talking about 90 billion euros that is now sitting with the European Union. As far as we can tell, again, we're going to wait for more details, but that's something that, you know, the Chancellor Merz wants to say, we're actually not holding that risk, and that's not strictly speaking true.
Okay, Ollie, good to see you. Bloomberg's Oliver Crook here with us in London. That's our chief Europe correspondent. Now, the trade dispute between the EU and China continues to bubble away. Beijing has levied tariffs of up to 43% on some dairy imports from the European Union following an anti-subsidy probe. China launched an investigation focusing on fresh and processed cheese last year. Brussels has challenged the probe by requesting consultations via the World Trade Organization. Now, elsewhere, back to markets. Hopes for a year-end rally in equities are growing after dip buyers helped US stocks recover from a slide driven by doubts over AI exuberance and scope for Federal Reserve easing. Joining me now for more is Michael Brown, Global Investment Strategist at the Franklin Templeton Institute. Nice to see you, Michael.
Good morning, Lizzie.
Just before Christmas. So we've got analysts upgrading the big AI names as we head towards the end of the year. Can we ditch the AI bubble fears and leave them in 2025?
Well, you're going to have to differentiate between those that are building out AI with their cash flows and those that are building it out with debt. And those that are building out a debt, at some stage, they will end up with a question mark if the business doesn't come through. However, I think when we look at those top four, the hyperscalers, I think we can be really confident that they will build out the product, they will be successful with the products, and actually at the moment there's quite a lot of room for upgrades in those numbers.
But the hyperscalers have got such a head start, right? How much is this going to broaden out in the next year?
Well, what you typically see, I'm going to take you all the way back to the railroads in the 1830s, right? You know, Liverpool to Manchester, brilliant idea in 1830. London to Brighton, 1841, a brilliant idea again. Nice to Brecon in 1867, went bust before they even laid a rail down. If you are third to the party, you're not going to make any money. And I think that's the point. So your first movers are going to be strong, your hyperscalers. Your second movers may well get away with it, but your third movers, that's where you're going to see the pickings coming through, and that's where you're going to see consolidation over a 5-year period.
OK, that's interesting. So actually not the broadening that other analysts are calling for. To what extent can that stock rally then continue if the Fed isn't as dovish as priced?
Well, we think the Fed will be. We think actually also that there's a steepening here, so we think that we're going to see something between 25 and 40 basis points of steepening in the US yield curve, and that broadens out your US equity rally. So that smaller mid-cap area in particular is going to see, I think, some significant gains. And the economy, having been slow in the first half of 25, is gently picking up and gently recovering, and that breadth is going to see better earnings numbers. Q3 earnings numbers were excellent in the United States right across the board. And we think that will continue in Q4, and we think that gives you a leg into the first couple of quarters of next year.
But what I want to know is, what if the central banks aren't as dovish as you see? Let's take the Bank of England, right? You're quite dovish there. Last week, yes, we had a cut, but the vote split was the bit that was surprising, right? They weren't as changed by the weaker-than-forecast CPI print as perhaps one might have expected. Why are you so dovish?
Well, you go 5-4 in November, and then the governor flips over, you go 5-4 the other way around in December. And what's really interesting is the arguments of the four, if you like, who are quite bearish, who are quite hawkish at this moment of inflation, have not changed a bit. So on the one hand, we're saying we're going to be driven by data. On the other hand, we've got a group of four who are not moving at this point in time. We've got weak job numbers. We've got weak job creation numbers. We've got some unpleasant pay figures, but those pay figures are entirely driven by the public sector, where year-on-year pay is growing at 8% as opposed to the private sector at 3.5%. So come on, let's get real. The private sector is doing a lot of the work here, and when that rolls away from the government sector, then you're going to be really surprised.
So what's the bar in the data to cut again? How soon do we get another one?
Well, the market will tell you April. I wouldn't be at all surprised if we had some further weak employment data in the first quarter of next year, which shunts them forward by a meeting or so.
Wow, OK. And you're even dovish about the ECB, despite all the market repricing we saw off the back of Isabel Schnabel's hawkishness. How vulnerable, if you're right, does that leave the euro?
Well, the euro's been fantastically strong, and the amazing returns in the European equity markets are clearly driven, a very big part in the euro. It's been good locally, but it's been great if you add on that extra strength. And that is a problem for the euro area. So on the one hand, we're enjoying those rates of return in dollar terms, but on the other hand, that is also putting pressure on European business. It's deflationary. And that's one of the reasons why. I mean, we don't think the dollar is going to be particularly strong. We think it's going to be soggy, is the best word I can use for 2026. And on that basis, we think that there is room for another cut. And, the deflationary forces that we saw post-2010, we think they're back. And in particular, Chinese deflation, notwithstanding all the tariffs conversation, is back. We've got to factor these things in, and they're going to be around during a period of slow to average growth.
So earlier discussing about how gold and silver are at record highs, partly because of the dovishness, the Fed cut bets, and yet you don't see much need for safe havens in 2026. Why is that?
The IMF gave a wonderful word right at the top of their global economic forecast. It was a dull, right? But dull is also dependable. We're going to do about 2% growth in the States this year, 1.5 or so in Europe, 1.5 in the UK. About 4 in China, 6 in India. It's kind of going to be repeated in 27. That's not an inflationary busting, commodity-driving, frightening scenario, in particular because obviously we're going to see the impact of AI on the employment market in 27 and beyond. And that's why I can be quite bullish here about the overall valuation levels and indeed growth, because I don't see these inflationary impulses that other people do. And let me flip that around. If I'm wrong because we get stagflation. And if we get stagflation, then we're going to have more rate cuts because the Fed's going to get the put out.
But how are people not going to lose their jobs because of AI? Surely that's the point. You save your wage bill and you can make more with fewer people.
One of the great fallacies of every single innovation that we go through and every paradigm change that we ever have is that somehow or other, either I'll be able to do the same job for working for less time for the same money, or we're going to need fewer people. What happens is that releases resources and you find yourself doing something else with the time available. And that is going to be exactly the paradigm that we will end up. Please don't think, I'm terribly sorry to give people not a Christmas present, but please don't think you're going to be able to go to a 4-day week on the same pay. You're not. You're going to be working 5 days and you'll be doing 20% more in those 5 days.
You killed my dreams, Michael. Just finally, before we let you go, if not gold, which havens would you recommend then in 2026?
I still think if we're right about rate cuts, if we're right about this fairly low inflationary picture, then you need cash flow, right? And yes, I know that the gold is having a boost from, frankly, I think it's the weakness in Bitcoin more than anything else at this point in time. But you want cash flow and you want to buy high-yield assets. And I still go to corporate debt markets, still see those as very attractive. I would start to look at some of the sovereigns that are blowing out here because people are worried about issuance. There's going to be an opportunity on that basis as well.
OK, good to see you, Michael Brown, Global Investment Strategist at the Franklin Templeton Institute. Wish you a Merry Christmas when it comes. Well, President Trump's top economic advisor says that a Supreme Court ruling against the administration's tariffs regime risks creating a major administrative problem. Judges are currently weighing a legal challenge to the Trump tariffs that he's imposed on dozens of nations. Kevin Hassett says that the challenges of refunding the levies should deter the court from ruling that way.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Coming up, we're going to stay in Washington. The Department of Justice U-turning twice on releasing photos in the Epstein files. That's next. This is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The conversations that matter and the insights you need. This is The Pulse, and I'm Lizzie Burden in London. Well, the Trump administration has defended the decision to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then later restored. Deputy Attorney General Todd Blanche says it was done out of concern for the Epstein victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public, seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
The latest release of the so-called Epstein files includes thousands of pages of pictures, phone records and notes from investigations, but many of the documents were heavily redacted. Bloomberg's Miles Miller has more on the release and the reaction.
The Justice Department releasing a new set of documents tied to Jeffrey Epstein, marking the most extensive public disclosure yet in a case that's fueled political tension for years. The files were posted online after Congress passed legislation in November forcing their release, overriding long-standing resistance from the Trump administration. Trump ultimately signed the bill under pressure from Republican lawmakers who had demanded transparency around Epstein's case. What's new is the scope of what's being made public. The Justice Department releasing thousands of pages of materials from federal investigations into Epstein, the financier and convicted sex offender who died in a Manhattan jail in 2019 while awaiting trial on sex trafficking charges involving underage girls. Authorities have ruled his death a suicide. The records include investigative files, flight logs, travel documents, internal Justice Department communications, immunity agreements, and materials related to Epstein's death. Much of it previously sealed or only partially disclosed. The response was immediate, with users trying to access the documents being placed into online queues as traffic overwhelmed the Department of Justice website. Officials emphasized that this is not the final release, with Deputy Attorney General Todd Blanche telling lawmakers the volume of materials to be reviewed meant that it wasn't possible to meet the law's requirement to release all files by Friday. He said more documents are expected in the coming weeks as officials continue to review records to protect victims and avoid compromising ongoing investigations. Among the materials released are photographs and records involving prominent figures. One tranche includes a photo of former President Bill Clinton with the late musician Michael Jackson. Clinton has denied knowledge of Epstein's crimes. The release carries political risk for Trump, who has acknowledged a past social relationship with Epstein, but says he had cut ties with him decades earlier. Earlier disclosures this year were criticized as incomplete, fueling anger within Trump's base. With more records still under review, Friday's release is unlikely to be the last chapter in the Epstein case.
Bloomberg's Miles Miller reporting there. For more, let's bring in Bloomberg's senior legal reporter, Jonathan Browning. Jonathan, from a legal perspective, what stood out to you from what's been released so far?
Well, to be honest, the main thing was actually the very release of the documents itself. That was the main event. There haven't been huge headlines of completely new disclosures coming across our screens from this release of documents. It was, as that VT showed, right, the anticipation and expectation, actually, of delivery. There was this queue at the Justice Department website in order to actually see these documents. The photographs stand out. They're immediate. They're very visible. Bill Clinton features quite prominently. He's said it's a diversionary tactic. In the UK, the former Prince Andrew Mountbatten, Windsor, there are photographs there. There are photographs of him with redacted photographs, but in Sandringham, the royal residence, at Ascot, in these places of society.
Yeah, and so that's what's here already, but a lot has been redacted. What's it going to take to have those redactions lifted, especially in relation to President Trump?
So it's political pressure, or it's pressure from the MAGA base, right? That's the thing that has stirred this. That is the thing that has kind of made this happen. Again, you saw the Deputy AG there go out and have to defend those releases, and the fact that there had been so many redactions, the fact that they hadn't met the deadline that they said they were going to. That is the thing that will push and further on the release of these documents.
And so what are we waiting for? What's likely to be in the next tranche of material?
I mean, time will tell, right? We're not going to know that. The thing is, clearly, that there were something like 1,200 names of victims and those associated with them that the Justice Department has had to go through and redact. That's a huge undertaking. And so it is in those, what they're saying is it is in those connections, the people that are linked to them, that we've seen those redactions, and that's what they have to work through over the coming weeks.
OK. All right. Bloomberg's senior legal reporter, Jonathan Browning, thanks so much for walking us through it. Meanwhile, President Trump has announced deals with 9 more pharmaceutical companies in a bid to lower drug prices for some Americans. The agreements with companies including Sanofi and GSK come in exchange for a 3-year reprieve from threatened tariffs. The latest pledges include price cuts for low-income earners and matching of international prices. In other news this morning, Uber and Lyft are each teaming up with China's Baidu to trial driverless taxis here in the UK. Uber says a pilot programme using the robo-taxis in London will start in the first half of 2026, with commercial services expected in the city before the end of next year. Separately, ride-hailing platform Lyft will also carry out UK tests next year, with dozens of the same vehicles pending regulatory approval. Well, coming up on the programme, after the budget uncertainty in the UK, could there be a sales rebound in the run-up to Christmas? We'll look ahead to that next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Lizzie Burden in London, and these are your top stories. Oil gains as the US intensifies a blockade on Venezuela, with the Coast Guard in pursuit of a third tanker after boarding another vessel over the weekend. And a senior Russian general is reportedly killed after his car explodes in Moscow. Investigators point suspicion for the assassination at Ukraine. And gold and silver hit new highs thanks to geopolitics and rate cut bets. This as supply concerns, tariff fears and strong demand drive copper to a new record. Well, it is the holiday season, so let us turn to my favourite topic, shopping. Britons are more likely to buy big-ticket items than they were before Rachel Reeves's budget, and that's according to a prominent survey suggesting that sentiment has improved in the run-up to Christmas. Let's discuss the outlook and how 2025 was for UK retail with Charles Allen, retail analyst here at Bloomberg Intelligence. Morning, Charles. So when we look at the UK consumer story, it hasn't been as simple as you might think in 2025. Where does it end the year?
Well, I think that we'll probably see a reasonable December, but even this is quite nervous. I mean, as we heard earlier, his footfall wasn't that great, and Christmas on a Thursday, perversely, sort of for non-food, it means everyone thinks, oh, I've got a few more days. Whereas for food retailers, it's quite good because it means that it's not a rush. People have got sort of Monday, Tuesday, Wednesday to get everything for the big meal. So, and I think clothing has definitely been a problem this year. It's been persistently warm through the fall. So sales have gone on promotion a bit early, probably.
OK, and what's the outlook specifically for food inflation? Because that's crucial, of course, the consumer outlook.
It is, and unfortunately, I mean, it seems that, you know, some of the things that are driving food inflation are just there, and things like beef and the dairy categories where inflation is high. I mean, there are structural reasons why they're going to stay high.
Well, you're not thinking of the B word, are you? Brexit?
No, it's just that you can't breed cattle that quickly. So if you have a shortage of cattle, it's not like pigs where you can rectify it in a few months. It takes years to get back to the right number of cows and beef cattle and so on. So that's a price rise that could continue. Whether it'll be offset by some falls in other things like oils, we'll have to see.
And so, more broadly, how is retail holding up this holiday season? We've just, of course, had the budget. There was lots of uncertainty around the budget.
I think it's sort of different by category. I mean, food retail hasn't been that great. It's very price competitive. But I think everyone expects a pretty good December. Clothing, as I said earlier, I think has been difficult, and there's been a lot more price cutting earlier than expected. Some of the hard lines, like computing and things, actually look quite good, and people are spending on that.
All right, Charles Allen, thank you so much. I hope there's lots waiting under the tree for you, Charles. That's our retail analyst at Bloomberg Intelligence. Now, staying with retail, Shein's choice of Paris for its first physical store set off a bit of furore amongst French retailers and politicians, fretting over the potential damage to local businesses from the fast fashion retailer. Yet, almost 2 months after the doors opened, efforts to resist Shein in France are falling flat. Quelle surprise. Bloomberg's Jenny Che joins us now with more from Paris. So, Jenny, it turns out Parisians also like a bargain. Should we be surprised?
No, I mean, as you say, price matters, and Shein is cheap, and consumers' wallets are hurting right now. I mean, the fact that they have such low prices is appealing to a lot of people, and Shein in France has just continued to grab market share, and it's just as popular as H&M and Zara. And of course, it did get a lot of bad press. Last month, when it opened the Paris store, it was reported by authorities for selling childlike sex dolls and weapons on its marketplace. But consumer demand is still there, it seems, and that's, as long as it's there, that's what's going to help Shein continue to grow in France.
And so how's Shein's arrival impacting the rest of French fashion? We know they were worried about it before the arrival. How's it panning out?
I mean, they just can't compete with Shein's rock bottom prices. They've already, a lot of affordable French retailers have suffered in the last couple of years. COVID obviously shut down a lot of stores. People are buying more and more online, and right now they see Shein coming in, and it's a lot of them are panicking. And what we're really seeing in France, though, is how much politicians have come and to support the French retailers and against and coming together to speak out against Shein. The government has moved to suspend Shein. It asked a court for that suspension, and last week the court actually said no. It rejected the request, and the government is appealing that. And we can see that France is also lobbying at the EU level. It recently asked the EU to put in a temporary tax on small packages, which is what Shein and a lot of these other platforms are really, that's what they are building their growth on here in Europe.
But what about Shein at a European level? Could we see it opening physical stores in other European capitals as well, Jenny?
So it's hard to say at this point. I mean, so Shein was planning to open some other shops in smaller regional cities. Those were supposed to open at the end of the year. And after all the drama surrounding the Paris store, it suspended those plans, and it has not given an update on when those stores are set to open. So at this point, I think it's unlikely that we'll see more stores in other European countries, at least in the near future.
All right, Bloomberg's Jenny Shea, thank you so much for that update on Shein's progress in Paris. And staying in the French capital, the cabinet of France is set to meet today to present a special law allowing it to roll over vital spending and taxation after budget negotiations were postponed to next year. Separately, the Finance Committee of the National Assembly says that it'll review the special law on Tuesday, making an adoption likely this week. Well, this year witnessed a French government embroiled in near constant turmoil. At the heart of the crisis is France's outsized debt, its beloved social safety net, and what many see as the economic imperative in scaling it back. On this Bloomberg Originals weekly documentary, we lay out the political minefield faced by Macron, the grave stakes for the country's economy, and what might need to happen to break the deadlock.
In 2019, France watched a national treasure go up in flames. Now, there's a fear that the structures holding up French politics are starting to catch.
There is clearly a problem with French public finances. For the worsening of the budget deficit. France's political crisis deepened today.
Most French citizens adore their nation's system of social safety nets, but those programs have become increasingly unsustainable. France has the euro area's largest deficit, massive debt, and every attempt at reform has ended the same way.
Surprise resignation from the Prime Minister.
4 Prime Ministers in 20 months.
We're heading into our 5th Prime Minister now in 2 years.
French politics is in a bit of a mess. It really is an unprecedented crisis.
Benefit reform sparks this. Unions break out the flares, and fragile coalitions collapse under the strain.
France is currently characterized by political blockage due to a very difficult public finance situation.
What people talk about is sort of a gradual sort of suffocation of France's ability to deal with its fundamental economic problems.
History suggests that at this point it's more likely that only a shock can force change. The question is what or who would deliver it?
Viewers could watch that weekly documentary via the terminal or on the Bloomberg Originals YouTube channel. Well, staying with European politics and turning to Spain now, Prime Minister Pedro Sanchez has suffered a large defeat in a regional election. The People's Party won 43% of votes with 29 seats, while Sanchez's Social Party won 18 seats. Support for Sanchez has been eroded in recent months by scandals and graft investigations, leaving the government increasingly isolated politically, despite Spain's strong economic performance. Well, coming up, we shall turn back to shopping, how we shop online. It could be about to go through a huge transformation. We'll be speaking to Katharina Schumacher, partner and tech expert at McKinsey. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The conversations that matter and the insights you need. This is The Pulse. I'm Lizzie Burden in London. Now, the boss of one of London's best-known department stores says that the firm's having to work much harder for sales this Christmas. Fortnum & Mason's CEO, Tom Atheron, spoke to Bloomberg's opening trade just a short time ago.
I'm sort of pleased with the way things are going. I would say that we're having to work quite hard for our sales this year. The data that I'm seeing suggests that footfall into retail is down slightly year on year. We have the advantage of just having built this beautiful double helix staircase which sort of sucks people up through the middle of the shop. So actually what we're finding is we're seeing slightly fewer people but spending a little bit more.
And which people are they? Are they tourists? Are they domestic shoppers? Kind of just give us a breakdown of kind of what you are seeing. Is it possible to see?
It is, absolutely. You can use credit card data to see where people's credit cards are registered to, so you can make some inferences as to who they are and who's shopping. We've gone from, I suppose, a situation 10 years ago where 70% of our demand was international, so tourists, and 30% domestic. And we've now switched that on its head. It's now actually 70% domestic and 30% international all the way through the year. Obviously, at certain times of the year, it skews. So in the summer, it's much more heavily international. But at this time of the year, it's almost exclusively domestic trade. And I think I'm pleased with that, actually. I think that it's important for us to appeal to a domestic customer. My sense is that if we do that, the tourists will come anyway. But if we're just a business that appeals to tourists, I don't think anyone will ever take us seriously as a business which is all about extraordinary food and drink.
OK, so Tom, good morning.
Morning.
That's really interesting then. So I was going to ask you lots of questions about tourism, which I might still do, but it seems you're telling a story of being slightly less reliant on it than you were.
Yeah.
But in terms of the types of tourists that you get coming through your doors, London attracts a lot of well-heeled tourists from the United States, the GCC, from China. Is London increasingly a destination for at the top end for in terms of the people who come here? It's a luxury destination increasingly, it seems.
Sort of. I mean, I think that obviously the removal of the VAT tax break for tourists made an impact on that. And so what you're finding is that whilst London is still very attractive to those customers, they tend to do their shopping overseas, actually. So they might come to Europe and then pop over to Paris or Milan. We're seeing a lot of that trade disappear over there. But, of course, the thing about Fortnum's is because we're a food business, our effective VAT rate is very low. No one comes to Fortnum's to save the VAT on a jar of jam.
No, it's not a handbag.
No, exactly. So actually what they do when they come to London is that they do tend to come to Fortnum's. And what we see is really strong trade from the US, Europe and the Middle East in particular. Less so China, actually. Even pre-pandemic, we never saw many Chinese visitors. I'm not sure it sort of really worked for them. Japanese, yes, certainly, but certainly fewer Chinese.
The Fortnum & Mason CEO Tom Athron speaking there. Well, to a less traditional kind of shopping, tech companies have rolled out more AI-powered shopping tools this holiday season as artificial intelligence increasingly becomes part of our daily lives. We all shop online, but our next guest says the way we buy things is about to undergo its biggest shift since the invention of the internet. It's called agentic commerce, and I'm pleased to say we're joined now by Katharina Schumacher, a partner and tech expert over at McKinsey. She's also the author of a report on how AI agents are taking over the marketplace. Good to see you, Katharina. For those of us still shopping the old-fashioned way, what actually is agentic commerce? How is it different to shopping on an app, for example?
Yeah. So I think I would break this down in 2 or 3 elements. So one is basically today shopping is manual, right? You basically scroll, you search, you compare, then you do the checkout. Agentic commerce is really a shift from doing all this manual work to delegation. So AI agents can act on your behalf. And I will say that this is also a more outcome-focused way of shopping. So it's no longer asking the agent to buy batteries, but to keep the house running. And if you think about a smoke detector running out of batteries, the agent will then proactively replenish and purchase those batteries for you. So it's much more about intent. And I think I will add that an agent is actually not only suggesting, but executing on your behalf. It has your preferences, your guardrails, your credit card data, and then it will go and execute on your behalf. And I think the last thing I will say is that this is not a feature update. So we ran several scenarios, and even in our moderate scenario, we landed at roughly 3 to 5 trillion by 2030 that would be actually orchestrated through agentic commerce. So that's a quite significant change.
Yeah, and so what does it mean for brands if AI is making shopping decisions for consumers?
So I think I will say that brands have to definitely get ready for this shift. And they have to make sure that they have the right data available. And this data is also agent readable. And we are seeing this, we call this search, not only search engine optimization, but now generative engine optimization. And I think the other thing is, of course, experimenting a bit with the new way consumers are purchasing and shopping now.
So how far could this go? Could AI help me buy a car, for example?
Yes, I think agents will be able to handle complex transactions as well. And in order to do this, they will orchestrate and negotiate with other agents to get a transaction done. And when you think about the readiness for consumers, this is already quite advanced, right? So we just ran a new survey last week in the UK, in France, and in Germany. And a significant majority, I think it was more than 80% of consumers are already saying they're using AI. And of that, roughly 40% use AI to do shopping and to compare products and find products and discover products. So that's quite a shift.
But is tech ready for this level of trust? How do I know that they're not going to overspend or share my data?
Yes, that's a really good question. So look, I think trust will be the biggest challenge in this, because ultimately we are already also seeing today in e-commerce quite big changes between different regions, how ready consumers are to trust. Only if you look at the uptake of credit cards as a payment method, for instance, this also varies quite a bit across regions. So what we will see is we will see a different uptake and different levels of autonomy across the different regions. And I think there's, of course, payment protocols already launching now that will allow consumers to set certain guardrails in their transaction. And I think the other thing that also agents will have to explain their transactions, right? And they will have to explain why they have bought something and therefore build trust with their consumers.
And so when you're talking to clients, Katarina, how are you advising business leaders to prepare for this agentic future?
So I think a few things. So one, of course, getting ready for this new way to discover, because, of course, many consumers are already using AI now for their shopping. So generative engine optimization is really a must-do. The second piece is piloting and trying now agentic commerce and trying out new ways how consumer can purchase. And I think that's not a wait-and-see moment. And also, the speed of innovation has been so mind-blowing in the last month. It's very important not to sit back and wait, but really try out. And I think the last thing I will say is also stress testing business models, because, of course, if consumers' journeys change so significantly, business models might have to adapt.
All right, Katarina, great to hear from you. Katarina Schumacher there, partner and tech expert at McKinsey. Happy holidays to you. Well, let's stay with tech, shall we? The former CEO of TikTok says that he's confident the US majority ownership plan for the social media and e-commerce platform will unfold seamlessly. Kevin Mayer also told Bloomberg it's a show of faith in Oracle, which is among the companies leading the joint venture.
I think it works operationally. I think having a company like Oracle, a very trusted company run by Larry Ellison, who's a trustworthy figure, obviously, being in the center, in charge of looking after and securing that U.S. data, that's crucial. And I think they're licensing the algorithm from China, so ByteDance will still own the code, but I do think this license will take another instance of the algorithm, all the code, put on Oracle servers, and then trained on the U.S. data that Oracle alone has access to. So I think it's going to end up having a vastly different feed and sort of content algorithm than you'll see around the world. So I think that will work. And I think that ByteDance will, is now below 20% ownership, 19.9% ownership. That's a substantial difference from status quo. And I do think that ByteDance has an operational role commercializing TikTok, selling ads, making sure e-commerce works and all the other commercialization factors. But really, it will be run by a U.S. board and it'd be a separate U.S. company.
Kevin,
it works.
It works, but the proof is in the pudding as to whether the algorithm is as powerful. How do you see, as someone who's in charge of content development and wanting to get your content out there in a marketing capacity, do you have confidence that it will be as good without ByteDance as heavily involved?
Well, I think it probably will be. There's a lot of intricacies and a lot of AI, that's the word of the day, in that code. And I think that code base being kept intact is crucial. I think had they tried to recreate a new algorithm from scratch because of security concerns, that would have been exceedingly difficult. That has taken years and years and thousands of engineers in China to develop this very sophisticated AI recommendation engine. So the fact that they'll have access to that, it will remain interoperable with all the other TikTok instances around the world. I think that matters quite a bit. And I think just retraining that same code base, that same algorithm with US data should provide a very robust solution. I think it will be seamless.
The former TikTok CEO Kevin Mayer speaking there. Let's finally, in our last few minutes together, focus back on what's happening in the markets this morning. You've got gold rising to an all-time high as the escalating political tensions, geopolitical tensions and bets on further US rate cuts have added to the momentum to the best annual performance in more than 4 decades. We could get analysis now with Ven Ram, cross-asset strategist for Bloomberg's Markets Live blog. And Ven, when you look at these moves in gold, I wonder how much they're about geopolitics. And if those tensions ebb, how much they're actually about bets on monetary easing?
Morning, Lizzie. I think that, there's a lot of speculation riding on gold. So it's hard to kind of unpack the moves and say this is stemming from Venezuela, this is coming from risk sentiment elsewhere. But I think on the whole, if you look at what's happening in the commodities complex, silver has run up huge this quarter and gold has trailed those gains by a considerable margin. Usually it's the other way around. Gold leads silver higher, but because of the supply squeeze in gold, I beg your pardon, in silver, gold has kind of followed in tow. And I think that momentum is going to continue into 2026 simply because the seasonality playing into it. In 17 of the past 20 years, gold has had a profitable first quarter, and that may continue because, of the Lunar New Year in China and wedding season in India, 2 of the biggest gold consumers in the world. So I think that, the market is kind of bulled up on the story that, gold will get to $5,000 an ounce, and at some point it becomes a self-fulfilling prophecy because traders start to look up and think, okay, 5,000 is the next target. So this is a bit about, speculation as much as it is about fundamentals.
And then we've got JGB yields up again this morning. I'm looking at the 10-year up 6 basis points, above 2% right now. Of course, we started with the Bank of Japan hike on Friday. You've got the yen continuing to weaken. Is this cycle of higher yields, weaker yen, rate hike bets going to continue in the coming weeks?
Yes, I think it is going to continue in the coming weeks simply because the Bank of Japan is behind the curve in terms of inflation control, and investors are sensing trouble here because on the one hand, Takaichi's government is pursuing fiscally expansionary policies. You've got monetary policy that is not as tight as it should be. So I think that the investors have moved on to embed a risk premium into the yen and JGBs, and that is what we are seeing. And there is, unless the government or the BOJ does something to quell those concerns, I think that risk premium is here to stay.
All right, Ven, cross-asset strategist for Bloomberg Markets Live, we thank you so much. Later on Bloomberg TV, the Federal Reserve Governor Stephen Miron will be speaking to Bloomberg. Don't miss that at 1:30 p.m. UK time. That does it for The Pulse. Up next, Bloomberg Brief. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have
an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. Oil higher as that geopolitical situation puts a floor under prices. Gold also hitting a record, and copper approaching $12,000 a ton. And U.S. Special Envoy Steve Witkoff says the U.S. and Ukraine held, quote, constructive talks in Florida. So let's take a look at those markets. It seems to be a risk-on liquidity wave as we approach the year end. Obviously, you had those massive gains Friday, helped, of course, by Micron coming out with earnings. We have futures pointed higher once again today. Now, we are going to flip into positive territory for the S&P 500. If we stay there, that'll mark 7 months of gains for the S&P 500. We're still lower on the month for the NASDAQ 100, but 2 nice days of gains, Thursday and Friday, about 2.8% in total, brings that loss to very close to neutral. So we might actually see that flip into positive territory today. And Russell 2000 futures also up 0.4%. Let's look at the bond universe because we've been seeing yields rise globally. Obviously, the Bank of Japan hiking has Japanese yields higher. In Australia, we have the 10-year yield up 50 basis points in the last month. And look at that 10-year yield up to 416 and change once again, up another basis point in the session today. The 230 spread, by the way, is at the highest since early 2021. Let's take a look at some metals as well because we're seeing really across the board gains here. Crude oil, obviously on the Venezuela story, up just a few cents. Gold above $4,400, and copper really trying to get to that $12,000 a ton mark. All right, it's time to look at some individual movers. Let's head over to London now and to Lizzie Burden. Lizzie.
Hey, Vonnie. Well, we start with Clearwater Analytics. They're up 7.3% almost in the pre-market. This on the news that Permira and Warburg are going to buy Clearwater for $8.4 billion. Next up, we turn over to the news that Datavault AI has announced issuance for 2 foundational US patents advancing their blockchain-driven content licensing and tokenized monetization. So Datavault here up 34% in the pre-market. And finally, the story on robo-taxis. Uber and Lyft teaming up with Baidu to start robo-taxi trials here in the UK. You've got Uber up 1.1% and Lyft up 0.7% in the pre-market, Bonnie.
Exciting stuff. Lizzie, thank you so much. That's Lizzie Burden there in London. And coming up this hour, we're going to speak to Sophie Hyun, portfolio manager and strategist at BNP Paribas Asset Management. So the US ramping up pressure then on Venezuela. The Coast Guard has intensified the oil blockade as it pursues a third tanker. The geopolitical situation driving oil and gold prices higher. Let's go to our team coverage now with Bloomberg's Kasia Klimaszinska and Alaric Nightingale. Thank you both for joining. Kasia, what is President Trump's ultimate goal here with Venezuela?
It's clear that as we head into the end of the year and the new year, Venezuela is the top focus for the Trump administration. President Trump has his top people, the Secretary of Defense, Pete Hegseth, and also his Homeland Security Secretary, Kristi Noem, focused on this objective. The Trump administration is saying that it wants the Maduro regime to stop supporting the flow of illegal drugs into the U.S. and stop collaborating with terrorists. So it's reaching to the oil market, as you mentioned. The U.S. is pursuing a third tanker after seizing two, trying to basically stop the flow of oil out of Venezuela and therefore depriving it of its main source of income, main source of foreign currency and cash.
Yeah, Alaric, can I come to you on that? Venezuelan oil is getting stranded at home for the most part. Can you put some numbers on this for us? How much does Venezuela produce? How much is getting out of the country right now?
Well, it's been severely curtailed. Normally, Venezuela's exports probably somewhere around about the 500,000 barrels a day mark, which is less than 1% of global supply and demand, but that's still an important number, and it's a number that maybe the market wasn't fully ready for when this campaign began.
Kasia, how far is President Trump willing to go here, and can Maduro withstand more vessels getting blockaded?
We might find out as soon as today. President Trump has an announcement on his schedule for 4:30 p.m. in Palm Beach in Florida, where he is for the holidays, and the Secretary of Defense, Pete Hegseth, will join him. We know that the U.S. has designated or sanctioned a lot of other tankers. Basically, it says that the oil flowing out of Venezuela is under sanctions and therefore should not flow to other countries. And President Trump also floated the possibility of some sort of land strikes. He hasn't given any details on those yet.
Alaric, it seems that some Venezuelan Navy ships did accompany at least one vessel, but then broke away as it approached international waters. What do we know about the Venezuelan Navy and what kind of capabilities it has to protect some of these vessels, should it be necessary?
It would be quite surprising if they truly did intervene in a way that broke this kind of... It's really a partial blockade because it's still possible for some oil, particularly Chevron's oil, to leave the country. But it would be very surprising if it had enough resources and enough will to truly block this blockade. Obviously, this ship is being pursued, but I don't think it ever went to load oil. It probably went towards Venezuela, turned around. So in many respects, the job has been done. They don't necessarily gain a lot from seizing an empty tanker that was going there anyway. So there is already a win for the US in having chased this tanker away and made it not go to Venezuela in the first place.
We're seeing a little bit of a premium in oil prices, about 1% or so today. Alaric, what is the worst case scenario that analysts are plotting out if Venezuelan oil was just off the market generally?
I don't think that people are super bullish about Venezuela because it is, you know, it's not meaningless. 0.5% of global supply is not meaningless. But at the same time, we're moving into a period of quite significant surplus. The market widely expects to be in a big global oversupply. Therefore, there is a bit of latitude for the US to do these kinds of things and maybe just turn the valve slightly tighter in terms of global supply. So if you really did lose a lot of Venezuelan supply, I'm not sure that you go super bullish just because of this. You know, the IEA, in a kind of a purely models-based assessment of supply and demand, expects there to be a surplus of about 4 million barrels a day next year. Now, that probably won't come to pass, but it's still going to be a big surplus, and so there's still a bit of room to manoeuvre.
Kasia, can I ask you what Congress thinks of all of this and if there's a possibility that Congress might make a move at some point?
Very good question. So lawmakers on both sides of the aisle called Pete Hegseth and Marco Rubio to testify, asking them to explain the situation. There have been voices of criticism saying that other attacks, the attacks that President Trump and his administration performed on boats carrying people, and according to the Trump administration, carrying drugs, that those attacks have been illegal. So lawmakers have been asking for briefings, and they did get some behind the closed doors, but it's unclear how much more they can do. The Trump administration is allowed to impose sanctions on, as it has imposed on PDVSA, the Venezuelan oil producer.
Can I come to you on some of the other metals rising? How much is that correlated with this oil price rising, or are they very, very separate stories right now?
I think there's probably a geopolitical aspect to it, but oil has its own supply-demand dynamics, and all of these markets have their own supply and demand dynamics. So from a geopolitical aspect, yes, everything is kind of interconnected, but as I say, every single one has its own sort of important drivers, and that's why oil, despite being the thing where the supply is more directly impacted, is up by less than some of these other commodities.
Yeah, for sure. Thanks to both of you for all of that context this morning. That is Bloomberg's Alaric Nightingale there, and of course, Kasia Klimaszinska in Washington. Turning to the Russia-Ukraine war now, U.S. Special Envoy Steve Witkoff saying the Trump administration held, quote, productive and constructive meetings with Ukrainian and European counterparts in Florida over the weekend. Joining us now for more is Bloomberg's Oliver Crook. We seem to be hearing this word constructive quite a bit. Ollie, what does it actually mean in this weekend's case, at least, that we know of?
Yeah, it's hard to tell what it actually means, Vani. I mean, we have this sort of attitude by the Ukrainians ever since that horrible meeting between Zelensky and Trump back in February that basically there are no bad ideas out of Washington, D.C., and that anything that the Trump administration tries to push forward, you basically need to say is constructive and is moving things forward. That being said, we can say that the Trump pressure that he's put on the Ukrainians, on the Russians, has borne some fruit. We have seen some areas willing to compromise, it seems, in ways that were not really talked about explicitly until really a couple of weeks and months ago, and I suspect most of the things that the Ukrainians and the Russians are willing to compromise on, they're not willing to talk about quite yet in a public display. So what we understand is the talks over the weekend were sort of held separately between the U.S. delegation, the Ukrainian delegation, the U.S. delegation, and the Russian delegation. We understood that the United States also put forward the possibility of a trilateral meeting between the emissaries of Ukraine, Russia, and the United States. Not clear that we're quite yet at that point, but that's sort of where things sort of stand ahead of, that Christmas deadline, I suspect, is one that we're not going to meet in terms of having that meaningful progress in trying to find the end of the war between Ukraine and Russia.
Yeah, and then in terms of funding, Oliver, Europe in the end decided to advance a loan to Ukraine as opposed to using frozen Russian assets. What kind of a message are analysts saying that that's sending?
Yeah, Vani, there's a lot of different dimensions to this 90 billion euro loan to Ukraine. And I think just the first one is basically that was necessary to keep the Ukrainian war effort afloat. Basically, Ukraine was going to run out of money in the first quarter. When I spoke to Zelensky just about 6 weeks ago, he said that getting that loan to the Ukrainians was a matter of survival for them, that basically the Ukrainians would be forced to surrender because they'd ran out of money by the first quarter. Now they have much longer runway, that 90 billion euros, 100 and some odd billion dollars, that will allow them to fund their military 2/3 of the way for next year and the year after. So from the standpoint of actually just continuing fighting, it's absolutely essential, but also the standpoint of being at the negotiating table and having any kind of leverage with the Russians, absolutely monumentally important. And in terms of the 90 billion euro loan itself, going from joint debt and backed by the European budget, not from the Russian asset, that was also of really great importance and was very interesting in terms of the sort of political intrigue between the Europeans, between Friedrich Merz and the German Chancellor going into that meeting, saying basically there is no plan B to taking the Russian assets, and by the end of the meeting basically signing up for joint debt at the European level to back this loan, a really monumental move. And I don't know that we would have got there if we had been talking about joint debt openly coming into that meeting, but after 18 hours of negotiation, that's where we landed.
Ollie, Putin has said that he would take steps in the courts, some jurisdictions somewhere, if Europe were to take some frozen Russian assets and give them to Ukraine for some reason or use them for reconstruction. I mean, is there a jurisdiction that would hear that internationally?
I mean, I think it's complicated to tell because, again, with all of this stuff, many of these things are being dealt with arbitrage in terms of third parties and some of the corporate issues that are trying to be worked out between companies who have stranded assets and all of those sorts of things. I think for the Russians, in the lead up to that European leaders meeting, what they wanted to do is make a lot of noise about the assets, make a lot of noise about the pain that they could bring down to the Europeans and the difficulties that they could put ahead for the Europeans. And depending on who you ask, they were pretty effective at making that happen. I mean, I spoke to the U.S. NATO secretary, the ambassador to NATO, a couple of weeks ago ahead of this. And really what he said is in terms to figure out what is actually hurting Russia, what is putting pressure on Russia, you find out how much they're complaining about something. Leading into that meeting, you heard them talking a lot about the Russian assets, the possible downside for the Europeans. And as close to as we get from sort of euphoric comments from the Russians, we got after that meeting when the Europeans decided not to take those assets. So we still think that that is a very sort of very present pain point potentially for the Russians. The Europeans did not have the risk appetite to seize it, but the only sort of silver lining to not moving on those assets on Friday means they're still on the table to potentially move on in months and potentially years to come in case the Europeans want to add additional pressure. And it would be helpful to get the backing from the United States, which we know didn't want the Europeans to take those assets.
Ollie, thank you so much. Bloomberg's Oliver Crook there for us. Now to other top stories trending on the terminal this morning. Japan's chief currency official sent a warning on recent foreign exchange moves after the yen weakened against the dollar. He told reporters Monday that they're seeing one-directional, sudden moves following Friday's Bank of Japan decision. Japanese government bonds fell amid speculation the BOJ may need to hike rates more aggressively to curb persistent yen weakness. A group of private equity firms led by Permira and Warburg Pincus has agreed to acquire Clearwater Analytics in a deal valuing the company at $8.4 billion, including debt. Clearwater investors would get $24.55 a share for an equity value of about $7 billion. The transaction is expected to close in the first half of 2026. And the Trump administration has defended the decision to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then later restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims. Coming up, we'll hear from the ASML CEO on concerns over an AI bubble and how the company is benefiting from the AI boom. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Here's Bloomberg Brief. I'm Bonnie Quinn in New York. ASML is Europe's most valuable company and one of the most important companies in the global AI supply chain. Bloomberg's Tom McKenzie sat down with CEO Christophe Fouquet in November for an exclusive interview on concerns over an AI bubble.
Well, you know, when people talk about AI bubble, I don't know exactly what they mean. And usually I say there's two ways to look at it. If you look at the industry, I don't think there is a bubble. So the impact of AI on the industry is just starting. And the impact on the industry will be positive for many, many years to come. So there is no bubble. I think that the value of AI, the industrial value of AI is extremely high. And this will be developing over time. There's no bubble because, like I say, we're just starting. Sometimes people talk about a bubble in reference to the stock market because we have seen some company getting extremely high valuation as a result of the excitement of AI. There, I think what you will see is more players coming over time. So initially, a few companies were, I would say, very much the only winner out of AI. Because of the demand, because the industrial demand will be so high, we need more players. And you will see more and more companies designing chips, designing AI product, manufacturing chips, et cetera, et cetera. And that could create, of course, some change on the stock market. But, you know, the two are a bit unrelated.
Because that commitment, $300 billion just this year alone from the hyperscalers, maybe $400 billion next year,
yeah,
that translates into real orders for your kit in the years ahead. You start to see that.
Over time. And sometimes, you know, the last few months I used to joke with some of our investors because they told us, well, you know, 200 billion here, 500 billion here. I say, well, I still don't have the equation to translate those orders into order for us. And it takes a bit of time. But you're right, over time, that demand translate into cheap demand to our customer.
Yeah.
This translates into a need for more capacity, and this translates into demand for ASML and our peers in the industry.
The infrastructure spend from the hyperscalers and the kind of deal making that OpenAI has done, almost $1 trillion worth of deals committed just by that one company alone, which isn't making a profit this year. That makes sense to you?
Well, I think the investment makes sense overall because you cannot play in AI without investing in hyperscaler. And there may be even a few cycles of investment because the investment today is done on certain chips. The chips in 2-3 years from now, if you look at NVIDIA announcement, they will be a lot more powerful. And people may be tempted again in 2027 to invest again in hyperscaler to make use of those chips. So you have different cycles, and you have a bit of a arms race because if you don't invest today, you're out.
ASML CEO Christophe Fouquet there in conversation with Bloomberg Tech Europe anchor Tom McKenzie. Coming up, one of Elon Musk's old enemies joins the race to run GM. That and a look at what else is making headlines in your front page news. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting one of Elon Musk's old enemies is joining the race to succeed Mary Barra as CEO of General Motors. Sterling Anderson is a 42-year-old robotics specialist who clashed with Musk at Tesla. He joined GM in June as its global product chief, and since then, the Journal says, he's expanded his influence, taking over units that develop AI and integrate software into GM vehicles. Next up, the New York Times looks at a story that was pulled last minute from CBS's Sunday episode of 60 Minutes. The Times says the correspondent for the piece is criticizing the network's decision, calling it political. The piece on Venezuelan men deported by the Trump administration to a prison in El Salvador was pulled 3 hours before broadcast. And finally, the Financial Times leading with exclusive reporting contending Binance allowed suspicious accounts to operate even after its 2023 US plea agreement. The FT says Binance, whose founder CZ was pardoned in October by President Trump, failed to stop hundreds of millions of dollars of cryptocurrency from flowing through suspicious accounts even after promising to improve its conduct in that landmark $4.3 billion US criminal settlement. All right, let's take a look at these markets as we head into Monday, the Monday of Christmas week. We're supposed to be seeing a Santa Claus rally, and indeed, there it is. Futures pointed higher once again today after 2 days of gains for U.S. indices. We're now flipping into positive territory for the S&P for the month, which would mark a 7th straight month of gains if it continues. The dollar is a little weaker today, way of strength in sterling after GDP data showed better business investment and a few other good pieces of news. Strength in the yen, too. That's after weakness, though, and verbal intervention. The 10-year yield up about a basis point. That's moved a few basis points in the last week. And take a look at commodities. We are higher across the board. Gold up 1.7%. We have crude higher on geopolitical tensions. And copper is determined to get to that $12,000 a ton mark. All right. Coming up, we're going to speak with Sophie Hyun of BNP Paribas Asset Management on the outlook for 2026. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana in Beirut, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. Oil higher as that geopolitical situation puts a floor under prices. Gold also hitting a record, and copper approaching $12,000 a ton. And U.S. Special Envoy Steve Witkoff says the U.S. and Ukraine held constructive talks in Florida. Let's take a look at those markets then. We have futures all pointed higher across the board in the United States after 2 days of gains, really egged on by Micron's earnings, but also it's just a risk-on week, and it is obviously a Santa Claus rally that we're seeing now. We've got lots of liquidity into year-end. The dip buying emerging once again. The S&P would flip into positive territory, assuming it holds today's gains, and that would mean a 7th month of gains for the S&P 500, and the Nasdaq 100 might even wipe out December's losses today if these gains continue. Now, let's look at yields because we are seeing them rise globally. Lots of different stories going on there. Germany talking about strength into next year. Japan obviously may need to hike again. But here in the United States, we're also seeing a movement, particularly around the 10-year mark. We're up another basis point today, but we've moved a few basis points in the last week. And that 230s curve is wide. It is steepening 135 basis points at the moment. Let's take a look at those commodities because, again, a powerful rally really across the board. You can see crude up maybe on geopolitical tensions, but gold, though, above $4,400 an ounce. Copper up another 0.5%, really nearing that $12,000 mark. And platinum has actually topped that 2,000 mark for the first time since 2008. Let's get to some individual movers now for some stocks to watch. Lizzie Burden is in London. Lizzie.
Hey, Vonnie. Well, we start off with Clearwater Analytics. The shares up more than 7.3% in the pre-market. This on the news that a group of private equity firms led by Permira and Warburg Pincus has agreed to acquire Clearwater in a deal valuing the investment and accounting software maker at $8.4 billion, and that including debt. Next up, we turn to DataVault, and the AI company's secured 2 US patents, strengthening its blockchain-based content licensing and tokenized monetization technologies. That stock also up 34% in the pre-market. And finally, we're watching Uber and Lyft. It's a UK story, this one. The two companies teaming up with Baidu to start robo-taxi trials here in the UK. Uber shares up 1.5% and Lyft almost 1%, Vonnie.
I'll try it if you do. Let's put it that way, Lizzie. Thank you so much. That is Lizzie Burden there in London. Sophie Hyun of BNP Paribas Asset Management says the rotation is underway. She writes this: the market is currently in a heavy stock picking mode. The real money community seems to have started to position in the rotation. Sophie Hyun is portfolio manager and strategist at BNP Paribas Asset Management, and she joins us now. Sophie, thank you so much. So what we're seeing right now, the Santa Claus rally, is it the typical rally that we see coming up to year end, Sophie? Is it dip buyers emerging? Because it does seem to be in that AI tech space again.
I think it's, so if you look at what's happening, I think what's going to be different from usual dip buying is the macro story is somewhat changing. So if we look into next year in most countries, so except for the UK or France, the fiscal policy is going to be either expansionary or supportive at a time where central banks are going to be either still on hold, but hopefully easing if there's a need to be. So in terms of like the first half of the year, we could likely have a growth pickup, which could be supportive for rotating from the AI themes into much more of the cyclical laggards. And I think for the past 3 months, that's what's been happening across the board.
Yeah, I mean, the tech capex boom's still promising more productivity, but how concerned do we need to be about the labor market, particularly given the figures that we got, which, you know, albeit maybe not the freshest or the most complete data, still show a labor market that is weakening in the US?
So if you look at it, the Fed is priced to cut like twice next year. But at the same time, if you look at, I think your story is about like the K-shape in the US. I think to some extent it's priced to perfection. If you look at consumer discretionary, equal weight versus consumer confidence, it's never been so low. So the dislocation in the US economy is well understood, and I think in the price already. But if you look out of the US, what could happen is a better growth outlook. If you look at PMI's data, if you look at the OECD leading indicator, in Asia, for example, you see signs of green shoots. In Europe, where the new orders to inventory is also showing signs of pickup. I think hyper-focusing on the US makes sense, and to some extent, has the K-shape become too consensual at a time where the fiscal impulse is going to be positive in the first quarter of next year? And when the rest of the world, if you look at Europe, but also Asia, in China, you could be expecting much more fiscal support. The story could be even more further rotation out of the US into next year.
How does the US dollar play into this story, Sophie, particularly for, you know, that rotation trade? If we continue to see the dollar weakening, will we?
So I think it's quite ironic, as in, like, if you remember last year, the dollar call was super, super bullish. Early this year, the dollar call basically flipped around. And I think if you look at consensus, so I've been through all the sell side outlooks, I think the dollar outlook remains a bit bearish, but I think there's a lack of conviction around that. But if you believe in the reflationary leg in the first quarter next year, if you think there's going to be the cyclical rotation ongoing, I think the dollar could trade more down than up. But I think there's going to be a lot of cherry picking there. So we still like the high beta currencies, such as the Australian dollar, the Swedish krona, where we think that the domestic story is also supportive. But overall, yeah, a bear dollar call.
Okay, so you're looking at, you know, the Norwegian krona, for example, as you said, the Australian dollar. What about yields? Will they continue to rise globally for obviously various reasons, but we're seeing them rise everywhere from Australia to Japan to the United States?
I think it's exactly the point. So I think what's quite, so if you update a common factor of G10 yield across each point of the curve, from the 1 year to the 10-year forward, you basically see that the common factor is basically picking up. So I think the reflation and the cyclical rotation story I was talking about is somewhat starting to be priced. I mean, in Australia, the market is expecting already hikes next year, same for New Zealand and to Canada. But I think one thing that the market doesn't really take into account is if you have yield rising and if you have this reflation trade coming up, then what about inflation? For now, it's been really muted because of China exporting deflation, because the tariff have been less worse than expected. But if you believe in a reflation into next year, the surprise could come on the inflation front. I think to some extent that's why commodities have been working well. That's what you've been highlighting earlier today, or basic resources equities. And to some extent, I don't think it's fully priced if you look at the price action of oil equities.
Sophie, what do you do going into the new year if you've, taken some profit, for example, on the AI trade, and you're talking about various points of contention next year, whether it's the Fed perhaps cutting twice, but we don't really know because we don't know who the next Fed chair might be, the Bank of Japan perhaps hiking more. Where would you put some money just for safety reasons?
So I think you need to have a bubble, as in I think the AI story is still going to be there. I think there's going to be much more on focus on hardware versus software. So we're still along the semis, we're still on Korea. But at the same time, in terms of trying to gear to the right tail risk of this cyclical recovery, which is the other side of the bubble, I think being long oil equities, basic resources, being long the high beta currencies, I think makes sense, having this bubble portfolio as you head into next year.
And is gold still part of that next year, Sophie? I mean, we're at $4,400 now. Can that continue to rise?
I think you have structural support for gold. So I think it's well known. If the dollar weakens, gold is going to be supportive. You have central banks buying, but you also have, Tether buying, which has been buying as much as central banks. So you have structural forces are still going to be there. It's going to act as a support for gold prices. But I think to some extent, if you think that yields are going to continue rising and there could be, some contagion from JGBs, probably, I think gold remains this duration replacement you want to hold in portfolios.
All right, Sophie, thank you so much for that outlook into 2026. That is Sophie Hyun of BNP Paribas Asset Management. Now to other top stories trending on the terminal this morning. President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime risks creating a major administrative problem. Speaking on CBS's Face the Nation, Kevin Hassett said the challenges of refunding the levies should deter the court from ruling that way. Hassett is a top contender to succeed Jerome Powell as Fed Reserve Chair. The Trump administration is defending the decision to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then later restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims. And China hits EU dairy imports with hefty duties. Beijing says it will impose tariffs of up to 43% on some dairy imports from the European Union, following an anti-subsidy probe. China launched an investigation focusing on fresh and processed cheese in August of last year. Brussels later challenged the probe by requesting consultations via the World Trade Organization. Coming up, the U.S. ramps up pressure on Venezuela as the Coast Guard pursues a third oil tanker off its coast. Details next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field.
Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badant.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Oil rising on escalating geopolitical tensions between Venezuela and the United States. Joining us now for more is Bloomberg's Alaric Nightingale. So Alaric, there's definitely obviously a pop in oil. We're just seeing about a 1% move at the moment. How much does Venezuela contribute to global supply?
Well, Venezuela is a relatively small supplier to the global market. It's probably around about 500,000 barrels a day, give or take. But 500,000 barrels a day, that's 1% of, or less than 1% of global supply. But it's not nothing in a market that's pretty marginal. If you were to have that as a shortage, everybody would be very alarmed about it. At the moment, though, the market is in a big surplus, and I think that's why we haven't seen more of a pop in oil.
How much pressure is this currently putting on Venezuela's economy? Is it getting any oil out there? Is it getting any currency for itself?
That's a great question. I think that the shipments are extremely limited. Chevron is still in there. It's able to operate normally, it says. So there is a little bit of oil eking out. The sanctions are on, the blockade is on vessels that are sanctioned, and that appears to be causing a very significant disruption to exports. So the vast majority seems to be held up, and as we've seen, there have now been 3 vessels that have been either seized or pursued.
Yeah, Alaric, this would have come out of the blue to a certain extent to Venezuela. Is it able to get other ships out there? Who is it selling its oil to at the moment?
Well, there's very little Venezuelan oil moving. I think just maybe one cargo or 2 cargoes. So it's really the problem is that the oil is starting to back up in Venezuela. They're having to kind of put it in storage sites and so forth. Venezuela's got a huge problem if it doesn't find a way out of this, and it's a very hard thing to get out of because what merchant ship wants us to go to a place where it's going to get seized, potentially boarded by military people. So it's a real challenge for Venezuela.
In previous times, was Venezuela exporting a lot of oil in terms of vessels, for example? Would it have been sending vessels out every day?
Yeah, absolutely. Venezuela is entirely reliant on, almost entirely reliant on seaborne exports of its crude. They go all around the world, large amounts going to China, actually a large amount going to the US. So it's entirely reliant, and shipping it every day, or maybe sometimes missing a day, but essentially daily shipments, and that's being hugely stopped. And while that happens, what do you do with the oil? You start to put it in storage, and the storage starts to fill up.
Yeah, and that's what we're seeing. Alaric, thank you so much for the context. That's Bloomberg's Alaric Nightingale there. For more on this pressure on Venezuela, now let's bring in Bloomberg's Kasia Klimashinska. So Kasia, what is the ultimate goal here for President Trump? This is the 3rd vessel that is getting blockaded now. Vessels have stopped moving, basically, from Venezuela. What will next happen?
President Trump has been very clear since he basically became the president. Again, he has consistently been increasing pressure on Venezuela, first by targeting boats that he said were carrying drugs into the U.S., then imposing this blockade on crude oil tankers coming in and out of Venezuela, and now basically implementing it. So the U.S. has seized 2 tankers, and now it's going after this third one. The objective here is to stop the flow of crude oil out of Venezuela and therefore cutting any flow of cash to the country and putting pressure on the Maduro regime. It does appear to be very successful, as Alaric has mentioned. No vessel would want to come anywhere near the Venezuela waters, and so most likely the country will struggle to sell its oil. It may have to even stop producing because it will not have any place to put it.
How far is the administration willing to go? And I say the administration because this is not the U.S., right? Congress has not really had a say in this.
Very good question. So President Trump has an event today. He has left Washington, D.C. He's in Florida for the holidays, but he will have an event at 4:30 p.m. today with the Secretary of Defense, Pete Hegseth, and the Secretary of Navy. So we might learn more, but we know that Trump has made more threats in the past. He has floated land attacks, but they may not be needed because this crude oil blockade might be very successful. What the regime needs is money, is cash to flow its operations. If it doesn't get the foreign exchange, it will most likely see its currency plummeting and possibly social unrest.
Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska. Coming up, we're going to set you up for this Monday trading session. This is Bloomberg.
Coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
On a visual.
And the analysis you need.
China's not going anywhere, nor are we.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's now take a look at the state of the consumer and what's ahead for the global luxury industry. According to Bloomberg Intelligence, the luxury goods market could return to 4 to 5% revenue growth next year after 2 disappointing years. Joining us now with the latest is Deborah Aitken from Bloomberg Intelligence. So Deborah, tell us about the growth drivers for the luxury goods sector and why we expect them to improve next year.
Hi, so we're thinking about 2 years where we've seen really no growth in the marketplace and a lot of change, huge amounts of investment, and the different mindset of the consumer, but also of management. So we're looking at 4 to 5%, key drivers being pricing coming or being more muted. We're expecting maybe 2 to 3% pricing, which means that a lot of the tariff input charges and also the inflationary costs are bedded in now for this year as we head into 2026. And also that the companies have been very astute in amending product and content so that some of the entry points are lower, as well as some prices having come down somewhat. So we start on a cleaner footing for 2026. There will be some pricing from tariffs in the first half, but a lot of it is already in spring/summer 26 in terms of the ticket price.
What about China sales, Deborah, and also travel retail? That had been suffering quite substantially.
Yes, so China actually, we're looking at 4 to 6% growth for 2026. That's against big double-digit negatives again in 24, and then not even making parity in 2025. We're heading towards 7 of our 10 companies at the Q3 in earnings result came through with top-line revenue growth, 7 of the 10 biggest makers. So we saw, for example, Q3, LVMH moved from negative to positive, Hermes from neutral to positive, Richemont negative to positive, positive Prada, 4 quarters of growth in Moncler. So that's all feeding in, and we think that if we can start with some level of improvement, but that would be slight, that we could get to 6% growth for the full year in China. But again, that's on a lot of investment, which hasn't slowed down in the last couple of years to try to make that work this year in China.
Well,
and travel retail.
Yeah.
Travel retail. So actually, if we look on a global basis at the 9-month, we're at 4.6% growth. And in Asia, we're at 8%. But we hadn't seen so far much movement in long haul. And a survey from BI in October shows that there's a 15% uptick in the next 3 months of an expectation of the Chinese traveller to move to Europe, which would be very positive news for the European makers of luxury goods, where a lot of their flagships plus smaller stores are held. That could be very positive.
Looking forward to seeing the results next year and to monitoring your reports as we go through 2026. Bloomberg Intelligence's Deborah Aitken, thank you so much. Now, let's take a look at what's ahead this week. Tune in to our interview with Fed Governor Stephen Myron this morning. That's at 8:30 a.m. New York time. Then we get the second reading of third quarter GDP tomorrow, Tuesday. And of course, markets close early on Wednesday. It is Christmas Eve. Let's take a look at some of those movers now, pre-market on this Monday session. Permira Warburg obviously buying Clearwater Analytics for $8.4 billion. And you can see that stock is up about 7.5% on the back of that news, roundabout where the cash part of the offer is trading. Datavault up more than 40% pre-market. It announces the issuance of 2 foundational US patents advancing blockchain-driven content, apparently, and licensing tokenized monetization. We'll see what happens with that stock at the open and after the open. Uber up 1.6%. Uber and Lyft teaming up with Baidu to start robo-taxi trials in the United Kingdom. Let's take a look at the macro picture now, because we have futures pointed higher in the United States after that nice ending to last week. Remember those 2 days of gains? How could you forget? Those companies that were moving higher, the Mag 7 and so on, they're higher in the pre-market. And then we're seeing huge movement in some commodities. Crude up 1.6%, but copper headed for that $12,000 a ton mark. Stick with us. Surveillance is next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
The equity market story has become more attractive for a lot of places.
We're forecasting 14% EPS growth for the S&P next year, followed by another 13% in 2027.
While everything is very strong right now, I think the risk is, does something happen in 2026 that gives the market pause?
Maybe the volatility is normal as we get higher and higher at market altitudes.
I think the areas of the market that led this bull market over the first 3 years may very well not be the areas that lead this bull market over its next 3 years.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning and welcome to Bloomberg Surveillance, live from New York City. I am Anne-Marie Hordern alongside David Gura this morning. Jonathan is still on paternity leave and Lisa has the week off. It's normally supposed to be a very quiet week. Of course, this is the second to last week of the year. And with little data, many starting their holidays early, it should be quiet, but the market squarely focused on geopolitical risk this morning as the U.S. intensifies an oil blockade against Venezuela, as well as investors debating the Fed's next move as we head into 2026 with some distorted data and changes at the top of the central bank. David, good morning. Thank you so much for not leaving me alone on this very quiet week. It normally would be quiet, but a lot of catalysts right now pointing to geopolitical issues.
Yeah, I think the confusion in South America continues to loom large here. So we had the U.S. going after 2 other ships over the course of this weekend. The question still looms here, what is the end game for the administration going forward here? You look at Venezuela, the amount of oil that it has been producing isn't significant in a kind of global context. But again, I think that there's this kind of looming large here, this specter of what does this mean? What is the Trump administration going to do going forward here? And that's kind of coloring a lot of what we're looking forward to this week.
And we might actually get an update on potentially what their plans are in Latin America today. At 4:30 p.m., the president is set to make an announcement with Pete Hegseth, Secretary of War, and the Secretary of the Navy. On top of all this, Wall Street Journal had some reporting over the weekend about how the Fed race is shaping up. A lot of people seem to be calling on behalf of individuals into the White House, and the president hasn't made his decision yet. And this week reports that he is going to be, or next week rather, he's going to be in Mar-a-Lago for about 2 weeks' time in Palm Beach. He's going to be interviewing Rick Reeder, so potentially a dark horse candidate.
Taking his sweet time here, as he's wont to do. I think it was last week he was talking about his affection for the 2 Kevins. Once again, we thought it was going to be Warsh or Haslund, the front runners for this. Introducing Rick Reeder is another here going forward. Look, the interviews continue, apparently. I think that's a surprise to a lot of people who thought that at least he'd come close to or had made up his decision thus far. But he has promised, if I'm not mistaken, based on what I heard last time, by the beginning of next year, we're going to get something.
Hopefully by the beginning of 2026. And maybe Stephen Myron, Governor Myron, will weigh in on that. He'll be joining us in the 8 o'clock hour. Let's take a look at where markets are trading this morning. Equity futures are pointing to a higher start this morning. We do have the S&P 500 actually flipping to now having be positive for the month. But the real action this morning, of course, is in commodities. Gold, silver, copper, all hitting fresh records. There you have gold at a fresh record. And New York crude as well this morning, up 1.7%. WTI, of course, this as David and I were just discussing about what is going on with Venezuela as the U.S. administration is continuing and intensifying that blockade. Coming up on the program, Marvin Lowe of State Street with stocks looking for third day of gains. Former House Financial Services Committee Chair Patrick McHenry as U.S. ramps up the Venezuela blockade. And Abigail Watt of UBS on when we may see the Fed's next rate move. We are now joined by Marvin Lowe. Marvin, thank you so much for joining us this morning. You talk about while the low-hanging fruit of the capital investment are falling, U.S. rates has largely been priced and picked. There is some vegetation on the tree that should continue to support risk-taking. Talk us through this vegetation.
Yeah, I mean, ultimately, when we think about what investors absorbed this year, it certainly is one where investors are willing to look through some of the noise. And, not to say that geopolitics are noise, but, generally speaking from a market perspective, asset values incorporate that uncertainty quite quickly. Is there anything that I see in the horizon that really kind of changes that positive ultimate environment? And we still have a world where we're talking about lower rates from the Fed, maybe not necessarily around the world. That's incredibly supportive, and the capital spend associated with what has been the driver for a lot of these equity values are still out there.
We didn't touch on the 10-year yield debt. It's up 2 basis points this morning. Yeah. This is, of course, coming across what's happening in Japan. JGP's up 6 basis points. We still see Japanese yields rising. Is that a risk to the U.S. story?
It is, ultimately. My view is that the Bank of Japan has the ability to cap that ultimately if they provide the market with some substance in terms of how high they're going to go and what they need to do to control inflation. But until then, that uncertainty definitely pulls up U.S. yields, definitely pulls up global yields. And from the perspective of what a lot of these economies want, which is lower long yields, kind of given how important that long yield is to overall economic development, it's not a great thing. But we're also not at levels that create a massive amount of concern yet.
I'll stick with your vegetation metaphor and ask you about sort of the ripeness of some of what's on the tree here. Yeah. So the story here over the last few weeks has been about AI, concerns over capital spending. I'm curious sort of where you think we are in that narrative. So looking ahead to 2026, have we turned a page in any sort of way? How much is that going to color the way that you're looking at the market?
So I think there are 2 things to think through here. One is just the AI process itself, and I think we're still in early innings there. There was a wonderful story in the Wall Street Journal about a vending machine and how AI was ultimately given the ability to figure out what to sell and what to buy, and it didn't work. So we're still, quite early in the process of it being integrated into our daily life. So from an investment perspective, that is still, I think, a thesis that's out there. When we talk about the hyperscalers and the amount of investment needed to kind of get that into the economy, if you will, there are winners and losers that people are picking right now, and I think that's healthy. Just to say that I'm going to buy anything at whatever cost is where you wind up in trouble in financial markets. So the fact that we're starting to rationalize our capital is a good part of this evolutionary process.
How are you thinking about that rationalization? So what are you looking for as you kind of, it doesn't have to be the hyperscalers, but other kind of ancillary companies to AI? What are you looking at, or what's giving you the most pause as you look at their kind of outlooks for growth?
I think you touched on it correctly. It is the capital side of things. It is the amount of debt that's out there. And it is the fact that the amount of capital and debt available is not unlimited. And we know that. And it does show, to a certain degree, a maturation of where we are in the cycle. So if in fact these large deals can get done and they cost more, it's probably coming from somewhere else. So let's think through kind of these knock-on effects. Think about what parts of the market might be more effective, and it might not necessarily be AI, right? It's a capital pool that finds an efficient investment. If it's all going to one place, that means that there's some rationalization elsewhere.
Marvin, how do you think about the Fed next year? Money markets pricing in 2 cuts. Think that's too much?
I personally, I do, but I think it's too much by 1, if you will. So in the grand scheme of how big this economy is, 1 rate cut here or there doesn't really make a difference. And really the fact that we haven't seen much movement in yields around this kind of 1 versus 2 type of discussion means that, it's somewhat irrelevant. What winds up happening is that when you think about the reaction function, it's still to lower yields, which is ultimately supportive. We're not talking about higher yields. That asymmetry associated with kind of that decision tree is supportive for risk assets ultimately.
You had Williams on Friday talking about distorted data. Yeah. Beth Hammack, who is going to get a vote this year, to the Wall Street Journal, was talking about the fact that she is still concerned about inflation. What do you make of the underlying inflation data we got? Do you think it was distorted because of the collection issues we had with the government shutdown? Yeah,
I mean, it was going to be a wonky number no matter what. We didn't have collection throughout the month of October. We were quite short in terms of our surveys in November. And the amount of estimates that the BLS needed to make was one where it really calls into question what you could do with it. The market didn't react to it. So the market looked through it. We've got a lot of data between now and the next Fed meeting, and that's going to really provide much better guidance on where the economy is going.
How much confidence do you have about your understanding of sort of how much inflation is out there at this point? So Stephen Myron's going to come on later. One of his big criticisms is it's not just backward looking, it's too backward looking. We don't have a firm grasp of sort of what the inflation picture looks like. How about you? How much are we fumbling through this right now?
You know what? There have been a lot of concerns with just the collection process for years. The response rate has been going down since the pandemic, not only in the U.S., but ultimately globally. We've got a lot of alt data out there also to kind of support it. So I think we get a decent picture. And all of us are living through, our anecdotal evidence, if you will, just kind of walking around New York, going to the supermarket. That all provides us with insight. So I think we will get a good picture of where ultimately inflation is. It might take a little bit longer for the official data to get there. And then we can calibrate in our minds what policy is supposed to be. And that's where the Fed discussion becomes really, really important. If the Hammocks of the world are correct and they say that we should wait to see this inflation evolve, and in fact we're on this kind of hold period at least for the next couple of quarters, you can have some comfort that the Fed is doing the right thing from that perspective. If there's a push, really to cut rates, even with the data that's pushing against it, that's when we wind up with kind of concerns.
Moving from policy to personnel, talking about Rick Rieder, the 2 Kevins. Yeah. How are you watching all of this unfold? How much does it matter? You've seen that short list, and there is so much in that Venn diagram that these candidates share, these finalists share. Yeah. How much will it matter who he picks in the end?
You know what? I'm not that concerned with it. I think that we're looking at qualified candidates. Certainly the administration has a view of where it thinks rates should be, and those candidates embrace that. But we've got the Federal Reserve Act, which has lasted decades in terms of really creating a structure that's supposed to be able to keep the Fed immune from political, if you will, interference into the process. I think that that's still out there. Hammack and really the Schmitz of the world being vocal is part of that process. And so long as we have that structure out there, I think that the independence aspect of the Fed becomes something that investors are still comfortable with.
Marvin, thanks so much for your time this morning. Marvin Lowe of State Street, and happy holidays to you. Let's get an update on some other stories we're watching this morning. Here's your Bloomberg Brief with Yahira Anand. Hi, Yahira.
Hi, Anne-Marie. A senior Russian general was killed after a bomb exploded in his car in Moscow, an investigative committee reporting in a Telegram statement. The lieutenant general was killed when the device planted under his car detonated early this morning. Russian investigators say the involvement of Ukrainian special services in the killing was one potential theory being examined. Ukraine has not commented. Meanwhile, President Trump's top economic advisor says the Supreme Court ruling against the administration's tariffs regime would create a major administrative problem. Judges are currently weighing a legal challenge to the tariffs Trump has imposed on dozens of nations. Kevin Hassett says the challenges of refunding the levies should deter the court from ruling in that way. And Blue Origin made its 16th human spaceflight over the weekend. The 6-person crew included the first wheelchair user to reach space and one of SpaceX's first engineers. The 10-minute space flight took the crew just above the Kármán line, a recognized location between Earth's atmosphere and outer space that sits about 62 miles above sea level. That's your Bloomberg Brief, Emery.
Thanks so much, Yahira. And Yahira will be back with more in about 30 minutes' time. Coming up next, putting pressure on Venezuela.
I did see that this is another ship that was basically operating in the black market, and so there's been a little bit of black market activity in the oil sector to go to sanctioned countries and to get them some oil.
Up next, former House Services Committee Chair Patrick McHenry. You're watching Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning and welcome to Bloomberg Surveillance. I'm Anne Ruherder and alongside David Gura this morning. Let's take a look at what's going on in financial markets. You'd have equity futures pointing to a higher start at the open. Potentially investors are excited about a Santa Claus rally. This is the final full trading week of the year because we do have Friday trading. And it's the second week to the end of the year. So we're wrapping up 2025. All the space this morning, though, is going on in the commodity sector. You have the intensification of what's going on in Latin America with Venezuela, which is what's pushing crude prices higher, and also this flight to safety when it comes to gold, copper, silver. That has to do a lot about how the market views what the Fed's next move is going to be, but also as well, David, this geopolitical risk.
Nuances to all of this, all three of these precious metals, but gold really stands out after just the run it's been on this year. Yes, that's a startling move today, but up 70% this year, thereabouts. Again, that flight to safety, but again, a kind of generalized fear here of sort of what's going on in the world. We've been talking about Venezuela, we'll talk about Ukraine, I'm sure, in a few minutes as well. Still overarching a lot of the moves that we've seen in the markets
Right,
today.
and the Trump administration might feel like this is a moment where they have that flexibility because the market, if you look at what the IEA says about at least the oil market going into next year, there's a glut of 4 million barrels a day. So they might view this as the most opportune time to put that pressure on Venezuela. And under surveillance this morning, putting the pressure on Venezuela, it's mounting.
I did see that this is another ship that was basically operating in the black market, and so there's been a little bit of black market activity in the oil sector to go to sanctioned countries and to get them some oil, and they're getting that oil in order to avoid, the reforms that we think would make the countries a better place. And so it's not a lot of oil compared to world supply, and so I don't think that people need to be worried here in the U.S. that the prices are going to go up because of these seizures of these ships.
Here's the latest. The Trump administration intensifying its blockade against Venezuela, the Coast Guard targeting and pursuing a third sanctioned oil tanker off the country's coast. Joining us to discuss is Patrick McHenry, former chair of the House Financial Services Committee and a Bloomberg contributor. Thank you so much for joining us, Patrick. Really great to have you on this week. I'd love to ask you how you think your former colleagues in Congress view what the administration is doing when it comes to Latin America.
Well, the first question here is, what does it do to prices? That's the most pertinent political issue here domestically, number one. Number two, we've had rogue regimes to our south for decades that have bucked U.S. administrations. So in many respects, with the Trump administration saying they're pulling back from the world, there is still an expression and need for American politicians to show strength, that our military might does matter, it can be effective, and this is one expression. And it does have wider support among Republicans and Democrats on Capitol Hill than is currently being expressed.
When it comes to price, Venezuela is at present not as important to the oil market, say it was pre-Hugo Chavez era. It's less than 1% of global supply. But at the same time, do you think that is the reason why the administration feels like they can intensify this pressure on Maduro?
No, this is a decade in the making, frankly, and Venezuela and Cuba are inextricably linked. One funds the other, and they each prop each other up. And so this is viewed by, I think you would see Marco Rubio and his State Department group look at this as long-needed work and necessary work right in our own backyard.
I'm going to pick up on something that Anne-Marie asked you, which is sort of about the broader South America strategy here, because I think that's something a lot of Americans probably haven't figured out or thought a lot about yet. So we saw the U.S.'s commitment to Argentina earlier this year. We've seen the U.S. embracing Bolivia, another country in South America that the U.S. had kind of shunned for several recent years because it had a leftist leader in place. Do you have a holistic understanding of what the U.S. is trying to do here, not just in Venezuela, but in the region overall? You talk about these rogue regimes, sort of what the plan is going forward.
It's popular in connection with our closest neighbors and biggest trading allies. This is always complicated when we're talking about foreign affairs with the Trump administration. What does it mean? What are the layers to it, and so on? But what we've generally seen is this administration wanted more Central and South America to us economically and militarily. That is a different approach than we've seen in decades in Washington. But longstanding since the Monroe Doctrine, that we want to understand our neighbors and be their greatest strength and ally, and long neglected in recent decades. So it is it's an expression of a longer term American strategy of mooring our neighbors to us.
I imagine you have many former colleagues in the House who are eager for the president to talk more about domestic issues. He did deliver that speech last week where he talked about affordability. He seems to have come around or been pushed to come around to talking about it more. What does that message need to sound like to your ears going into 2026 to kind of reclaim the narrative here going forward about this administration's efforts when it comes to sort of righting the economy in the country?
So Joe Biden tried the don't believe your lying eyes message to the American people. What you feel is not really legitimate. That's not a good response from any politician, much less the President of the United States. So President Trump should not try to recreate that failed message, number one. Number two, he should acknowledge the reality, which is prices are higher now, and that is putting a pinch on the American people. And when prices outstrip wage increases, the rising prices outstrip wage increases, the American people feel terrible. And so he's got to acknowledge that and then forcefully land the administration's policies and communicate on landing those policies. We still have tariffs unresolved and trading agreements unresolved. We still have the new tax cut to be implemented in the coming year and regulatory relief. There's a lot that the president could talk about and needs to talk about of administration successes. But to tell the American people don't trust what they think they're experiencing isn't going to be a good winning message.
A lot to talk about, indeed, a lot to tout. And I was struck on the show last week talking to a lot of folks from Wall Street who said, look, this is a year in which, in light of what you've just mentioned, the benefits of this tax and spending bill coming into effect, there are things that could be quite advantageous for a lot of Americans, and yet we haven't heard a whole lot from the White House. In terms of what they should be prioritizing, in terms of what they should be communicating to the American people, what has the most promise as you see it? Where should the White House be leaning in?
No, look, President Trump's political strength is his view of, his economic strength. Sorry. His capacity in the first term to turn the whole administration on renewing and reviving the economy became his strongest political attribute. And that brought him back to the White House. The fact that he fixed the economy and make people feel better and get people on the right track. So he's got to forcefully communicate all of the things that they've done to make life better for the average American. And they've done a ton. But so much of that has to be realized so the economic indicators start going in a positive direction for the average American and how families live. And he's got to talk about that on a repeated basis in a sustained way.
A dozen or so House lawmakers have already announced that they will not run for re-election, the latest being Elise Stefanik, who also decided she's not going to go for the New York governor's race. How challenging do you think this is going to be for Republican leadership in the House?
Well, the loss of Representative Stefanik is devastating. I mean, she's a highly talented, young, dynamic elected official. Huge opportunity in her future. And for her to say she's stepping aside from politics is devastating for Republicans, for sure. And that is the one announcement that's made me quite sad this year. But she's got a long life ahead, and I think we'll come back to politics at some point. The announcements of retirements from the House show that the House has not gotten done as much as they wanted to get done this year. Longest government shutdown, everything was jammed into one big, beautiful bill. Not much else got done legislatively. This is a bad sign about the workplace environment on Capitol Hill and how the electeds view it. And the final piece is what Republicans view as their opportunity to maintain control of the U.S. House next Congress. Those are the facts. We've got a year 11 months before the next election. So a lot can change in that time. But at this end of year and going into the Christmas season, not a great time for House Republicans. And a bad time as politicians are reassessing whether or not to run again.
Patrick, thanks so much for your time. Merry Christmas to you. That's, of course, the former House Financial Services Committee Chairman, Patrick McHenry. I love how he ended that there.
Workplace culture.
Yeah, it sounds like a lot of disgruntled employees right now in the House.
Yeah, absolutely. And then you've got Mike Johnson, whose tenure as Speaker has kind of been thrust into this kind of concerning light. Of course, a huge part of his job is identifying candidates to run in these races going forward.
And how difficult is it going to be for this White House to work with potentially a Democratic House and potentially a Democratic Senate?
I cannot imagine there's much eagerness.
There was a Washington Post piece this weekend about the Secretary of the Treasury and how he really goes after these individuals on Twitter and is a bit more bombastic than some of the others in the past. He might actually have to start working with some of those individuals.
Best of the Warren Twitter fight.
Yes.
Yes.
All right, coming up, more on the program next. We're going to head over to Europe. Oliver Crook joins us on what is going on in Russia.
have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Good morning. Welcome to Bloomberg Surveillance, 6:30 a.m. here in New York. I'm Amber Herdern alongside David Gura. Let's check in on where markets are trading this morning. Normally it's supposed to be a quiet week. You do see equity futures higher going into the open this morning, potentially getting that Santa Claus rally. All the action, though, and I say it's supposed to be a quiet week, but a lot of action is happening across the commodity space. One, there is this flight to safety, things like gold, silver, copper, all higher. Some of them hitting records. You see gold there, $4,408 an ounce, up 1.6%. Silver this morning, up nearly 3%. There's geopolitical risk and also what the market is pricing in next year when it comes to the Federal Reserve. And then, of course, we have what is going on in Japan and how that's impacting global sovereign debt. You have the 10-year higher in Japan. JGP's up 6 basis points. Potentially, traders are trying to digest still what happened on Friday when Japan hiked interest rates. What does this mean, though, for the U.S. yield curve? It is higher as well. We have the 10-year up in the United States, up about 2 basis points, 4.16%. Let's get you a check on some individual movers this morning. Danny Berger joins us for more. Hey, Danny.
Hey, Anne-Marie. Tesla shares are higher by just over 1% this morning. The Delaware Supreme Court over the weekend overturning a ruling from the Delaware Chancery Court, that is the lower court, that overruled Elon Musk's pay package back in 2018. That was a 2024 decision. Well, now that that has been overruled, Elon Musk is finally going to get the big package. 300 million options is about what's in store for him. That's equivalent to just under $140 billion of a payout. So good news for Musk. Shareholders like it. Maybe keeps Musk happy and him on board. So those shares moving higher. Also on the move this morning, Clearwater Analytics, those shares up 8.1%. It is a take private coming for this fintech company from Primera and Warburg Pincus. The price on it is about 10% higher than the close on Friday. So the premium just starting to creep up there. We're up about 8.1%. The price tag on that deal, $8.4 billion. Finally, rounding things out with some of the rideshare apps, it's the competition for taxis and driverless taxis. Uber and Lyft are going to be teaming up with Baidu, the Chinese company, on offering up driverless taxis in the UK. They're going to start testing them in London in the first half of 2026, and they hope that they'll be commercially available by the end of the year. So Uber up as much as 1.7%, Anne-Marie.
And Danny, you're in London, so potentially you're going to be testing those out for us. Let's get you an update on what we're under radar this morning. Gold and silver, as we've been mentioning, climbing to fresh record highs as traders add to bets on further Fed rate cuts. Investors also watching the escalating geopolitical tensions in Venezuela and between Russia and Ukraine that are contributing to this rally. Elsewhere, the NEC director, Kevin Hassett, expressing concern over the Supreme Court's upcoming ruling over President Trump's tariff policy. Hassett saying a ruling that overturns the tariffs would create a major administrative problem for refunding the countries affected. David, I'm not sure if you caught, he was on a few Sunday shows this weekend. I thought the most interesting, though, was on Face the Nation. He couldn't really answer directly where the tariff refunds would be going. Is it countries or is it companies that then potentially would impact U.S. consumers?
Yeah, I'm stuck on that phrase, administrative problem, because it's one you'd think that they would have had to think through at this point already. Yes, they filed all these briefs and argued before the Supreme Court, but this would be really seismic were this to happen. And so the fact that they're kind of still figuring out this very granular level what would happen, I think, is significant here. We expect that decision could be as soon as in the coming weeks. And again, it would have a massive impact here, not just on the president's tariffs policy, but on the economy overall as to try and figure this out going forward.
And also, if IEEPA is struck down, they're going to go about tariff policy just using other avenues.
Another administrative policy.
Yes, but it'll just take so much longer. And then what impact does that have to how companies decide to digest the new potential policies where the rates may settle and what should or should not be passed on to consumers?
I think, it speaks to the fact that there is this kind of level of complacency, I think, among many countries and companies now. They feel like they've kind of ridden this out. They understand what the tariff rates are going forward here. But as you rightly point out, were this to happen, I think we're kind of entering a new phase of this conversation, a new phase of this tariffs war, this trade war. And it's going to have, again, profound impact on not just countries themselves, but companies as well who feel like they've kind of figured this out.
Yeah, I don't know how many times I've heard in the past few months we are past peak tariff uncertainty. Well, potentially might come bite us again in 2026. Also on our radar this morning, the U.S. holding talks with Ukraine and European officials. U.S. envoy Steve Witkoff described as productive and constructive. Leaders discussing the current 20-point peace plan along with the outlook for security guarantees. Let's bring in Bloomberg's Oliver Crook for more on this. Oliver, of course, also in Miami, discussing alongside the Ukrainians and probably in separate rooms was Kirill Dmitriev, the Russian envoy. Are we getting any closer potentially to a trilateral between these three countries?
That's what the U.S. is putting forward. They're suggesting that they could set up a meeting between the Ukrainians, the Americans, and the Russians in order to advance those sort of discussions, trying to get that sort of deal fast-tracked, as the Trump administration has made very clear what they would like. Whether or not we've actually reached that point, I think, is another question. I suspect we're not quite there yet. That being said, a lot of these discussions have gone underground ever since we got that initial 28-point plan. We don't have as much clarity on what the 20-point plan includes, and this is something that will be closer to the final document. We should say we have not heard a great deal from the Russians over the last couple of weeks. We hear sort of bits and pieces from time to time. We heard that from the Ukrainian, the American side, that the talks this weekend were constructive. There are reports that the Russians were saying that they were not that constructive. So again, it's hard to get a very sort of clear view on where things stand as we look into that sort of Christmas deadline. I think it's fair to say that we're probably not going to have the major breakthrough the Trump administration would like to see by Christmas.
A lot of Europeans watching all of this unfold with interest, what's happening in Miami. And we had the approval of that 90 billion euro loan package, not drawn from those frozen Russian assets. Give us your sense of sort of how Europeans are looking at this process, not a trilateral one yet, kind of happening in this kind of dual bilateral fashion, what they're thinking as it's unfolding and sort of their level of engagement in the process, if any.
They would like to be very engaged in the process, and it's a good sign that they have at least emissaries that are kind of there in the sidelines. We don't know how actively involved they are in those discussions, but there was a time not so long ago, David, when they were just not even in the room, weren't even being thought about. Now when they're bringing this 90 billion euros to the negotiating table in the form of that sort of joint debt-backed loan, and we can talk a little bit about that because there's a lot of interesting discussions to have around there that sort of snuck in on Friday. They are at least a sort of person that is at the table. We know that the United States administration, the Trump administration, has put a lot of pressure on Europe not to seize those Russian assets. It's hard to know if that was part of the thinking as to why they didn't move on it, how much of it was intimidation from the Russian side and all these sort of claims and these threats that the Russians were making about certain legal actions they could take on Euroclear and other European nations. But we went into that meeting on Friday hearing from the Chancellor of Germany, who's really supposed to be one of the most influential people in the room, saying that we are going to seize these assets. There is no plan B, and we got a very different plan coming out of it about 18 hours later after all of those negotiations.
Oliver, a senior Russian general was killed